Price even retested off of it here. We can see on the 5-minute, we had one of these candles here. Okay, price retested off of it. I believe we're definitely going to go ahead and try and fill up to the next area of resistance at the very top here. Okay. So very extremely easy here. Okay, this is going to be like a day trading setup where we're holding these trades for like a couple of days. Okay, we're still going to buy like weeks, months out just for the contract and just in case. Well, a lot of the times these will hit take profit within a couple of days or weeks. Okay. So indicators, we're going to start off with the market open maker, okay? And we're just focusing on these 930 levels, okay? That's what really we're going to be focusing on. So got a 930 level right here. Okay, another one right here. And one up here, if I'm not mistaken. One down here. Okay, so all of these levels here are going to be 930 levels. Right here. And right here. Okay, then I can go to my 4-hour time frame. Okay. And that's why we lock the lines. But if I wanted to, I could definitely wait for price to pull back to any one of these levels, okay? And see if price can go ahead and give me a buy entry. Okay, so I just look below current price. Okay, set all the 930 entries that I saw. Okay, and if I see price come to this level, give me a bounce up. Okay, that'll potentially be a valid entry. Okay, same thing with this entry here. Could potentially be valid. Same thing down here, could potentially be valid. Okay, and if you get a 4-hour close and a sweep up from these areas, then that's definitely going to go ahead and be that. Okay, so just be aware before you just instantly buy. Don't just buy the first wick. Okay, make sure you take your time. Be like, okay, I know what I'm doing. I know what I'm buying. I know what I'm looking at. Okay, so your 930 levels are really going to show you everything that you need to see. Okay, so let's go for another 930 example here. And this is really going to help you trade with the trend, whether it is a pullback scenario or an above current price scenario. Okay, so let's take this stock for example here, bam. So I'll go to my 30-minute time frame, look above current price. And let me go ahead and just start marking out areas where I see 930 reactions. So I'm gonna take my line here and mark it at the 930 reaction here too. I'm gonna put one above current price at this 930 level here, and this one up here as well. Okay, as well as this 930 up here. Okay, all the reactions I'm gonna go ahead and put in, just so we know where price is heavily reacting off of the most, as these are gonna be the highest volume levels, and volume is gonna be the amount of people that are trading. Okay, so when 930, which is when the stock market opens, okay, hits, the bell rings, people are going to be frantic, okay, putting in trades and stuff like that. Everyone's excited. So wherever market decides to open up from these levels are going to be really important. So that's a really good way to find the best pullback levels, see how price wants to react. Okay, so just going from left to right, okay, even checking out this area here at 930, for example. Okay, if I wanted to, from there, I could easily go to like my 15-minute or 5-minute time frame. Okay, wait for price to break and retest from any of these levels above. Yeah. Okay, so if I see break and retest on any of these levels, I can easily go ahead and take the trade from these 930 levels. Okay. Resistance right here, 930 resistance up here, 930 right here, 930 right here. That's going to show you where the best levels are. It's going to be extreme cheat code. It's going to make it simple. Let's go over another example here. All right, we have MDLZ. So let me go to my 30. Okay. And just check it out. Okay. Ideally, I like to start off with my daily too. Make sure I see the full price action. So I can see a super low was created at the bottom down here. I can see price wants to try and meet this resistance up here that came in July. Okay, so I'm going to go to my 4-hour too, see everything from closer perspective. And the resistance up here. Okay, sometimes the daily can not show you everything you see. And then let me go to my 30-minute time frame, and we can go ahead and find pullback levels or price levels above current price in order to trade like a direction flow. Okay, so right here, it's gonna be a pullback level there. Okay, wherever these green lines are on my screen is gonna be exactly where markets decide to open up. So we have a level here, got a level here. Okay, as we can see, the 930 levels are correlating with each other. We got one here, and then this one is gonna line up with this one. Okay, and then this one is gonna line up with this one. Okay, so it's always gonna line up for the most part too. The more taps that you see in a certain area, the more powerful of an area it is that you should be playing there. Okay, even 930 area right here, 930 area right here. Okay. Finding the key levels here, taking our time. Okay, and that's all below current price. Okay, so as price goes into price, if I see price pull back to any of these levels, give me a 4-hour close, then I'm gonna be cool to go ahead and take it. That's the whole sweep back up. Okay, if it breaks this level, it's okay. You could try this one. If it breaks this one, that's fine. You could try this one. Okay, as soon as you get your 4-hour close though, you know you're gonna be good to go ahead and kiss the sweep, inshallah. And above current price too. So it's going to be trading with the trend. It's going to be a simple way to make profit as well too. Okay. So you can get on your 30-minute time frame, look for areas of resistance. For example, if I'm taking it long above current price, can wait for it to get above current price and take this area of resistance right here and turn it to support and just take it back up, okay, from the original breakout. So you don't have to take the original breakout. You can let price break out, do its thing. Wherever the breakout closes from, price has a chance to retrace, turn the resistance to support. If it does that, you get a 4-hour close, go ahead and get in. And that's a good trade as well, trading with the trend. It's very safe. So let me see here. You can get in here too. And you can get in up here. Okay. So any of these levels of resistance or even support above current price are going to be good levels to go ahead and look for a break and retest. Okay. So even levels of support can go ahead and be mirrored too. So even if price were to go up past this level of support, okay, it can kind of inverse retest and mirror that level of support and go up too. Okay. So that's also going to be part of the breakout model. Okay. And certain things with high liquidity are going to have a little cleaner levels, okay, compared to smaller stocks, but even smaller stocks, you're still going to be able to find good trades. Okay. So for instance, a price break and retest here, you take it up to the next level up here. You could just keep going, doing all your levels and just playing your chart like a staircase. So that's pretty much all it is. It's just a big giant staircase. We'll check out Wells Fargo, for example. Hop on my daily. I can see that we're all-time highs. We can't touch this. Okay, there's nothing we can do here. Okay, personally, right now. Okay, we can't trade a resistance breakout. It's at all-time highs. So what we have to do is wait for price to come back down so we can buy it back up. So here's how to find the pullback level. So now that I see the data on my daily, I see what's going on. Let me go down to my 30-minute. So I'm on my 30-minute time frame. And I'm going to look below current price logically. I want price to touch one of the levels below current price and sweep back up. Okay. So that's going to be the goal and objective. So let me go ahead and get the line tool here. Okay. And I can go ahead and put the prices down at the 930 doubles. So let me go ahead and put a line price here, line price here, down here. And I can go ahead and see the prices of the lines completely to the far right in black. Okay, so if price comes down to any of these levels, gives me a 4-hour close and bounce, I'm gonna be good, inshallah. Okay. It's about taking the right trades, okay, taking informed trades. Okay, this is gonna be a low right here too. Okay, and you can see some of these lows are going to mirror each other. Okay, this low is matched with another low over here to the right. Okay, and then we have this resistance up here too, which matters. Okay, and then down here, boom, area of support down there too. Have another one too. Okay, just mark out your clean levels. Okay, you don't gotta make it difficult. Just play what needs to be played. Okay, so if price comes down to any of these levels, it gives me a 4-hour close. I'm not gonna play the first tap. Okay, if price comes down to any of these levels, gives me a 4-hour close, I'm gonna be good to go ahead and take the pull back up. Okay, confidently. Okay, these are 930 levels where market wants to open up at. Okay, and just burst in an upwards direction a lot of the times. So a lot of the times market will mirror what it's done in the past. So it could definitely do it again for sure. So we'll go over PayPal here. I'll start off on my daily time frame, get the bigger picture. I can see price made this low right here. I can see price at least wants to come test this resistance area up here. Okay, so I'll get on my 30-minute time frame. Okay, and I'll look for a pullback area to see if we can go ahead and catch it back up to this area of resistance right here. So we get on my 15-minute or my 30. I'll do the 15 for this example. Yeah, and I'm gonna go ahead and look at the key areas. Okay, I have this area right here. 930, it's clean. Keep finding the best areas, all I'm focused on. Okay, right here. That's the ultimate low that was created. Okay. You can also lock your lines too if you notice your lines moving too much. Okay, up here, price decided to short downward. Even up here. Shorted downward. Okay, and as you can see, a lot of these are just correlating. A lot of these lines of levels are correlating with each other. Yeah, a lot of these 930 levels are going to be solid. Yeah, we can definitely trust a lot of these levels for sure. Okay, so that's going to go ahead and be PayPal. So I can go ahead and see this area here, this area of resistance clearly above me. Okay, I can wait for price to either break here, retest off of this area, or I can try this area up here. Okay. Or if it doesn't work here, I could try this area here. So it's all about patience. Like, you can win the trade if you truly want to. It's just about waiting to see, like, okay, will my trade do what I need it to do? Okay, and even for a pullback level, if I see price try to dump down to here, okay, turn this area of support into resistance and then fall down, which it could potentially do, and meet up with this low, then that's going to be in probability too. So bread is everywhere. Bread is all over the place. It's just depending on how patient you want to be, what type of setups you take. And just because there's bread everywhere doesn't mean you should be taking a short and then taking a long and then taking a short and then taking a long. Like, your trade frequency and how much money exposure you have in the market is going to depict like how profitable you are really. So it's like, yeah, you can see everything, but just take the trades as data. So yeah, if you see a profitable trade, you can either take it as data or take it. But if you take it, I advise you stick to that model. Okay, so if this is break and retest and you're a break and retest trader, you see support getting broken, turn into resistance, then okay, it could be potentially a decent trade down to the next level. Okay, but if you're a breakout trader, this is something that might not work out for you, okay, depending on certain situations and your criteria, for example. Okay, but you do have a 4-hour close underneath the level, so even a breakout trader here would potentially be able to take this too. Okay, so focus on your criteria, focus how you trade. Okay, and it's not always going to work on all markets. Like, Forex made shorting really popular because the chart is a lot more sideways. But when it comes to stocks and crypto, stock pretty much just goes up in straight line over the years, okay, in the long-term scenario. So it's a lot different, but both the technicals and all technicals work on all charts. So that's the cool thing. So once you learn once, you can apply it to any market that you understand or want to get into. So we'll talk about Cisco here. Okay, we'll restart from scratch. So Cisco here, I can easily just see, okay. So I know on the stock market too, price is trying to go in an upwards direction, and crypto, because people are working hard to increase the value of their company or make cryptocurrency more useful, whether it be just innovating new technologies or etc. Okay, so they want their value and their shares to go up, so they get paid more on dividends and stuff like that, and share exits. So even the normal workers, like for Nvidia, for example, a lot of people who just worked in Nvidia past 10 years just became millionaires because they were able to retire early because the company blew up. Okay, so if you work for a company and it blows up and they give you shares, it's going to be a really good way to retire early. So it's showing you that trading is going to be a really quick way if you want to retire early, as long as you invest your money correctly, you get in at certain lows, and you invest into the future. Okay. So know that price is always going to try and chase resistances for the most part. Always, always, always. Okay, because it's trying to break out into new highs. Okay, people are trying to get paid more for their shares, so price is trying to chase new highs. Okay, and the richest traders are going to be the U.S. stock market traders, so it's one of the most important markets. Okay, so price is always chasing higher resistances. Always. Okay, it's always looking to break into new all-time highs for the most part. No company wants their stock to be going down. It's not beneficial for them. Okay. So I'm going to go ahead and start off my 30-minute here. I'll go my 15 here, and I'll look below current price and above. We'll do both. Okay. So for this candle here, it's 9:30 candle. I'll put go and delete everything. Put this level here. Get back on my daily. You can see price wants to at least come up here. So price is always going to be hunting either an area of resistance above current price, or if an area of resistance is too far, like all the way up here, okay, it's still going to be aiming for all-time highs ultimately. But depending on your expiration dates and something like that, okay, then closing in an area of support above current price is going to be solid too, because we know that just like we saw, support can be broken and turned into support. So put everything logically, put it together like a puzzle piece. So if I get on my 15-minute here, let's see the structure and everything closely. You can see price wants to bounce from this low here. Okay. Price bounce from this low here. Price bounce from this low here. All I got to do is focus on 9:30 levels. I don't really have to focus on anything else. Okay, as far as the stock market. Okay. And this level too. Okay. And then a lot of these levels too are going to be related to each other. So a lot of the times you'll see a lot of levels working at the same areas over and over again. Okay. And right here. All right, boom. So let's say we have all these levels, for example, okay, that I think are going to be solid, good levels. Okay. And this level here. Okay, let's say I go to the far right on Cisco. Okay, I can go ahead and just see certain things. Okay. So I know that price is trying to at least chase this resistance up here. I can go to my 30-minute and see everything cleanly. Okay, I can just wait for either a pullback or resistance breakout how I want. Okay, I can see at this level I already got a pullback. So price decided to fall all the way down, come up, and then pull back to this level right here. Okay, and we just did all the 9:30 levels. Okay, then it's not okay. This level is important. So if I wanted to, really, I could delete this one. And because we have all the data to the left verifying that this low is valid, okay, and I have a 4-hour close verifying that the pullback is valid, I can easily go ahead and take this up to the next area, like up here, for example, okay, and see if this area up here wants to turn it into resistance. Okay, so you can use certain different scenarios to make bread, just about thinking how logically you want to play. Okay, it's a big puzzle piece, and if you play logically, there's going to be money everywhere, okay, which is why people just make money by just buying and holding. Okay, it truly can be that simple. So let me check out here. Okay. Even right here on Pfizer, okay, I expect price to come up to this area of resistance up here. Okay. I'm sure I could go to the left and find some good levels. That's why price wants to react the way it does. So we have a low right here. I have one right here. We have another one down here. Okay, go ahead and go to my current price. Okay. So I know if price pulls back to any of these black lines, it's going to be effective for me to go ahead and get in at those positions. 930 low right here too. Okay. The further we go back, the more data we're going to collect. See if everything that we're doing makes sense and correlates. Got one up here. Got one here. All right, and then we go ahead and go to my current price. And guess what? So you can see here that this line that I just went ahead and drew from all the way to the left correlates. Okay, so correlates with this line right here, verifying this low with a push up here. Okay, so on Pfizer here, this trade goes ahead and makes sense too. Okay, you can easily go ahead and potentially take it up to the next black line up here. Okay, so many different ways you can go ahead and take a trade. Okay, many different formations, and it's just going to depend on what way you're looking at the market and how you want to take your setups. Okay, so let me take you through another example here. So let me go ahead and pull up a high liquidity stock. Will go over NVIDIA, for example. Let me start off on my daily. Okay, logically thinking, I know that the stock market wants to go up, so my take profit is going to be these all-time highs up here, for example. Okay, let me go to my 15-minute time frame. And let me go ahead and start marking my levels. So I'll do levels below current price and above current price. So I got support below current price right here. And you can see which direction these 930 candles are moving in by just seeing how the flow works. So if you clearly see a top resistance wick and then price falling down, then you know price reacted off of the top resistance wick here, not the bottom. Okay, so just check out the flow. You can easily see which direction the price is moving in. Okay, we got a 930 level here. Got one up here. We got one up here. And let's say we got one here. Okay. It's precision scrolling. And it's taking our time on these setups. Okay. 930 resistance right there too. 930 support. Price shorted down from here, 930 support here. Okay, and you see everything correlating as well too. 930 support here too. Then we got some down here. Okay, and then once you have your levels, you're good. Okay, you have your data here. You know how to play your reactions. You know what you're looking for. You're not going to be playing without any data or information on your screen. You know exactly what you're going to be looking for. So let's say price decided to go in upwards direction here. Price went up right here. And then we got right here too. And these are going to be all the best levels. Anything with the 930 reaction is going to be the best level supply. Okay, let's say we stop there. So I can go to my 4-hour time frame here, just analyze everything. Okay, I can still see that price wants to go ahead and try and at least touch the black line all the way up here. Okay, and as we can see, we got price shorting at this black line here, but we do have a pullback at this level here that did work. So if price pulls back, holds this level here, could potentially be good. Okay, take this up, point there. Okay, maybe break and retest here, potentially break and retest here. Okay, or price can potentially short from these areas too. Okay, resistance mirrors, and these are going to be just the cleanest levels to play a lot of the times. So it's about taking your time, analyzing what works, analyzing the cleanest levels, and playing with potentially just needs to be played. Okay, so even right here, we have this area of resistance. So right here. Okay, so yeah, price reacting with this area of resistance too. So break and retest can happen at any of these areas. Okay, and a lot of these areas are going to be about 1 point per. Okay, so it's going to be good money even if you day trade just these small zones in between. Okay, so break and retest, they should work all between these areas, and it's going to be an easier way to just catch your day trade flow. Okay, so if you want to make some money multiple times during the week, okay, just boot up your account, mark out all your levels, and then you can catch your flow. Okay, be responsible with your trades. Okay, and be ready to just close relatively quickly. You can't really cook your trades like this, especially when you're trading on a smaller time frame basis. So even right here, let me go ahead and do all the levels. Starting off on Walmart here, get on my daily. Okay. This price actually already hit all-time highs here. So let's find a pullback level. Okay. That's good. So we know that price wants to at least touch this resistance up here. Okay. So let's find a pullback level below current price. So let me get on my 15-minute time frame. Just pay attention to the dotted line here. Okay, and I'm looking at all levels below current price. So we got this level down here, 930. Got some 930 support down here. Some more 930 support here. Got down here. Just about marking the best levels that we can find here. One right here. Got one right here. Down here. Okay. This is the bottom wick because price is going up. This is the top wick because you can see price going down afterward. Okay, read the flow. That's how you can determine what candlestick it is. And sometimes it can be easier to detect than others, but for the most part, you're going to be able to get it. In here. Okay. Zooming out. Then we got this area here too. Okay. So just finding the best areas below current price. Waiting for price to give us a 4-hour close and pull back to these areas. This area down here still. And up here. Here. Okay. And now you have the cleanest levels. Okay, so you can see here in Walmart, if I get on my 4-hour time frame, you can see all the areas where price wants to dip down to. Okay, so if price comes down to any of these areas below current price, it gives me a 4-hour close, I'm going to be good. Okay, I can clearly see that price wants to short down to this level here too. So even if I wanted to take a short, I can clearly see that price wants to short down to this level here on the black. Okay. It's already more than halfway done, and yeah, price definitely wants to make its way here. Okay. And then after price gets here, if it decides to want to bounce here, it's going to be another question. Okay. If it decides to break this level, even after a small bounce, that's fine. You try this level. Try this one. Okay, try this one. Okay, you'll know the pullback area as long as you have your levels down. Then you can go ahead and buy months out, buy some years out, catch the whole sweep back up. Okay, that's going to be a lot more profitable than just catching a tiny burst move. Okay, you know exactly where you're trying to buy. Go grind real life, stay down. Okay, keep grinding bread, keep putting that bread away, and then when the play comes, you can catch the whole move, you can buy the contract that you want, and your money's going to be able to 10x. Okay. So once you have your levels here, just be grateful for bear markets too. If markets ever dipping down, have all your levels placed down. Okay, especially on the stock market, you can take serious advantage of the 930 manipulation, and you can see the best levels. And go ahead and buy certain amount of shares or buy months out or years out for options and stuff like that, and just let your bread make bread. Okay, catch the whole sweeps back up. So this is going to be one of the best ways to do it and to see which levels are going to be clean to play to the downside. Okay, so if price is going to the downside and you're like, okay, where's the bottom? So these are going to be potential bottoms, and wait for your 4-hour close. Don't buy on the first wick. Buying on the first wick can really get you destroyed and you might get irritated. Okay, so just don't get irritated and stick to a plan that's logical. So even for Apple here, I can see it bursting all the way up. Even if I wanted to take a pullback trade, okay, I could easily go ahead and do something like this. Mark this level here, this one here, this one here, this one here. Okay, and all the data is going to be here for us. Okay, literally all the data is here for us. Everything that we need. Okay, 930 level right here too. Another one right here. All the information that we need. Every ounce of it on the screen. Okay, all the levels that we need right here. Price decided to bounce upward. Okay, sometimes price is going to go ahead and mirror certain transactions. Okay, price decided to short from here twice. Okay, so resistance once and then resistance twice. So sometimes 930 is just going to mirror level that happened to the left. Okay, right here, price decided to bounce upward. Price decided to short. Actually, no, price decided to long. Okay, it's about just being precise with what we're looking at right here and then right here. Yeah, a lot of times if there's a lot of lines in one area too, that area could be potential good zone as well too. Okay, potentially right here. Potentially right here. Okay, right here. Okay, so cool. Yeah, these are going to be just the cleanest levels I can find here. So then from there, I'm going to be able to go to my 4-hour time frame. Okay, and I can look below current price. Okay, if I see price pull back to any of these levels and give me a 4-hour pullback, then I know, okay, inshallah, I'm going to go ahead and be able to get in and catch the whole sweep back up. Okay, so I'm only looking at 930 levels personally, waiting for pullbacks and catching the whole sweep back up. Okay, so that's how you trade if you see something bursting up. Okay, and don't buy things when they're overextended. Okay, wait for price to come back to these levels and catch it back up. Promise you it's going to be a lot more worth it on your risk reward and on your P&L. Okay.
Investing, trading, all of it is forever, guys. So I want you guys to think about plants for an example. What do plants need? Water, sun, good soil, consistency, 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 and you'll get the plant that you want, whether it be a beautiful rose bush, a giant oak tree, a blueberry bush, whatever you want. It comes through consistency. Investing is forever. It's forever. Don't think you're going to hop in this game, run up a couple of bands, and then hop out. That's for the quitters. Investing is forever. When you guys hop into this journey, when you guys start hopping on these charts have been around since before I've been alive. I'm 22 years old right now. And before I've been alive, people were trading Forex. People were trading certain stocks, etc. And I assume, inshallah, if God wills, that after I'm gone, people will probably still be trading the markets if the world is still going and flowing. So investing is forever. Don't think so quick, so instantaneously, so fast. When I was a day trader, I got consistent. It took me some time, lots of failure in the beginning, and that's why I thank God I'm able to come on here and coach. I'm so passionate about it, and I'm thankful I get to make some money in the process. Of course, I'm here to be fully transparent. Yes, I make money in the process coaching. Yes, I make money selling my trades, but I'm also really, really humble to the fact that I get to help another person learn a skill so they can feed their families, so they can help somebody, so they can pay their bills on time. So yes, I get to thank God, all due to God. Without God, I'm nothing personally. So thank God. Thanks to doing this, I get to coach you guys, make some money in the process. But I also want you guys to avoid a lot of hardship that I've gone through. And one of my students on a call that I was just on the other day, actually really told me that. Well, he laughed. He was like, I'm thankful you went through it. And I'm like, I'm thankful too. Like, for real. Like, it sucked going through it at the time. But now being able to tell you guys certain things like, hey, you might not want to get in at all-time highs right now because you're probably going to get dumped down on. So being able to tell you guys little tidbits and stuff like that, or, hey, market's dumping right now. You might not want to be in along. Let's wait till buyers step in. Being able to analyze certain emotional factors based off of anxiety, rushing. And I understand why people want to get in and rush trades. You're trying to touch some money on. You're trying to touch some money on. I'm trying to touch some money on. We're all trying to touch some money on. Okay? You're not alone. You are not alone. I promise you, you are not alone. You're trying to touch some money on. I understand. But in order to touch some money on, one, we got to pray to God so we can be healthy, okay, mentally and physically, so we can even think, so we can get some money on. So be humble to God. Really, really, really important factor. No matter how much money you start touching, stay humble to God. Don't change your ways. Don't change your ways as a person. Don't start treating people badly. Don't start disrespecting people. Even if they hurt your feelings, break your heart, whatever, there's no need to disrespect people. You know, I'm not perfect. There's times I've definitely made mistakes, but don't let the money change you even when you do start touching that big bag, because it is easy to start thinking, well, you know, whoop-de-whoop, or I'm better than people, or why aren't people doing X, Y, and Z? And everyone's going to live their own life, but if you want your network to be full of grinders, full of investors, full of people who care about taking care of their families, stay around that. Don't try and change your whole life, start investing, and think you can hang around the same people. Because I'm telling you, it's going to be frustrating. Okay, and when you start changing and leveling up mentally, you don't want to be disconnected while you're there presently trying to enjoy yourself, but you're not going to be on the same mental space. Instead of you guys going to McDonald's, you're going to think, well, I got food at home. Why not just buy some Bitcoin or some shares? Why not buy this options play? Why not load up a futures account? You know what I'm saying? Your mindset changes when you start investing. So the people around you, if they're not on the same wavelength and journey, it will and it can frustrate you. But don't let it get to the point where you just start disrespecting people. But yeah, like, don't, like, you know what I'm saying? Sometimes people are broken spirited. Like, if people are broke, they're broke spirited. Like, for real. That's really what I think. Because it's not even about money. It's just, you're waking up every day. And I think it's just abusing the body that God has gifted us with. Because how are you not waking up every day and grinding? How are you not putting some money away for your family so they can eat? So how are you not trying to get a bigger home for your family and a safer home for your family so they can live in a better environment? You know what I'm saying? So I do understand the frustrations, but if you're an investor, if you're a hustler, you're a grinder, and you're ready to change your whole life around, your whole life is going to change. You're going to be a really consistent person, okay, inshallah, especially when you start praying every day. Working out Monday through Friday, 5 days a week is a really, really good way to build consistency, let off a lot of stress, and really just stay mentally focused. And investing constantly. As soon as you get some money, buy some shares. As soon as you get some money, buy some crypto. As soon as you get some money, buy an options play or whatever that you planned out. Boot up your account. Okay? Do what you need to do. Try not to waste your money on prop firm, because ownership is really the main priority. You can sell your shares whenever and put it right back in your bank account. Prop firm, they have little parameters that are set up for you to fail, because prop firms only make money when you buy a challenge. So of course, they're going to make things very difficult and hard for you so you fail. On the other hand, we're going to go ahead and have your actual live account. You can pull out your money whenever, whether it be your crypto, shares, futures, whatever. You can just pull out your money. Okay? You can pull out your money whenever. So, think about it. Ownership. Ownership is the reason why you want to trade. Okay, you don't want to just have money to have money. You want to throw your money into the asset river so you can have ownership, so you can have more houses, so you can own more percentage of a company or an ETF, so you can get paid more dividends maybe one day. Okay, you want to have more ownership of more Bitcoin. So when Bitcoin goes extinct, Bitcoin is not infinite, if you didn't know that. And when Bitcoin goes away, you're going to have Bitcoin. Ownership is what we're investing and trading for. Okay? Ownership. Think about it, guys. Okay? You have money just chilling in your savings account. Why? What is that doing for you? Ask yourself, if you have money sitting in the savings account right now, what is that doing for you? Or your checking account. Why is it there? Because once I turned on my brain, I personally try and just live off of the credit card. Okay? All money goes into assets, and then take the money out, pay off the credit card with the assets or income that's flowing in, pay off the credit card. And when tax time comes, take money out the assets, pay your taxes. Why is money sitting in your checking account when houses get more expensive year after year after year after year? When food costs more year after year after year after year after year? There's no more dollar menu at like McDonald's and stuff. Okay? Not everywhere. Prices fluctuate per city. Because of why? Inflation. So why is your money just sitting around? People like to complain. Stuff is just getting more expensive every year. Do something about it. See, and that's broke to me. It's not even about money. It's just don't hang around complainers. Investing is forever, so you're the one who's going to do something about it. Inshallah, you're the one who's going to take care of your family. If you're watching this right now, you're the one. Okay? And you can't fail. Inshallah, you got to keep going until you die. Don't stop. Don't let any relationships affect your mental. Don't let any people around you affect your mental. Don't let any loss of any funds affect your mental. Okay, stay focused on God and stay strong, because this journey is going to be a long one. You're setting up right now to be the provider, whether it be for yourself or your family or your loved ones. If you're investing, you're probably doing it to give your family or yourself a better life. So be ready to be a provider. There's going to be days where it's going to be frustrating. It's going to be days where you're going to check your P&L. It's going to be red. It's going to be days where you're not going to be making some money. And that's okay, because it's forever. It's about staying consistent. It's about staying resilient. It's about coming back every single day and not giving up, no matter what. Because I'm telling you, whoever doesn't give up wins. The people who stop, the people who quit, the people who think it's a scam, the people who don't have self-control, who don't pray to God, okay, all going to be failures. All going to be failures. Because until I started praying to God, that's when I started winning. As soon as I started praying to God, I started winning. Okay? Until I started praying to God, like, I just wasn't winning. Okay? But then as soon as I started praying, started winning. Started getting healthy. Was able to lose 100 pounds in 8 months. I just privated the short just because it has some explicit pictures. I don't think it's very, halal content. But yeah, I'll stuck for Allah. I don't want to be showing myself like that on the internet. Also, watch how you guys present yourself too. When you guys start running up money, because whoever's watching this right now, I know you guys will go far, inshallah. So if you're watching this right now, watch how you present yourself too. Watch how you present yourself on the internet. Don't just be out here balling and flexing on everybody. Motivate. Motivate. Okay, because we're all on this earth for a reason. So whatever keeps you going on this earth, do that. And try and inspire the next person so we can all just be happy on this planet. All right, because that's really what it's about. Yes, we're here to get some money, but I'm telling you, investing is forever. The big plays will come as long as you stay consistent, you stay focused, you keep taking the same type of setups, you keep putting the same money away. I don't care if you have $1 million in shares, $1 million in Bitcoin. As soon as you get $20, if you put $15 into it, that mindset is the reason why you got to that $1 million. Keep stacking it up. Don't get that big ticket and then blow it and then go back to zero. Don't do that. That's something I had to learn from. Okay? Run it up. Stay consistent. Stay prayed up. Keep your mental straight and keep what you got. Don't lose what you got. Whether it be relationships, whether it be your money, whether it be your plays, don't lose what you got. Don't lose what you got. Okay? I love you guys so much. Head over to Stackmode.net for all trading education. Stay prayed up to God. Keep grinding. Free ebook and course there too. If you guys want to check that out for free. You guys can book a call with me for the first time for free. Let's break down whatever you're going through. Let's break down an investment plan for you. I want to get you guys focused. I want to get you guys set up with a full financial parameter and a full financial system so you can be successful in this world, inshallah. Because stuff is only getting more expensive and they don't want you to suffer. Love you guys, for real. Peace. After you've been grinding for years, really busting your tail, you want your money to work harder than you do. And dividend investing might be the easiest way to build passive income, but most beginners overthink it. But dividend investing is really simple. You just buy shares of strong, established companies, and they pay you cash just for holding them. And that's it. So imagine waking up to deposits monthly, weekly, and certain dividends pay out in different ratios and frequencies, and they hit your account while you sleep. That's the power of dividends. Let's go and let's jump into it. Let's understand what dividend investing is and how you guys can start building some passive income for you and your families, inshallah. Let's talk about dividend investing. Making our money work for us is going to be the most ample way to, one, get our mental health back. Okay, I understand we're grinding hard, working year after year after year after year, but let's at least make our money make us some money. Okay, we're not just grinding. Okay, no more exchanging time for money. Okay, it's time to start exchanging money for money. Okay, this way you guys are going to be a lot mentally healthier. You guys are going to have time to get closer to God, work on your family relationships, work on yourself, work on your business, and understand that when you have your money flowing within that asset river constantly, you're using your cash and buying more assets with it, and it's flowing in the river, flowing in the river, you could pretty much never work again. Okay, so when people talk about passive income, retiring, it's about putting your money within that income river. Let's go and let's talk about how to make our money work for us, inshallah. So what is a dividend in the first place? A dividend is going to pretty much be a thank you payment, okay? And they pretty much just tell you, hey, you've been investing in us for a long time. You've been believing in us. And I'm going to go ahead and give you some money back because we've been crushing it on the company side. So a dividend is a thank you payment, okay? So whenever you invest into a company that pays out dividends, or you're invested into an exchange trader fund, okay, which is a compilation of companies just put into one big giant fund, then you could also get dividend payments from there if the fund pays it out. Okay, so let's say, imagine you lend money to a friend, right, to start their lemonade stand. Okay, you believe in them, you think it's going to turn up, and every month they start giving you $10 from the profits as a thank you because he started turning up, started making tons of money. Okay, so that friend who started the lemonade stand decided to give you a portion of the income because since you gave him that initial investment to believe in him, okay, and you funded his company, he did the right thing and gave you some profits back because you had his back and you believed in him. And that's what a dividend payment is. When you believe in these companies, when you believe in these ETFs, then we're able to get some profit back, inshallah. And that's a dividend. It's real cash paid to you just for owning a piece of the company, okay? And it's passive.
Okay, you don't got to do no work for this money. All you got to do is buy. Okay, all you're doing is turning money into more money. Okay, dividends is going to be one of the most extreme forms of passive income, especially after you guys have grinded out 6 to 7 figures. Okay, being able to plant that 6 to 7 figures into some dividends and get paid $5,000 to $25,000 a month just for having your money parked is going to be a really, really good way to just chill in life. Okay, and it could be regularly. Okay, it's usually paid every 3 months. Okay, so quarterly, and it's very, very safe. So usually only strong, profitable companies pay them. Okay, it's not a lot of broke companies paying out dividends because they can't afford it. Okay, a lot of companies paying out dividends are companies that have it all based out. They know that you investing into the stock market, okay, is going to go ahead and give them more income. They're then going to be able to turn that income into bigger buildings, hire better and more employees, okay, which should lead to them making more income. Okay, better products, faster products being made, etc. So that way their income can skyrocket. Okay, and when that happens, we benefit from it too. And a lot of the times too, dividend payments, okay, have certain dates set to them. Okay, sometimes you get dividend payments monthly, sometimes you get dividend payments quarterly, a few times a year. Okay, and every single company and ETF is going to have its own different dividend payment cycle. So before you invest into something, make sure you're doing your research. So here's an example, okay, just one more time to make sure we understand it. Let's say you own 1 share of Apple, okay. For 1 share of Apple, Apple pays you 24 cents, okay. You can check your phone, okay, and that money is sitting in your account, chilling, okay. You didn't have to sell the stock to get it, okay. All you have to do is just have your money chilling in stocks. So you get paid for turning your assets into more assets, okay. So after all the day trading is done, after grinding your business hard for years, after grinding corporate hard for years, take that money and you guys can easily park it into some dividends and start getting yourself some monthly cash flow, okay. Put some mental health back into yourself and take some of your money and let's try and get some passive income from the money we already have and we've been working hard for. Let's go to the next slide. So let's go and let's talk about the dividend yield. So the dividend yield tells you the return on your money right now, okay? And it's kind of like the interest rate number on your savings account, okay? So as you know, for APY accounts, okay, interest though, you know, is a reason why God says not to do it. It's not something that'll leave you profitable in the end anyways, okay? So focus on things outside of interest. But let's say annual percentage yield, let's say there's an account that would give you like 3% per year, okay? With inflation and taxes though, that's not anything, okay? So when you're focusing on dividends though, something like that, okay, then you're going to be able to get a lot better bang for your buck and for your value, okay? So average yield, right? Around a 2 to 5% average yield is going to be healthy, okay? And a red flag, if the average yield is over 8%, okay, be careful, okay? It might be a trap and the company could fall off later, even if they're paying out big dividend payments right now, okay? You want to try and have your dividend payments be as consistent as possible, okay? You don't want your dividend payments to go down, okay? If you're getting 5K a month for the money you have invested, that's how much you want to be getting, okay? You don't want it to go down to 3K one month and then your bills and calculations are all thrown off. You don't want it to happen. It can be really, really frustrating, okay? So let's do the math. So let's say the stock price of something is going to be $100, okay? And then they pay you $4 per year, okay? So the yield, okay, is 4, since they're paying you $4 a year, divided by 100, okay, and that's the stock price, and that's going to equal a 4% return, okay, and that's how the dividend yield is going to go ahead and be broken down. Let's go over to the next slide. So is it safe, right? The payout ratio. So let's talk about the pizza analogy. So think of a company's total profits as a whole pizza, okay, and the payout ratio, it's how many slices they decide to give you, okay, and that's going to go ahead and be exemplary for the shareholders versus how many they keep to grow the business, okay? So how many slices of pizza are they going to give to you, and then how many slices of pizza are they going to try and hold on to, okay? And safe, okay? So under 60%, okay? If they give you 6 slices and they keep 4, okay, that's safe, okay? That's safe. Why? Because they were able to pay you a little piece of the pie, okay? Make sure you eat and make sure they eat too, okay? Because they got to be logical. They can't feed you if they're not feeding themselves, okay? So they be logical. So, but it can be dangerous if they're giving away over 90% of their pizza. If they're giving away their whole pizza every single time, then they're going to have no food left over for tomorrow. Okay, so you have to watch and look at the payout ratio percentages. Okay, so let's say company A, right? Let's say it earned $10. Okay, and then they give you $2. Okay, they would have $8 left. Okay, and that's going to be pretty safe. Now, let's say company B, right? Let's say they also earn $10. Okay, and let's say company B paid you 9.99. Okay, they paid you $9.99. Okay, they would be left with 1 penny left. Okay, what type of investments or growth can they do then? Okay, so focusing on the payout ratio of the dividend you're looking at is going to be extremely imperative to making sure that you're not making any random decisions unnecessarily. Okay, focus on companies with safe payout ratios, because that way you can see that they have their math baked in for consistent scaling year after year after year after year, not just random sporadic payments being sent out and then they have a possibility of going broke and then there's really going to be no more dividend payments. Okay, so in order to avoid all of that, avoid the hardships, try and focus on dividends and companies and ETFs that pay out very safe ratios so that they don't go broke, so that they can continue to pay out dividends, so you can continue to feed your family and yourself, inshallah. Let's go to the next slide. So let's go and let's break down the snowball effect, okay? The compounding effect, stacking dollars, okay? Get into stack mode, okay? Stay down. I don't care if you got to wear the same clothes every single day, okay? Keep driving that old car, okay? It's not time to get a new car right now. Stack it up, okay? Set some parameters. Tell yourself, you know what? Until I have 100,000 stacked up, I'm not going to get X, Y, and Z. Until I have 1 million stacked up, I'm not going to get X, Y, and Z. All this just takes a couple months and a couple years, okay? You guys got it. Go hard. Go hard. Go hard, because it's really time to automate your wealth, okay? And it's going to be the secret sauce. Instead of spending your dividend cash on coffee or random other things, okay, you can press a button called drip, okay? So what drip is going to do is take your dividend income, okay? So say you're making $100 a month from dividend income, okay? You could take that $100 a month and buy some more dividend shares with that, okay? So that way that $100 a month will turn into $150 a month. You keep doing that, it'll turn into $200 a month, okay? And then it keeps stacking up over time. As long as you're in stack mode, your account will be in stack mode right with you. Just know that, okay? So drip equals dividend reinvestment plan. A lot of brokers have it to where you can automatically just reinvest your dividend income back into more shares, okay? So the computer or whatever broker you're using uses your dividend cash to buy more shares automatically, okay? And next time you'll have more shares, so you get a bigger bag, bigger check. Then that bigger check buys even more shares and it spirals upwards, okay? So trying to have your life together outside of the market, okay? The more you have your life together outside of the market, the more money you'll be able to generate from the market, okay? Just keep cycling your money back into shares, back into more shares, back into more shares, and keep upping that income. So let's say year one, you own 100 shares, okay? You invested super duper heavy. Then by year 10, okay, you own 150 shares, okay? And let's say you didn't even pay for the extra 50 shares. It was just stacking up over time, okay? So once you start planting that seed of ownership, your tree can do nothing but sprout and grow, inshallah. So plant your seed today so you can start sprouting. You guys can start dropping fruit everywhere, okay? But you gotta plant your seed. You cannot start dropping fruit everywhere until you plant your seed, okay? So then from year 30, 20, then from there you're earning a full salary from dividends alone. And then you could chill out, okay? You still have your money parked away in the dividend and you're getting paid for having your money parked away. It's crazy, okay? If you make the right financial decisions, you stay focused on God and you don't feed your flesh, you guys can get out of poverty, okay? You guys can be rich forever. You can never go broke again as long as you maneuver your wealth into that constant asset river. You have to continue to flow your money in that asset river. Otherwise, things can get hard, okay? So throw your money into the river and start flowing so you guys can grow like the big oak tree. Plant all your seeds today. Let's head over to the next slide. So let's jump into royalty stocks, right? Dividend aristocrats. So these are going to be the MVPs of the stock market, okay? And to be on the list, a company must have been in the S&P 500, okay, which is accumulation of like the most powerful stocks, okay, put into one index, okay, known as the S&P 500. And two, okay, they must increase their dividend every year for 25 plus years straight. So if a company is paying, right, 20 cents, per share, okay, in 2010, okay, and then in 2011, let's say they're paying 25 cents per share, okay, that's going to be a 5-cent increase, okay. So if they're increasing their dividend amount every year for 25 years straight, then that's going to be a big MVP. And that means that these companies have survived recessions, wars, bubbles, and still paid their investors more money, which means that a lot of these companies are going to be constant investments due to the fact that it seems like that these companies have become a staple in human lifestyle. Okay, companies such as Coca-Cola, okay, or Johnson & Johnson, the Band-Aid company, for example. Okay, so companies that incorporate into lifestyle, okay, really are going to be the ones that will survive year after year after year. So let's go and let's talk about the risk with everything. Okay, pay attention to that yield trap, just like we talked about on the previous slides. The yield trap is going to be really important to pay attention to. Sometimes you see a stock paying 15%. Okay, you think you're about to be making bands every single month just by investing into a simple dividend. Okay, and they might pay you out for a couple of months. Okay, you might be getting 5K a month payments, for example. Okay, for 3 months, and the next thing you know, they start losing profit. Things start getting shambles, and then boom, and then the high yield decides to stop paying you out what you're used to getting paid out. And if a company runs out of cash, I'm telling you, they're going to cut that dividend to zero. Okay, so just with the pizza analogy, okay, you can't help anybody in the world if you're not helping yourself first. Okay, so if you have a box of pizza, right, there's 10 slices of pizza. Okay, if you give away 6 slices of pizza, okay, you'll still have 4 slices of pizza for yourself. Okay, you can still eat, you're not gonna be starving, and you're gonna be chilling. Okay, but then take person B. Okay, if person B gives away all their pizza, they're gonna have no pizza left over. Okay, and that might seem like a good thing instantly, okay, because they fed everybody and ignored themselves, but that's not. Okay, that'll turn into later frustration, later hunger on that person, regret on that person. Okay, and they're gonna be like, well, you know, people might not have fed me in certain type of ways. Okay, leading into certain type of mindsets. Okay, so even in dividends, it tells us it's really important, okay, to keep our bag right. Before we can help anybody else, our bag has to be right. Okay, and dividends show us this. If a company is giving away all their money, they're not going to have enough money to reinvest into more ads, into more workers, into better factories, etc. And they're not going to be able to scale at the way that they would like to, if at all. Okay, so if a company runs out of cash, they're going to cut the dividend to zero. So be wary of new companies, especially paying out big dividends, because it might not be consistently for long. And that's when the crash comes. Okay, and when they cut the dividend, the stock price drops even more because it's going to go ahead and lose value, which means you lose twice. So not only would you lose money on your base, money that's parked in there, your dividend payments are going to go ahead and get cut as well. So a golden rule, right? So a safe 3% return is better than a 15% risky return that has a chance of going to zero. Okay, don't be greedy. Focus on consistency. The name of the game in trading, investing in general, is consistency. Treat yourself like an oak tree, and you gotta plant yourself in the ground. You gotta give yourself water and sun. Okay, if you're not planting your seeds and you're just trying to hit the big 0 to 100, you're just trying to go buy an oak tree and plant it in the ground, it might not be stable. Okay, it didn't get time to connect to the roots, to the soil, and it might topple over. Okay, but when you're the tree and you grow it day by day, limb by limb, okay, root by root, okay, you're gonna know the field, and your money is going to be planted within the soil. It's going to have a lot better baseline to it. Okay, even if stock prices were to start dipping down, since you have so much baseline planted, okay, stuff isn't really going to affect you. Okay, your dividend payments are still going to be pretty consistent, and your profit fluctuation isn't going to be as bad because you planted your seeds. So focus on planting your seeds over a quick win. So how do you start today? Okay, I'm going to give you guys a 3-step plan. So the account, open up your broker. Okay, you guys can do Webull, Robinhood, Fidelity, Schwab, Vanguard, so many different options. Okay, open a brokerage account. Okay, then from there, okay, you can buy ETFs. ETF stands for Exchange Traded Fund, and they're pretty much going to be a bunch of companies put into one big giant company, for example. Okay, so you could buy really consistent ETFs like SCHD that pay out really good dividends, or VIWM, for example. Okay, and it's a basket of 100+ dividend stocks that give instant safety. Okay, or you could pick individual stocks as well too. Okay, and then the button. So find settings for your dividend reinvestment and turn it on. This way, all your dividends are going to go back into shares consistently instead of you guys just having random cash, and then you're going to have to go buy dividends instead of you just having it all in that DCA consistent flow mode. Okay, so don't forget, diversify. Okay, and a good way to diversify is to really invest into ETFs as well too. Okay, let's head over to the next slide. So dividend investing is really like going to be the ending to everything. Okay, it's the furthest thing from a get rich quick scheme. But after you run up 5 figures, 6 figures, 7 figures, you've been grinding, you've been putting in the work, you've been praying to God, really staying down. Once you have some money stacked up, dividends is going to be a good place to park your money in, and you guys are still going to get that monthly income and that monthly reward from it. But make sure you guys are choosing to invest into things that pay you out consistently, and be patient, be consistent, and start now. Okay, start now. That's going to be the most important thing. Start generating your business now. Start generating income now. Start doing whatever you need to do now. If you say you want to invest into certain assets, if you have $5 in your account right now, take that $5 and invest. Okay, start planting your seeds today, and that's going to be the most important thing. It's not really about the money. It's about your lifestyle, your consistency, okay, and how disciplined and focused you are when it comes to stacking your assets. All right, if you want help with it, head over to Stackmode.net. Stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. Peace. Keep going hard. Don't ever give up. When a company drops its earnings reports, it's like opening the result envelope on award night. Traders, investors, hedge funds, everyone is waiting to see if the company beats expectations, meet them, or completely miss the mark. And depending on that reveal, price action can turn into a calm wave or a full-blown tidal surge. During earnings, companies reveal how much money they made, how much they spent, and what they expect for the future. And here's the twist. Sometimes the company posts great numbers, but the stock still tanks. And here's why. Because Wall Street wasn't impressed, or the expectations could have been higher than reality. And other times the results are just okay, but the stock still shoots up because traders were expecting something a lot worse. In just a few minutes, spreads widen, volume spikes, and algorithms fire off like fireworks. And this is why many traders either love earnings season or avoid it like a thunderstorm. A lot of the times though, in order to avoid gambling, it is better to place your trades after the earnings report has released. So let's go and jump into what earnings is and how it affects the market. Inshallah, God wills. So we're going to go ahead and cover earnings. So what happens when financial earnings release? Okay, so every quarter, okay, every couple of months, financial earnings are going to be a report that determines the amount of money that a company made, okay, and the amount of expectations that they were trying to arise to. So if a company was projected to make $500 million, but they only made $300 million, then in that case, they would go ahead and lose earnings, okay? But if a company was projected to make $500 million and they made $800 million, then that would go ahead and be a positive earnings beat, okay? So earnings are going to go ahead and determine the price action too. Now, just because earnings gets beat or earnings loses doesn't mean that a stock will head up or down, okay? Stocks will do whatever it wants. Do not try and use the earnings releases to try and gamble and make trades, okay? Try and trade after earnings releases if you're going to put down a brand new position, okay? Wait for the price action to kick in, and then after the earnings release comes, then feel comfortable to make your trade. But never trade like a day or a couple of days before earnings. Wait for earnings if you're a couple of days before earnings, okay? Wait for earnings to come out and then take your setup, okay? Because otherwise it could be gambling. Earnings causes stocks to make giant moves quickly, okay? So the moves that happen during earnings are going to be extremely instant, and it's going to be like a flash move based on the report. So let's jump into it. So the quarterly report, right? 10Q. Okay, every 3 months, public companies are required by law to reveal their financial health to the public to let them know how they're doing. Okay, it's going to go ahead and let investors know if they want to keep throwing money into the company or not. If a company's not beating earnings, then that means that they're not making any type of income, okay? And a lot of the times we don't want to be invested into something that's not even making income in the first place. So every 3 months, public companies are required by law to reveal their financial health to the public, okay? And let's talk about the revenue. So revenue is going to be how much money came into the door, Okay, how much money did that company make during that quarter? And the net income is going to be the bottom line. It's how much profit is left after expenses. So certain companies might have to pay for building power, warehouse cost, employees cost, etc. And the EPS, it's going to stand for earnings per share. And it's the profit divided by the number of shares that are going to go ahead and be available. Okay. So EPS, net income, and revenue. Those are going to be the three factors and the three things that are shown on the quarterly reports. Okay, so let's keep jumping into it. So the expectations game, right? The actual numbers don't matter as much as the expectations. Okay, so once again, let's say a company was projected to make 100 million, right? Expected, but then they actually made 170 million. Okay, that would go ahead and give them a beat result. Okay, so whenever you hear the words beat, that means that the results that actually came out were going to be better than what was projected or speculated in the first place. Okay, so priced in. If everyone expects Apple to make $1 billion and then make $1 billion, the stock might drop. Okay, why? Because the good news was already bought weeks ago. Okay, so to see a stock pop, a company usually needs to beat company earnings, okay, and beat the analyst consensus estimates based on the company's averages is how the estimates come out too. So it's not just going to come out with random numbers. If a company is making around like $50 million a year, okay, the earnings might be around like $60 or $40 million expectations. Okay, it'll be around where the company is performing as of recent years. Okay, so don't just expect the numbers to just be some random inflated numbers. These are all numbers that are going to be based in and baked into averages for a reason. Okay, earnings come into play. But once again, don't try and just hop in a contract the day before earnings trying to trade like that. Please don't do that. Okay, please don't do that. Now, sometimes there's going to be little rumors as well too. You'll see like, oh, this company's going to be earnings. Nobody knows what's going to happen until the earnings report actually comes out. So please do not lose money gambling for no reason. Okay, wait for the earnings report to come out. Unless you're in a hefty swing already, please wait for the earnings report to come out. Okay, let's keep going into it. And understand that guidance is going to be king. So stocks trade on the future, not the past. Okay, so guidance. Guidance is going to be the company's prediction for the next quarter, how much money they're going to be making. Okay, it's pretty much going to be giving the company a trail and letting them know how they should be performing in order to get to the next level. So in any scenario, company reported record profits. Okay, but let's say next quarter looks slow. Okay, then that'll be the future. And results, okay, the stock would go ahead and crash if that's the case. So we're lowering our outlook due to supply chain issues would equal an instant sell-off, since that means they're pretty much letting us know, hey guys, the company can't expand right now because of financial issues. Okay, so guidance in the future of the company is also going to be really, really important too. There might be times where a company might lose or not beat their financial earnings, but then end up making a pretty profitable couple of next quarters. Okay, so one quarter is not going to go ahead and determine a company's entire worth. It's the consistent stream of quarters and reports year after year after year after year. If a company is consistently losing earnings, then that tells you about the company. Okay, so we'll talk about the implied volatility crush. So IV is going to stand for implied volatility. So before earnings, options prices can get very expensive. This is called high implied volatility. So it's like buying insurance right before a hurricane, okay? Or driving your car and then you just put insurance on it, you know? So before the release. So uncertainty is high, so options get more expensive in this case, okay? So if you are going to buy a contract before earnings come out, okay, make sure you sell it before earnings come out too. Don't gamble and sell your contract after earnings comes out, because then the uncertainty would go ahead and vanish. Okay, unless you're playing for a way bigger take profit that's going to be way further out than you think. Okay, then try and sell your contract before the earnings comes out, because it's going to be worth the most expensive then. Okay, so buying options right before earnings often loses money, even if you guess the direction right. So if you buy a calls contract and the company beats earnings, and even if price goes in an upwards direction, okay, you might notice that your contract didn't even make you that much money. Okay, that's because price has to get rebaked into what it actually is supposed to be. So do not buy earnings before expecting you to catch the right direction. Okay, because even if you do catch the right direction, you're probably not going to make as much money as you would think. Okay, especially depending on the contract that you buy. Okay, the reasons why contracts get expensive like that before earnings is because they don't know what the number is going to go to. Okay, that's why. So implied volatility makes things more expensive. So understanding this really helps us. Let's head over to the next slide. And let's go ahead and let's talk about the gap. So earnings are usually released after the market closes. So it's usually after 4 p.m. Eastern Standard Time. Okay. Or it's going to be before market opens. So it's going to be before 9:30 a.m. Eastern Time. So you cannot trade standard stocks during the release unless you have extended hours access. So a lot of the times, once again, just like I talked about earlier, you're going to see that instantaneous price action. So the stock price will teleport, so it instantly gap up or down. Okay, and stop losses do not work against gaps. If you hold overnight, then you're going to be taking the full risk. So just know that even if you have a stop loss placed during the day, if price decides to run through wherever your stop loss is, then what it's going to go ahead and do is decide to not validate and just ignore all of those orders due to the fact that the price action is happening pre-market and after market. Okay, and you can only maneuver your options contracts. If you have shares, you can close a little before or after. Okay, but if you're on options, you gotta only get what you get when you wake up to the contracts. Okay, so even if you see price going in an upwards direction and you had some calls, don't expect money all the time. It really depends on a lot of things such as implied volatility, etc. Okay, so expectations matter. Okay, so beating estimates are required a lot of the time for a stock to go in an upwards direction. Okay, in order to start seeing a rally, and guidance is going to be critical. So the future outlook is a lot of times going to go ahead and overshadow the past results. And volatility crush. Options lose value instantly after the news. Okay, so you might notice a contract might be $500 before the news. Okay, and then after the news, it might go down to $200, even if the number were to go ahead and hit. Okay, so options lose value instantly after the news, and the gamble between everything. So holding through earnings has a high risk. Okay, just a high risk factor. I'm not even gonna say high reward. Okay, because the reward that you were to get is not even worth it, and you wouldn't even get it as properly as you would. Now, if you're holding a super swing, okay, you're trying to hold a trade for months, weeks, some years, etc. Okay, then I do understand. Okay, do your thing and hold your trade as you need. But a lot of the times, make sure you're closing your trades before earnings come out. Okay, unless you know exactly what type of swing that you're holding. Okay, head over to Stackmode.net to learn more about anything stock related, investing related, or trading related. I'll catch you guys in the next one. Peace. I'm going to break down calls, puts, and even leaps so you guys can understand stock options in a way that makes sense, no confusion, and no headaches. So use call options when you think a stock is going to rise in an upwards direction because you want to lock in the cheaper price today and profit from the move up. A put option is going to be the opposite. It gives you the right to sell a stock at a certain price, and if you think the stock might fall, puts lets you profit from that drop or protect your portfolio from taking a hit. You can also do something called hedging, which is the main thing options was created for, in which you could place a bet in both directions. But here's where the beginners miss out. Leaps. These are long-term options, usually lasting 1 to 3 years, and they give you a lot more time, more flexibility, and less stress than those short-term weekly options that wipe people out. Let's go and let's talk about them, and let's jump into it. Inshallah. All right, so let's talk about what an options contract is in the first place. Okay, so we'll talk about the rights versus the obligations. So an option is a financial derivative contract, and it derives its value from an underlying asset like Apple or Tesla stock, okay, or Microsoft stock, or even stocks like Google, okay? And it gives the buyer the right, but not the obligation to buy or sell that specific asset at a specific price on or before a certain date, okay? So let's say you bought a ticket for $100, okay, right? That's how much the actual options contract costed you. Okay. And then let's say now the concert were to sell out. Now tickets are going to be worth $500. Okay. If you had a call ticket, okay, because call contracts are going to be used whenever you think price is going to go in an upwards direction. Okay. So you would purchase a call contract. Okay. So that would give you $400 in profit. So if you bought it, okay, if you bought the tickets for $100 and sold them for $500, okay, that means price went in an upwards direction, okay, which means you would have bought a call contract, okay, and that means you would have made $400 on that, okay. So $400 profit would have been what you yielded without ever attending the concert, just because you were right on the fact that prices would have gotten more expensive over time. So if you believe that prices are going to go in an upwards direction and get higher over time and more expensive, then you're going to go ahead and purchase a calls contract. If you're betting that the price of a stock is going to go in a downwards direction, then what you're going to do is purchase a put contract. Okay. So if you think price is going to go in a downwards direction, you're going to buy a put. If you think price is going to go in an upwards direction, you're going to go ahead and buy a calls contract. Okay, let's head over to the next slide. So let's talk about the anatomy of a contract in the first place. Okay, the big three terms. Okay, so every single options trade has these three components. Okay, and you got to choose them wisely. Okay, one, your strike price. Okay, your strike price is going to be the specific price you agree to buy and sell the stock at. Okay, then you're going to have your expiration date. Okay, so one of the most important things about options is going to be called the Greeks. Okay, and the Greeks are pretty much going to be time deterministic factors that determine how much profit, okay, your options contract is going to make, or how quickly you're going to lose profit. Because remember, on options, you're buying and getting paid for an educated guess. Okay, it's not fully ownership like buying 100 shares. Okay, you're buying the educated guess and getting paid off of that. Okay, so every educated guess is going to have an expiration date to it. Okay, there's going to be a date where it's like, okay, if you're not right by this time, then your contract is just going to go ahead and expire. Okay, whether it be in the money or out of the money. Okay, in the money means that it'll expire and you would get paid. Okay, and out the money means that you would have lost money on your contract. Okay, and then premium. Premium is going to be the price that you pay for the options contract today. Okay, and to buy the contract, and this is going to be your maximum loss. So the cool thing about options is that your maximum loss is built into it. And on options too, you want to go ahead and try to multiply a lot of the numbers you see by 100. So you might see, let's say you have Apple. Okay, let's say you got Apple here. And let's say an Apple's contract cost 8.70. Okay, all options contracts, in order to get the premium price, okay, you need to multiply the number by 100. Okay, so 8.70 times 100 would equal $870. Okay, if a contract costed you 2.50, okay, is the premium, make sure you multiply that by 100, and a lot of times your broker will tell you how much it's going to cost too. Okay, that's going to mean the contract will cost you $250. Okay, so multiply a lot of the decimal numbers you see in the options world by 100 to get the correct US dollar amount of what you're looking at. Okay, and once again, your expiration dates are going to be really important too. Okay, your contracts don't last forever, so buying as much time on your contracts is going to be ideally the best thing to do and will keep a smile on your face. Okay, make sure you have time on your contracts. Try and stay away from things like 0 date expirations. Okay, 0 date to expire. Okay, if you also hear the term DTE, it stands for date to expire. Okay, so let's head over to the next slide, class. So let's talk about call options. Okay, call options mean that price is headed in a bullish direction. Okay, and a bullish direction means an upward direction. Okay, so that means that you're betting on growth. Okay, you're taking an educated, speculated guess. Okay, that price is going to go in an upwards direction. So buying a call means that you profit when the stock goes in an upwards direction. Okay. So why do it? Okay. Leverage. Okay. So leverage on options is the reason why people trade options in the first place. So options contract, one options contract, okay, equals 100 shares worth of power. Okay. So one contract, okay, equals 100 shares worth of buying power. Okay. So to buy 100 shares of a $200 stock, okay, that means it would cost you 20K. Okay. But to buy one call option of those controlling shares, it might cost you only 500 to 1,000. Okay. So this way you're getting the shares power, okay, just jumbled up in a one big contract derivative. And it's cheaper because it's not giving you actual ownership, but what you're getting paid based off of if this directional skill. Okay. So if you think that a company is going to drop one of the best products of all time, okay, and it's not at all-time highs yet, and you think price can go even further, okay, then you can go ahead and look to buying a call option. Okay. So if the stock soars, okay, your $500 could turn to $2,000 overnight, okay, giving you 300% gain. That's also the cool thing about options too. How much you lose is baked in. You know exactly how much you're going to lose maximum at all times. If you bought a contract for 5.00, okay, remember, times 100, okay, and that would go ahead and give us $500. Okay, if you bought a contract for $500, the max you could lose, okay, the max loss would go ahead and be $500. $500 would be the absolute max loss, okay? But guess what the max profit is? Infinity, okay? So that's the super duper cool thing about options. You can only lose what you purchased the contract for, but you can make infinite. Okay, so if you bought a contract for $500 and it crashed to zero, the stock, okay, you would still only lose $500. But if the stock soared all the way up to $10,000 a share, okay, you would make infinite profit. So that's why people trade options. Let's head over to the next slide. And the opposite and equal end of it is going to be the put options, okay? Just like things that go up have to come down, okay? Options are going to be the same way, okay? Calls is going to be for price going in the upwards direction. Puts is going to be for price going in the downwards direction, okay? And that means that you're betting on a crash, okay? You think that price is going to head in the downwards direction for a bit, okay? And buying a put means that you profit when the stock price goes in the downwards direction. So let's say a stock price was $40, okay? And you think price is going to go down to $35. Then in this instance, you would go ahead and purchase a put contract, okay? So puts are going to be used for two main reasons, okay? One, speculation. So if you think a company is failing and you want to profit from the crash or heading in a downwards direction, then a put options contract would go ahead and be your best case scenario for this, okay? And then hedging, okay? Very, very important too, okay? So insurance, let's say you own 100 shares of Apple, okay? But you're scared of a crash, okay? So you could go ahead and buy a put contract. So if Apple actually does drop, okay, the put contract makes you money, and then you could take that money and buy more shares if you'd want to, okay? So options was created so people can speculatively trade, okay, and hedge. And hedging means that you could trade at both directions during the same exact time, just to manage any type of balance or any type of other asset classes you have held. Okay, let's head over to the next slide. All right, so let's talk about the pricing trap, okay? So the times 100 multiplier, okay, it's very, very, very easy to understand, okay? Don't make it a trap, just understand it. Okay, just understand when you're looking at options contract, it can be a trap though if you think a contract costs like $2.50. You're like, oh, the options contract only costs $2. Like, no, it actually costs $250. Okay, if you see an options contract cost 10.00, that means that that contract has to be multiplied by 100. Okay, and that would go ahead and give you 1,000. Okay, even if it's a decimal. Okay, if you see a contract for 0.75, you still have to multiply that by 100, okay, and that's going to go ahead and give you $75, okay? If you have a contract for 3.35, multiply that times 100, and that's going to go and equal 335. Okay, you guys can either use your calculators or you can just look at the number with the decimal and just remove the decimal. Okay, just remove the decimal from your brain mentally, and that's going to go ahead and give you the actual number. Okay, so if something's 2.50, okay, just remove the decimal, 250. Okay, if something costs 7.40, just remove the decimal, it costs 740. Okay, so don't make the math too hard. Okay, and don't get psyched out. Okay, stay prayed up to God for wisdom and keep going, even when things get difficult. Let's head over to the next slide. So time is going to be the invisible enemy. Okay, so let's understand what's called theta. Okay, so theta is going to be really important. Okay, so options are going to be like melting ice cubes over time. Okay, and you got to get paid before the ice cube decides to get melted. Okay, and they're composed of two types of value. One, okay, it's going to be intrinsic value. Intrinsic value is going to be the real value. Okay, it's going to be the stock price. Okay, and then the strike price. And then you're going to have the extrinsic time value. Okay, which is going to be the hope value. Okay, and this decays every single day due to the fact that we are trading in melting ice cube. Okay, so as you get closer to expiration, the time value accelerates to 0. Okay, so if the stock doesn't move fast enough, you lose money, even if the stock price stays the same. So in order to outplay all of this and get around theta and make sure you guys profit, you want to try and focus on what's called leap contracts. Okay, leap contracts are going to be contracts that expire between 1 to 3 years. Okay, because you want to try and play your options like you're holding shares. Okay, you don't want to try and play your options real quick. No, because a lot of times you're going to lose like that, and it's not going to be worth your initial investment. It'd be worth it to go play futures if you're just going to play that short of expirations. Okay, try to buy 1 to 3 years out and catch big, giant, higher time frame setups. At the end of the video, I'm going to include some chart setups too, so we know when it's time to buy calls or puts. Okay, so trying to buy between 1 to 3 years out is really going to give your trade some time to cook, chef, before it just decides to melt completely and expires. Okay, so now contracts that are expiring later, okay, like 1 to 3 years, will be more expensive, but your theta is going to go ahead and be saved. Okay, because if you have a shorter time frame contract, your theta is going to be getting destroyed by that extrinsic time value that decays every single day a lot quicker. Okay, and that's really just not what you want ideally. So I'm trying to give you guys the easiest time possible. Okay, so try to focus on contracts that expire in about 1 to 3 years, and inshallah you'll have the easiest time trading options. Okay, also another thing with options too, try to buy the contract closest to current price. Okay, so if an options contract is costing, okay, or let's say the current share price, right, is $70 a share. Okay, you want to try, and you think price is going to go in an upwards direction. Okay, let's say you think price is going to go to 80. Okay, even though you think price is going to go to 80, the best contract to buy would go ahead and be a 71 call contract. Okay, a 71 call contract would be the best contract to buy. Okay, you want to try and just buy the number 1 up. Okay, so if the number is going to be current price is at 60, okay, and you think price is going to go down to 55, okay, the best contract to buy would be a 59 put. Okay, that would go ahead and be the best contract to buy. So even though we're going to close at 55, you still want to buy the number 1 below since you're buying a put, or the number 1 above if you're buying a call. It's going to give your contract the best value and move the best. So leaps, okay, long-term plays, okay, leaps, long-term equity anticipation securities are options that expire in over a year, okay, or a year. Okay, they have less decay on them, making the theta very low. Okay, you don't have to stress about little daily moves going through it for no reason. Okay, and stock replacements, it pretty much mimics owning the stock for a fraction of the price. Okay, and you guys are still going to be able to hit some great take profits. Okay, and tax benefits. So even on crypto and shares as well too, if trades are held for over a year, then you get a lot of favorable tax-free treatment. And there's a reason for this. Okay, the markets are made to go in an upwards direction. So the more people they have invested, of course, there's going to go ahead and be tax benefits for that. They want as much money as they can parked into the markets, okay? Because that's how the US economy decides to flow and the US stock market flows in the first place. Let's head over to the next slide. Okay, so calls, that means you're going to purchase them if you think price is going to go in an upwards direction. Puts, that means you would purchase them if you think price is going to go in a downwards direction. Theta, that's going to be the time clock, okay? And it's going to be a big piece on the melting ice cube, okay? Treat your options contract like a melting ice cube every day. And you want to get the most deep freezed ice cube that you can. And you do that by purchasing a leap contract. A leap contract is a contract that expires in 1, 2, 3 years, okay? And your risk is going to be whatever you purchased. Okay, so if you purchase a contract for 5.00, okay, remember, and then we got to multiply that by 100, okay, or you could just remove the decimal and that'll give you the number. So 500. So if you purchase a contract for 500, let your contract either hit your take profit or your stop loss is going to be that 500, okay, and only invest what you can lose. Okay, 100% loss is going to be possible on your contracts. Okay, so try and use your whole contract as the stop loss and give yourself time and play for real take profits. The United States stock market is created to go up. As long as these companies, okay, have more money to hire people, okay, that's going to be more taxes that can be paid to the US government. Okay, the more money that they get from stock market funding means the more properties they can build. The more properties that are built means the more property tax that has to be paid to the US government. Okay, so as long as these companies in the stock market goes in an upwards direction, okay, and that these stocks are even moving, then the richer the US government will get. Let's go and let's jump into the chart, and I'm gonna talk to you guys when to know when to buy calls and when to buy puts real quick. Let's go. So when you are on the chart, you want to start doing your higher time frame top down analysis. Okay, so I'm gonna go ahead and start on my weekly time frame, and then from there you want to go ahead and head over to your daily to your 4 hour. Okay, so once again, we purchase call contracts if we think price is going to go in an upwards direction, and you're going to purchase put contracts if you think price is going to go in a downwards direction. Okay, so I'm going to start on my weekly here. So if I'm going to purchase a call contract, then that means that price can't be at all-time highs because I'm expecting price to go in an upwards direction. So if I have area of resistance above current price, okay, then that's going to go ahead and give me a window to purchase a calls contract. Okay, so understand that price a lot of the times will try and hunt an area of resistance above current price, especially after falling down. Market's going to work at higher lows in V's. Okay, so we can see market decided to make a low down here and decided to incrementally keep staring up in an upwards direction, okay, over time. Okay, and after I like to see market making a heavy area of support on my higher time frames, whether it be in my weekly, my daily, or my 4 hour, okay, I know that price always wants to try to recover where it fell down from originally. So I would go ahead and just take the trade up till there. Okay, I would purchase a call contract since I think price is going to go in the upwards direction. Okay, and I would buy a year or 2 out. Okay, so I could buy January 2028 if I'm recording this in 2025. Okay, and if I see the current price here is 183.38, I could buy a 185 contract. Since I'm going to be buying a calls contract, I'm going to buy the contract that's going to be one above the current price. Okay, if I was going to buy a puts contract, okay, expecting price to go in a downwards direction, looks like this one hit take profit too. Okay, if I'm expecting price to head in downwards direction, then, you know, you could play, let's say I wanted to short till this area of resistance here. Okay, market's deciding to fall right here. Let's say I'm expecting price to do something like that. Okay, if I want to short down to this area of resistance right here, okay, I would do the same thing. Options by like 1 to 2 years out. If I think price is going to go in a downwards direction, I'm going to look at current price, look at the number right below it. Okay, so in this case, if current price is 19.39, then I would go ahead and buy the put. Okay, I would buy the put 18, and that would be the best contract to purchase if price is heading in a downward scenario. Okay, so that's it. Make option trading very, very simple. Don't make it too difficult.
I have so much free content for you guys. Head over to stackmode.net to learn how to trade options. I'll catch you guys in the next one. Say prayer to God and keep grinding.
So if you lost all your money, you're at zero. It's happened to pretty much almost every single trader before. Okay. And I don't want it to happen to you again. Okay. It's going to be important to lower your ego, humble yourself. And this is why it's really important to get with God. Okay. It's really going to help us build consistency, waking up, praying every single day. Okay. Let's wake up. Let's work out every day. Okay. And let's transmute this pain and let's work harder, whether at work and or your business. Okay. So you should either be having one job and working on your business, or you could have two jobs, okay? And then on the weekends, work on your business, okay? Do what you need to do to grind. Run it back up. Don't stop. Keep pushing. No matter in any situation, you have to keep pushing. You can't stop. You can't let things get to you. You can't let things break you down within your mental. Okay, if you say you want this, if you say you want to be a profitable trader, if you say you want to put your family in a better position, we got to lock in. We can't be getting broken down. We got to bounce back, inshallah, if God wills. Okay, so here's going to be the full guide to financial and psychological recovery. We got to keep pushing forward underneath any circumstance. We can't stop. We can't let our emotions break us down. That's all just the devil. Okay, the devil doesn't want you to progress, but God wants you to progress. Alhamdulillah. Okay, so turn to God. Okay, wake up every day, pray, get yourself right, lower your ego. This is why you're blowing up your account. Why can't you just accept the fact that you're losing? Okay, if you lost the trade, get off the charts. Why are you trading over and over and over and over and over again? There's no point to that. It's time to transmute all of that pain. Okay, put it into more work, put it into your business, set your alerts at your key levels and go work on your work and your business. Okay, why are you sitting there trading over and over again? Why are you sitting there taking 10 trades in a day, blowing up your account? How do you expect to progress? Okay, take one trade, risk management, and have some long-term investments. Okay, invest in shares. Okay, cryptocurrency, some long-term investments so you don't have to sit there trying to day trade every single day. The reason why you guys are also blowing up your account so quickly is because you're trying to day trade. All the money you've been losing trying to day trade, one, you could have put it into mentorship. Stackmode.net, the first call is even free. Okay, so I give you guys a free first call. And on top of that, there's just no reason to be blowing up your account in the first place, okay? Because all that money you've spent trying to day trade, trying to make profit, you could have been putting in long-term investments, and your profit would most likely still be positive today, and you'd still have a large majority of it. And so you'd be up and you still have your money, okay? So focus on long-term trading too, okay? It's not just all about day trading, zero DTE, futures, etc. Don't let that prop firm mindset destroy you. All right, let's go. So the immediate aftermath, the psychological toll, losing a significant amount of money in trading is more than just a financial event. It's a deep psychological blow, and you may experience a range of emotions, including shock, denial, regret, shame, and even a profound sense of failure. And it's crucial to understand that these feelings are normal and a part of the grieving process for your financial loss. Acknowledging this emotional state is the first critical step towards healing and recovery. So acknowledging the pain. Do not suppress your feelings. Allow yourself to process the loss without judgment. And this is a necessary emotional release that has to happen. And combat cognitive bias. Your mind might trick you into a get it back quick, okay? Get it back quick, okay? So pretty much if you lost some money, let's say you lost $200, okay? You might think, okay, I'm gonna go ahead and risk even more money so this way I can go ahead and get my $200 back and I can go ahead and end up profitable on the day. No, man, you lost. You lost, you lost. You get off for the day. You plot out an even cleaner setup. You come back with even more logistical analysis and more of a good reason to put on a good trade. And until then, you're gonna wait. I don't care if it takes days, weeks, or months, okay? You wait for a good setup. Don't just come on here and burn your money trying to fiend for money, okay? Wait days, weeks, and months. It takes a long time to get profitable, okay? But it can happen now if you just plant yourself in the right positions, okay? Invest in things that have future value. Invest in things that put smiles on people's faces, okay? Some stocks just go up in a straight line year after year after year after year after year. You just have to do your research, okay? So don't get tricked within the get it back quick mindset, especially day traders. Day traders, you got to control your emotions. You got to think more long-term. Even if you make some profit off a day trade, think about how you're going to reinvest that back into a long-term play. And recognize that this is a cognitive bias, specifically the recency bias and loss aversion. And this resists the urge to jump back in. So conduct a brutally honest financial audit. So before you can rebuild, you must understand the full extent of the damage. This is not about self-blame, but about creating a clear picture of your current financial reality. And these detailed audit will be your map for the road ahead. So identify the full loss. Tally up every dollar lost. And this includes not only the principal, but also any fees, interest borrowed on funds, or opportunity cost. And categorize your remaining assets. List every single asset you still have, from checking account balance to the value of a car or your home. Okay, be meticulous. And document your debts. Don't run from your debt. Okay, don't run from your debt. You know you got to pay it off. Okay, certain things that you might have piling off. I pray that you guys don't have any debt, but if you do, let's tackle that. Let's pay it off. Let's stay down. Let's get in stack mode. Okay, stay down, stack mode. Okay, get in stack mode for the rest of your life. Okay, only spending 50% of our income, keeping the other 50% in the stash. This way, after we pay taxes, we're still gonna have money left over in the stash, inshallah. So document your debts. Create a comprehensive list of all your liabilities: credit card debt, personal loans, mortgages, etc. And after a $50,000 loss, for example, a trader might discover they only have $500 in their checking account and $2,000 in their savings account. They also find they have a $10K credit card debt occurred trying to recover the loss. Okay, so while they were just trying to make up for the money lost in cash, they were just spending money on their credit card debt. Okay, something that's happened to me, and I don't want you guys to go through that. It can be extremely daunting, extremely frustrating, and scary when you start seeing your debt pile up like that. So be financially responsible before you start trading, and don't trade with any money that you can't lose. So their audit reveals a negative net worth, but it also provides a clear starting point for a new financial plan. So focus exclusively on earning and saving. Stack mode. Okay, stack mode is about being a God-fearing, righteous individual. Okay, and it's about staying down. Okay, saving up your money, because we got people that's protecting and provide for. We can't be spending all of our money on stupid stuff. We're gonna be investing smart, growing our money, and making sure our money is always making us more money. Money is gonna be a tool. Okay, don't use money just to consume. Use money as a tool in order to generate some more money. This way you can work, okay, less. Okay, so as you get older, you're not gonna be able to work the same, but you still gotta be generating some money. Inshallah, still gonna be people that need help. Still might be family that need you. Still might be people to take care of. So your money needs to always be making you money. So use it as a tool and set up your investments. So for now, all trading activity must cease. Okay, if you go broke, if you lose all of your money, trading is stopped. Okay, pause it. Your number one priority is to rebuild your financial foundation with stable, reliable income. And this is a period of accumulation, not speculation. So work on increasing your income. So every avenue that you can explore, whether it's working harder at your business, okay, trying to get monetized on certain things, okay, creating certain programs, lots of things you could do to generate wealth. Especially with AI, it's extremely simple to just choose a niche and jump straight into it and just work hard. Okay, so this can mean working more hours, okay, freelancing, certain businesses. Just do what you need to do to generate some more income. So create a strict budget. So develop no frills budget that prioritizes essential living expenses. So stack mode, right? So when you're in stack mode, you got to really be staying down. When you get older, you can't work 16, 18 hours a day. Okay, you're going to be too old, but you got to be using money as a tool still. You still got to be investing. You still have to be generating income. Okay, so this is why investing is going to be so important, inshallah. So while you're healthy, okay, invest your money so then when you get older and you can't work as long hours, you're still going to be able to survive. You're not going to be down bad. Okay, I don't want you guys to be broke, okay, with no options and just nothing to really just say that you did on this earth. Okay, so please save your money and get in stack mode. It's important. So every dollar should go towards building an emergency fund and paying down high interest debt, and eliminate high interest debt. So use strategies like the debt snowball or debt avalanche to aggressively pay down credit cards and personal loans. And this is a guaranteed return on investment. So a deep dive into education and risk management. So once your foundation is stable, okay, you started clearing your debt, you got your money back on track, it's time to re-educate yourself. Your previous approach failed, so a complete overhaul is necessary. Okay, lower your ego and you have to completely change everything. Restart your mindset, restart how you think about everything, restart how you approach the charts in life. Okay, completely overhaul your mindset. Quit things that you used to do. Okay, start doing some new things. Okay, and this step is about replacing reckless habits with a structured, disciplined methodology. Okay, so here's a market study. So dive into the market history, economic cycles, and different trading philosophies. You can go ahead and read books. I have so many videos too. Okay, and you can go ahead and check out how to balance your account. Okay, do your research. Okay, I also have an ebook as well too, free course, many free videos. please just do your research before you hop onto the charts trying to throw some money at it or trying to make some money, okay? Because you might just end up losing some money, and that's really gonna hurt. So do your research first, please. Master your risk management. This is a non-negotiable. Learn to calculate your position sizing, set your stop losses. That's an area where the price is gonna go ahead and close out your trade automatically if it hits that certain area, okay, causing you to only lose a certain amount of money. And never risk more than 1 to 2%, especially when you're a new trader. But as you get better, you can go ahead and bump that up to 1 to 10% of your account. And a well-defined plan is going to be your roadmap for everything. It must include your entry and exit criteria, your risk-to-reward ratios, and a detailed list of rules that you're never going to break. So instead of day trading with leverage, for example, a recovered trader decides to focus on a long-term swing trading strategy in a single sector they've studied for months. Their new rule is to never risk more than 1% of their account on a trade, ensuring that a string of losses won't wipe them out again. Okay, you're coming onto the market to make some money. Why are you coming into the market and going back to zero? It's not making sense. So you need to be focusing on the trades that are going to keep your account alive, and not the account or not the trades that's just going to make your account money. Okay, money is not always everything. Focus on what's going to keep your account alive. Focus on the safety. Okay, and that inshallah will transpire to profitability. So conquer your emotional demons. Okay, trading is going to be 80% of psychology. I've seen it firsthand. You can give someone the best levels and they don't close that take profit because they think it might go further. Okay, so psychology is going to be extremely important, and your perspective. So your biggest opponent is not the market, but it's going to be your own emotions. Okay, and a lot of times it's going to be the devil trying to attack you. So just pray to God, and just understand that it's just evil trying to decept you. Okay, anything that you guys might want to do to tempt you to do anything bad, it's all just evil. Okay, don't do it, because when you're crying afterward, when you're sad afterward, that just means that the devil got you. Okay, so don't be weak, be strong. Okay, and keep your head on. So you must learn to separate your personal feelings from your trading decisions too. Okay, so even if you take a big loss, even if you just went down to zero, don't treat people bad. Okay, don't treat people bad around you. Don't talk to anyone bad. Don't get emotional. Okay, I know there's some times when you take a loss, you can't even speak to anybody. Okay, I've had those days. I've definitely had those days, but you can't let the trading loss affect your real life. Okay, you have a whole life that God has blessed you with. Okay, there's still grass outside, still fresh air, etc. Okay, so even if you lose all of your money to trading, don't get depressed, don't spiral, and just manage your expectations. And understand that trading is going to involve periods of drawdown. Okay, and especially when you're first starting. If you go down to zero, it's okay. Okay, many people fail with their businesses, have gone down to zero, failed businesses, and I wish you guys just know how much trial and error it takes to actually be successful. Okay, this is why God is important, so you don't go insane. Okay, it takes an extreme amount of trial and error. Okay, so winning every single trade, that's an illusion. Okay, in hindsight, kind of not really. You are gonna lose sometimes, but it depends what you're trading. You can win like 99% of your trades though. I can say that confidently. So focus on long-term probabilities of your edge, not the outcome of a single trade. So start a trading journal. Okay, document your trades on YouTube, Notion, Discord, whatever. Okay, coming out with the app, Stackmode app, where you guys can also track your profits and trades too. Okay, so document every single trade, your profit, your loss, your entry, your thought process, how you felt, and the outcome of it. This is going to help you identify recurring mistakes and any emotional triggers, and practice unwavering discipline. Stick to your plan no matter what, and do not chase trades. Do not get greedy, and do not panic. Discipline is the bridge between your goals and your execution. So start with paper trading too. Okay, you can paper trade on TradingView. A lot of brokers too allow it. And don't jump back into the market with large sums of money. Wait. Okay, play with small percentages of your work check, your business check, whatever. Okay, pay your bills first, get some groceries, and then whatever you have left over, start investing with. Okay, let that grow over time. And by this whole time, while you're playing with small amounts of money, you're gaining info. Okay, so say your business, something like that blows up, when it's time for you to get into the big bucks, when it is time for you to throw it into the market, you're going to be well informed and you're going to be all good. Okay, so alhamdulillah. Okay, so it's a lot better being in this position versus being somebody who has a lot of money trying to come into the market with no education and then losing it. Okay, because that can hurt. And even if that has happened, it's fine. Just run it up again, inshallah. So start with the tiny account, scale it up. If you can't grow a small account to a big account, you can't grow a big account to a bigger account. That's just the truth. So increase your position size when your account grows through profitability. Okay, be disciplined and don't just keep adding more capital in your pocket whenever you're making bad decisions. Okay, you have to grow your account. Okay, let it grow through discipline. So losing money can be the most valuable lesson you'll ever learn. It's definitely taught me a whole bunch, got me closer to God, made me realize how unstable I was in certain emotional aspects. I realized I was extremely greedy. Okay, there'd be times I just wouldn't be satisfied with my profit. Okay, and that was leading me to spiral over and over and over and over again. Okay, leading me to take more trades than I need to, trying to chase more dollars, instead of just realizing if I would have just stayed disciplined, been consistent, then I would have gotten to the position of where I wanted to at the same pace anyways. So instead of trying to make $2,000 in one day, if you make $500 4 days separately, that's still the same amount. Okay, so just focus on the long-term vision. Okay, get rich slow, focus on the discipline, and confront your weaknesses. Okay, and rebuild your strength and your wisdom. Okay, God tells us to be reborn. And the journey back is not just about financial recovery, but it's all about personal transformation. And you're no longer the same trader who took on too much risk. You are a new, more disciplined, and more resilient individual. Okay, rebuild yourself back up and become a boss. Every boss has taken a major loss, and it's about bouncing back. Do you have that hustle in you? Okay, this is really gonna determine if you're built for this. Okay, if you have that hustle in you, you'll run it back up. All right, God got you. Don't give up. You got people to provide for. I love you so much. Head over to Stackmode Network for all trading and business education. Catch you in the next one. Peace.
If you're not familiar with cryptocurrency or how it works, let's fix that right now, because today you're getting the ultimate beginner-friendly guide to cryptocurrency that actually makes sense. No hype, no jargon, and just straight clarity. Crypto isn't just internet money. It's a digital system that lets you send, store, and grow value without needing a bank. And the best part, you don't need to be a tech genius to start. You just need the right roadmap, and I got you. Step 1, I'm going to teach you guys how to understand Bitcoin. It's the foundation. Think of it like a digital gold, and know the difference between coins and tokens. Coins run their own blockchains, and tokens live on blockchains. I want you guys to understand risk management, because new investors lose money because they skip this. Never invest based on hype. Always focus on projects with real utility and making sure that it's putting a smile on people's faces in the future. Let's go on, let's jump in, and let's understand what cryptocurrency is, inshallah. So let's go and let's do a deep dive onto crypto, and let's understand it, inshallah, if God wills. So why does crypto matter in the first place? It solves the trust problem. So traditional money relies on banks, okay? So the money sits inside the centralized bank system, okay? And within that system, people can only make certain decisions with their money. If you have 100,000 parked in the bank, you can't go to the bank and pull all of it out immediately. Same thing with certain apps like Cash App, Zelle, etc. There's going to be withdrawal limits, and there's going to be deposit limits as well too. Okay, due to the fact that the bank has to centralize and control everything, so that on their end they have to have enough money to distribute to everybody. Okay, because the bank is using our money. So understand that if the bank freezes your account as well, then your money is going to be gone. Crypto solves all of this. It's censorship resistant. No government can stop a Bitcoin transaction, not a single one. You could be in any country in the world, and it makes it permissionless. That's the main reason why people fight so hard for cryptocurrency. It's because it's righteous. You know, everything doesn't need to be rat race and controlled, especially with other things being as controlled as they are. You know, you have to go pass emissions for your car before you can drive it and do certain things already. So the fact that we can't spend our money or withdraw our money how we want is a problem. It's a problem for me and a problem for many other people. And thank God we have the resolution for this. Cryptocurrency has come into play to solve this. Also, it becomes an inflation hedge too. So central banks continue to just keep on clicking print, okay? They print money constantly, over and over and over and over again. Keep on clicking the print button, okay? Making it worth less. And Bitcoin has a fixed supply, which makes it scarce, okay? And that scarcity has a lot of value built into it, just like gold, diamonds, etc. Anything that has less or has a strict supply, okay, is automatically going to go ahead and be valuable. Okay, anything that has less supply than something else will be more valuable a lot of the times. And cryptocurrency is giving you true ownership on your currency. Okay, you could be in any country in the entire world, as long as the country has a bank account system that lets you withdraw from certain brokers, okay, such as Coinbase, etc. You can take that money from your cryptocurrency, spend that anywhere in the world. You don't even have to transfer it to fiat currency if you don't want to. You could easily just get your cryptocurrency, spend it on like a Coinbase card, and you can easily just spend your cryptocurrency straight up without having to transfer it to a centralized bank. So you can be completely your own bank. You have total control and total responsibility for your money too. So there's also going to be a couple things that come into play with this. So say things like fraud. If you make a transaction on mistake, okay, for a bank, you could call them up and be like, hey, I did this on accident. Could this be reversed? And a lot of the time, since it is a controlled system and it is technically kind of their money also,
So they have the ability to, pause things, freeze things, and make certain transactions not go through in case ever needed. And that could be in a good thing or a bad way too. Because say for instance, you're trying to send some money to a family member in another country. They could also decline that wire transfer if they wanted to. Cryptocurrency, nobody can decline your transactions. Okay, nobody. Okay, you are going to be your own bank, and everything works on autonomous smart contracts. So on a normal bank, if you wanted to send $10,000 to somebody, once again, the bank has the ability to say yes or say no. Okay, it's going to be completely up to them. But if you send it via cryptocurrency, instantly it'll go ahead and get sent over. Okay, but that's also putting more responsibility in your hands too. So because of that, you have to be making sure that you're sending your cryptocurrency to the right addresses, and you have to making sure you're sending the right type of cryptocurrency and sending it via the right type of networks. Okay, so because you're your own bank, you have total control. Okay, but that also means a lot more responsibility. So before you send certain cryptocurrencies and stuff like that, etc., make sure you confirm every single address that you're looking at. This way you'll be able to ensure secure transactions and making sure that you're getting your money and making sure that your transactions are hitting the way that they're supposed to. Inshallah. So under the hood of everything, right, let's go and let's talk about the blockchain. So miners and nodes. The blockchain is not magic. It's a global network of computers. Okay, so nodes, let's talk about them. Nodes are computers that keep a copy of the ledger. Okay, they verify that you actually have the money that you're trying to spend in the first place. Okay, and let's talk about POW. POW is going to go ahead and stand for proof of work, and it's how Bitcoin is created. Okay, so specialized computers that secure the network using energies, and they compete to solve math puzzles and problems to add the next block. Okay, so what's happening is these computers are constantly running problems through it, okay, trying to figure out what is going to be the next block that needs to be added, okay, into the hash, etc. Okay, and these computers take up a lot of power. Okay, so consensus of it, 51% of the network must agree on the truth. Okay, hacking it requires impossible amounts of energy that just doesn't exist, because it would have to go ahead and determine and calculate so many different type of numbers and transactions in order to see what next block would even have to be added into the equation. Okay, so mining is how Bitcoin is generated, okay, and not by pickaxe mining. Okay, so check it out. Just like we know diamonds and gold, you need like an actual pickaxe or a drill, etc. Okay, and then people go out there, find it in the caves. Bitcoin works a little different. Okay, the computers have very powerful graphics cards and intensive hardware inside of them. Okay, and what they're doing is that they're solving problems constantly. Okay, so it's answering like 2 + 2 and trying to find the equal sign. Okay, testing out every math puzzle. Okay, trying to find the next block. Okay, and when you do that, okay, you get rewarded with Bitcoin. So that's how Bitcoin is created. People have powerful computers that take up a bunch of energy, okay, which is why it can be expensive to mine Bitcoin as well too. And then those computers are trying to solve complex problems. Once those problems are solved, then the miner is then paid in Bitcoin. And that's just how it works, and that's how Bitcoin is created. So let's go over the big three, right? The big three. So the big three are going to be Bitcoin, okay? You're going to have your Ethereum and Solana, and then you're going to have your stable coin. So let's jump into each one of these and break it down. So you're going to have your Bitcoin, okay? Bitcoin is going to be the most valuable cryptocurrency as of today's date, due to the fact that it's not infinite, okay? There is a limited amount of Bitcoin. There's going to be 21 million Bitcoins available. It is not an infinite cryptocurrency such as Ethereum, Solana, etc. Okay, so that's why Bitcoin right now is the most valuable cryptocurrency. Okay, it's slow, secure, and most importantly, scarce, giving it baked value already. And it's not for buying coffee, okay, but you can if you want, but it's for preserving wealth over decades. Okay, so think of it as digital gold. So understand that Bitcoin is here to fight against inflation, because if these dollars keep going up, say 10 years ago, right? Say rent was $700 at one place, okay? And in today's day and age, say the rent is $1,400, okay? That means that the rent doubled, okay? but did people's income double? Okay, that might not always be the case. So when you park your money into an asset, something like cryptocurrency, okay, year after year after year, your money's going to grow just as inflation decides to grow too. So it's going to give you a hedge against inflation and being able to protect yourself from the economy going in a downwards direction, inshallah. So let's talk about the smart contracts. So just like we talked about, Bitcoin was created by computers that use power, okay, POW, proof of work, okay. Ethereum was created based off of staking, okay, POS, okay, which is going to be a lot less economy taxing system in order to create cryptocurrency. So pretty much Ethereum came out to prepare for when Bitcoin does go away, okay. So the computer, okay, it's programmable money, and apps like DeFi and NFTs are built on top of these, okay. Think iOS or Android. And for Solana, the reason why Solana is going to be really important too is because it's going to be used in order to trade meme coins, okay. I'm sure you guys have heard of that. And meme coins can't be traded until you have Solana first. And then you're going to have utility and stable coins, okay. So this is kind of going to be like the fiat currency version of cryptocurrency. So instead of parking your money into a token or coin or something like that expecting some profit returns, okay, stable coins such as USDC stay at $1, giving you a safe place in order to park your money in the cryptocurrency world without it fluctuating up and down all the time. So utility tokens like Link provide data feeds, and meme coins like Doge are communities built on certain factors, okay. So figure out what you want to invest in, figure out what works for you, and let's go and let's keep going. So whenever you start trading cryptocurrency and you generate a wallet on whatever broker you choose, okay, you're going to get a 12 to 24 word phrase. And this can be used to log into your account. So if you don't want to sign in with a usual email and password, because you know those can get hacked, etc., okay, you can use a seed phrase. Okay, it's going to give you 12 to 24 random words, and you can keep these words safe in order to get back into your account. So with cash, say the problem with that, you know, if you have a bunch of cash stashed in your house, it can get moldy, you can get robbed, the house can catch on fire, etc. A lot of things could happen to cash, okay? But with your cryptocurrency, it's like keeping your cash, but digital, okay? And it's not behind a email and password, it's gonna be behind your seed phrase, okay? So you can write your seed phrase down, okay? It's gonna be 12 to 24 random words. Make sure you write them all in a row, okay? They're gonna be listed like 1, 2, 3, 4, 5 to 12 to 24, etc. Okay, so make sure you have the order correct, because that definitely does matter. Okay, try and write your seed phrase on a piece of paper, a notebook you have, whatever, okay, and never screenshot it. Okay, never screenshot it. Okay, Apple, people can get into your iCloud, and then people can get access to all of your funds. Okay, try not to type it onto a online computer software, like no Google Docs or anything like that. If you do, try to just keep it on a flash drive. You can do like a notepad .txt file, something like that, and you could password protect it with 7-zip, WinRAR, anything like that too if you want it as well. Just try to keep it as secure as possible. So if you lose this, your money is going to be gone forever. Okay, no support desk can help you. Okay, it's just going to be gone, out of existence. Okay, and it cannot be recovered. So make sure you guys are keeping your seed phrase secure. Keep it safe, because this is going to be your longevity. This is going to be your money, and this is what's going to take care of you. Okay, you guys don't want to be losing this. Okay, inshallah. So let's talk about the trade-off of everything. Okay, let's talk about CEX versus DEX. Okay, so CEX is going to be centralized. Okay, so whenever you're thinking CEX, think of the normal traditional bank system. Okay, so pros, right? You got some easy customer support. It's pretty easy to get your money back whenever things happen, but there's also going to be things that come into play. Okay, sometimes you might have random 3 a.m. maintenance. There's been times where my crypto had to come clutch because my centralized bank is doing maintenance. Okay, but my cryptocurrency was available, thank God. Okay, there's also been times where your funds can be frozen. Okay, and there's also going to be that Monday through Friday window in order to get paid. Okay, so times correlate versus when you get paid. On the decentralized network where cryptocurrency is traded, doesn't matter. Everything is based on the peer-to-peer transaction system. Okay, if I send 10K to somebody, it'll most likely be in their account within a couple, or their crypto wallet within a couple of minutes or hours. Okay, if I send someone 10K via wire transfer, okay, it would have to be via Monday through Friday, okay, and it would have to hit at like 6 a.m. or like 9 a.m. or something, some time like that. And keep in mind, the centralized bank, if they wanted to, could completely decline the transaction. Okay, decentralized, everything is peer to peer. No one can decline anything, but no one can also recover your mistakes if you make any. So it's decentralized, okay, giving you total privacy. You keep custody, and instant swaps are going to be available. But understand that there's no customer support. Okay, if someone says, yo, send me 10K Bitcoin, and you send them Solana, that's it, man. Okay, you have to understand that that's it. So there's an extreme responsibility. So make sure you guys are staying humble. Make sure you guys are staying focused. Make sure you guys are waking up and praying to God, most importantly, and keeping your head on straight. Okay, you don't want to be having a moment of franticness or having bad mental health and making an accidental decision where you just lose all your cryptocurrency. Okay, please don't do that. And let's talk about what gas fees are. Okay, and I'm not talking about gas that you put in your whip. Gas fees are going to be every transaction that has a tiny fee attached to it. Okay, that's going to be a gas fee. Okay, any crypto transaction that has a fee attached to it is a gas fee. So on Ethereum, this can be like $5 to $50. On Solana, it could be like 0.0001. Okay, so your gas fees will go ahead and fluctuate depending on what asset you're buying and purchasing. So let's talk about the dangers of everything, okay? We want to make sure we're being as safe as possible. So the fat finger error, this has happened to so many people, okay? If you send Bitcoin, okay, but then they're asking for Ethereum, it's deleted forever, or some random person is going to go ahead and get the money. Okay, crypto transactions are completely irreversible. Always send a small test amount, especially if you're sending big amounts, okay? If you're about to send 10K, see if $5 goes through first, okay? If they get that, then go ahead and send it again, okay? Take your time. Do not make fast, overzealous decisions, because you can very quickly destroy and lose all your crypto value on accident too, is really the crazy thing, okay? So if you want to trade cryptocurrency, you say you're ready to be your own boss, be ready to stand on business, CEO. Okay, you got it. I believe in you guys. Manage your currency well. And social engineering. So hackers won't break the blockchain. Okay, what they'll try to do is trick you. Okay, they pose as support agents or send fake website links. Okay, or what they'll try and do is be like, oh, here's a 12 to 24 seed phrase, word seed phrase, and you can come in and try to log in and you'll get all this money. What they want you to do is deposit into that account. They have access to it, and then they go ahead and clear the account. Okay, do not log into anybody else's crypto wallet. It's not worth it. Stay logged in on your wallet. Stay focused on your bag. Don't try to rob nobody. Don't try to get no money from nobody else. Stay focused on you and yours and what God has planned for you. And bear markets. So crypto sometimes has winter cycles, just like the stock market, where prices can drop 80% for certain cryptocurrencies, especially if they're not valuable, and stay down for years. So only invest money that you can afford to lock away for plenty of years, okay? You should be on the brink of almost death before you pull out your money from your cryptocurrency wallet, okay? Try not to pull out your crypto wallet. Try to live off your credit card, okay? And invest all your cash into assets if possible, inshallah. So the psychology behind everything, okay? So time in the market, okay, is going to be a lot better than timing the market, okay? So many people are trying to time the market for exactly what it is every single time. But understand that sometimes you just got to be in the trade for some time. Some of you guys are closing your trades way too early and wondering why you're not profitable at the end of the year, okay? You need to have your life together outside of the markets so you can actually sit on your plays for some years and build some actual capital. So don't buy at the top. We're going to go ahead and go over some chart work too at the end of the presentation, just so I can go and let you guys know some quick sauce. So try not to buy at the top of all-time highs, okay? Wait for market to dip down, okay? And then catch the sweep back up, okay? But do not buy at all-time highs, because a lot of the times you're just going to go ahead and eat a pullback straight down. So the DCA strategy, DCA stands for dollar cost average, okay? So you can go ahead and set up an auto buy. You can set up a certain amount of money per week too if you wanted to, And even if you did buy at all-time highs, because your cryptocurrency is really going to be more like savings more than income. Yes, you're still going to be making great income after the years do pass, inshallah. But for the most part, it's really going to be more of your savings. So even if you did buy at all-time highs, you can have that consistent amount that you're constantly investing in. Okay. I don't care if you do $50 a week, $20 a week, $500 a week. Just choose whatever's comfortable with you for your income level. Okay. And come back in 5 years. Okay. And I'm telling you, most long-term investors who don't even look at the charts outperform 99% of day traders. Okay. And that's a very, very, very true statistic. And you guys are going to be able to touch millions, okay, if God wills, without stressing yourself out by just making the right play, by just watering your seeds today. Okay. So start growing your account, be patient, and keep going. So here's some golden rules for cryptocurrency. If it's not your keys, it's not your coins. Okay. If you have your cryptocurrency parked into a broker that's email password and doesn't have any recovery keys or secret keys, it's not really your cryptocurrency coins. If the broker shuts down, then boom, it's not really your true crypto in your hands. So I recommend like Phantom Wallet or anything like that, where you guys can digitally store your crypto very, very safe. You can also store them on a hardware physical device as well too, where it be the USB drive or whatever. And the golden rules of everything, right? Never share your seed phrase. Okay, your seed phrase is going to be that 12 to 24 word phrase. Okay, that's going to go ahead and keep your account locked. Okay, you do not want to be giving out your seed phrase. Okay, you lose your seed phrase, things can get difficult. Okay, no customer support you can call to just get your money back. So ignore direct messages. Don't log in with anyone 12 to 24 word seed phrase thinking that you're going to get money. Stop. Okay, purge any type of mindset where you're thinking about stealing or getting quick, easy money. Purge that. Okay, invest only what you can lose. Make sure you guys are paying your bills first. Don't think you're about to invest in a cryptocurrency and you can ignore all your bills because you're about to hit the best play ever. That's not how a real investor would play. Okay, structure your life, get it together, and then come onto the market. Okay, and do your own research. Okay, don't just get in because your friend said, yo, this is going to be the best coin ever. Don't do that. Okay, because then you're not going to have enough conviction and confidence to hold through volatility. Okay, if this is the play you've been researching for weeks, month after month after month, if price dips, you're going to have so much conviction and you might even re-add. Okay, so it's going to be a lot of things when it comes to buying cryptocurrency. So let's go in how to read the chart. So reading the chart is going to be quite simple. What we're going to do is focus on our higher time frames. Okay, so what I'd like to go ahead and do is go for my monthly time frame. Okay, then from there, I'm going to go to my weekly time frame, daily, and then 4 hour. Okay, so we're going to go from the monthly to the weekly to the daily to the 4 hour. Okay, and when we do this top-down analysis, we're going to be able to get the full bird's eye view of absolutely everything, just so we can see the full perspective of the market. So always start off on your highest time frame first, then scale down. Okay, and the smallest time frame I'm going to go to look at the cryptocurrency chart is going to be the 4 hour chart. Okay, because cryptocurrency you want to be holding for weeks, months, and years. So focus on your higher time frames. There's no reason why you should be caught up on the 5 minute, 1 minute, 15 minute trying to trade cryptocurrency. It's not the wave. You need to have the full higher time frame picture so you know how many years, months, weeks to hold for, etc. Also, before we get into the chart, understand that cryptocurrency always wants to go in an upwards direction. Okay, most people can only buy, and this is the same thing for stocks too. Most people can only buy. Okay, most brokers don't let people short cryptocurrency, etc., unless they're trading crypto futures. So the fact that most people can only buy means that it's meant to go up year after year after year after year after year. Okay, so we do not want to be buying at all-time highs if possible. Okay, so what you want to do is wait for what's called a pullback. So pretty much buying anywhere other than all-time highs. So all-time highs is going to be up here at this current level of 126,000 right now at the time of this recording. I'm on my monthly time frame. I can see on the monthly time frame this chart goes up year after year after year after year after year. This is a bullish asset. So I'm going to go ahead and go to my weekly time frame. Okay, and I understand something about the market. I know market always wants to go in an upwards direction if the asset is going to be valuable, okay, which means people are always going to be looking for an opportunity to buy, okay, because they expect for it to go up year after year after year after year. So with that logic, I know that price always wants to go and head to break previous all-time highs, okay, that way it can continue to keep going, okay. You can see all price does is break all-time highs, okay, and then it'll go ahead and fall below it, okay, and then make some new all-time highs, okay, we'll fall from there, and then one day, inshallah, we'll try and get above this all-time highs too, okay, and then we continue to go in an upwards direction. But within the chart, we have to understand that price has to go up in order to go down, and price has to go down in order to come up, okay. So price will always hunt an area of resistance above current price, or it's going to go ahead and hunt an area of support above current price, okay. So always know that, okay, price will always hunt an area of resistance above current price or an area of support above current price. So the strongest area of resistance on every chart is going to be all-time highs, okay. So you want to also be focusing on things that trend too. So if I'm looking at Bitcoin here, okay, I can see Bitcoin goes up year after year after year after year after year. If it's not trending up year after year after year after year after year, it's a lot of the times it's going to be a lot more straining to make some profit within the decade's time span, okay. So next thing you want to be looking for is the V structure, okay. So all your setup should look like a V. So here's what I mean by this. So the reason why I say the V is because market will always make the left side of the V for you, okay. The left side of the V is going to go ahead and be what's called resistance, okay. So whenever you see market falling within a downwards direction, that's going to be called resistance, okay. So market will always make the left side of the V, okay. It'll always make the left side of the V, and it'll also make the bottom of the V. So many people try to predict where market wants to bottom out at, and here's how you know if the true area of support is real, okay. Make sure you're on your weekly or your daily time frame, okay. And then from there, once you see market deciding to curl in an upwards direction after falling heavily, okay, how you confirm to see if the V is real. So here we have the left side of the V, okay. We got market trying to make a bottom of the V here, okay. But we want to see if the right side of the V is real, okay. So the whole right side of the V, all this whole gap up here to the previous area of resistance is going to be money that we're just waiting to collect, okay. All of this is just going to go ahead and be money. So all your setup should look like a V, okay. Try to buy when market is curling in a upwards V direction, okay. All your setup should look like you catching the right side of the V, okay. So that's how you know when it's time to buy. Try to buy at certain lows, okay. Let market make the left side of the V, and let market make the bottom of the V, okay. Let market make the left side of the V, and then let market make the bottom of the V. After you're on the daily, you start seeing like 2 to 5 candlesticks going in upwards direction, okay. That's how you know the support is true, okay. You don't want to just see one little wick, okay, and see it going up and be like, oh my gosh, it's going up from there. But if you see multiple days in a row, okay, price heading in an upwards direction, the chances of this support holding is going to be really, really high, okay, especially after it dumped down for many, many, many days, okay. So cool. So that's going to be the full guide on how to trade cryptocurrency. If you guys want some more one-on-one mentorship, head over to Stackmode.net. Come on and book a free call, or you can check out my free course and ebook. Stay prayed up to God, keep grinding. I'm going to catch you guys in the next one. Let me know what you think in the comments below. Peace.
Guys, what's up? God is good. It's a beautiful day. We in the coop, hanging out. Alhamdulillah. So, I want to tell you guys, it's a little deeper than just trading, okay? You can't just trade and just live off of your trading income alone. It's not good. It's not healthy. It's not healthy for, one, your mental health. It's not healthy for your pockets, too. A lot of people might ask me, Chris, why don't you just survive off your trading profits? One, I would probably go mentally insane. I wouldn't go insane, but what would I do all day if I couldn't coach, if I didn't do the thing or teach the thing that I'm just so passionate about, that I love, that pulled me out of depression, that pulled me out of a hard time? I'm not just gonna let that go because I'm just making good income and I can provide for myself and my family, thank God. You know, I want to do more. My soul wants to do more. As I mature, I'm 22 now. As I mature, I realize it's a lot more things to life than just money, of course. And I feel like I've always known that, of course, God, family, but I'm realizing that my soul and what I want to do to help the world is what really matters. So I want to tell you guys that if you have a business idea, if you have anything that you're passionate about, if you have anything that you're really good at, teach somebody or help somebody by developing a product or coach somebody. Do something so we can just all be better on this earth. You know, it's not just about money, competition. And, you know, I'm an extremely competitive guy. It's just something God put in me. But still, I'm starting to realize that the world is about, one, worshiping God, and two, it's about helping one another. Of course, you're going to make some money through the process, inshallah, if God wills, but it's deeper than that. Yes, you got paid to coach somebody, but now that person has a lifelong skill. Now they can put food in the refrigerator for their family because of what they learned. You know what I'm saying? So it's deeper than just money and competition. So I'm just going to be going 100% on stack mode. You know, I want more books out for you guys, more audio books, and I'm going to just branch everything together. You know, everything is a big oak tree. So trading, you know, I like it to be my base, but then you're going to have the branches. I have business, other things I talk about. Fitness is involved with it. I want to write a book and tell you guys about the herbs that I use every single day, water that I drink, how I work out Monday through Friday as consistently as I can. You know, the clothes, how taking care of yourself and following God's rules, most importantly. It's the most important thing. You follow God's rules, you'll live a really good life. Inshallah, you'll live a really good life if you follow God's rules. I truly do believe, and your soul will be fulfilled. Try hard to get married. You know, I'm married, and if you guys can just find somebody you can worship God with, settle down, get yourself a house, and really build a life with, it matures you. It teaches you a lot. And I want you guys to grow your business because you can't have your family's hunger, right? Your family's mental health, whether you're thinking about a roof over their head and stuff like that, in a job's paycheck cycle, right? Forever. You can. Now, if you have a job right now, run up that money, do your thing. But if you have a real talent and you're passionate about it, you have to get it out there so you could help the next generation, a wave of people. I'm going to die. Okay, I'm very aware of that. So this is why I try and produce the content I can. Yes, and thank God, God is so amazing that I can make money during the process of this, but I can help other people too. So that when I die, people are still going to be able to feed their families, inshallah, off of this content that I produced here. So we have to put a lot of things into perspective, and we have to ask ourselves, like, what's holding ourselves back? Is it the people around you? If you're in college or something like that right now, I'm not saying drop out. If that's what you really want to do, then do it. But are you in college because you were influenced by your parents, grandparents, something like that? Maybe you didn't want to disappoint somebody. But you have to ask yourself, ask your soul, are you disappointing yourself by doing these things? Okay, you don't want to be disappointing yourself. You got to start putting more focus on your mental health and what makes you happy as a person and a human being. Okay, we're here once on this earth. Why are we putting so much faith and trust in the system instead of God? Don't do that. Don't do that. You want that stable paycheck. You think it's stable. Whole time, boom, as you can see with the government shutdown, they clip, fire. People just lose their jobs. Okay? I've worked with people where people just got let go of their jobs. People got bills to pay. People got debt. all kinds of stuff like that. So if you love your family, get out there and really put your passion out there in the world. We are here one time on this earth. We can't be sitting around wasting time when we don't even know if we're going to wake up tomorrow. It's a blessing that we woke up today. If you're playing video games, hop off of that. The game is here. The game is here. You're your character. Level this up. Level this up. I'm talking to myself as I talk to you guys too. Level this up. Level up your character. Hop off the game. Start creating. We got to start helping each other. People want to complain about the world. Oh, the world is X, Y, and Z, but we're not out here helping each other. And I don't want to be a part of that cycle anymore. So I'm done suppressing myself. I try and go as hard as possible for you guys, but I feel like I can go harder. And my soul has been disappointed recently because I feel like I haven't been giving you guys as much fruit as I can. I don't want to hold in the business stuff that I know. Making the website. Making 4 to 5 figures during business or just online in a short period of time. I want to help you guys get paid off of YouTube so you guys can spend time with your wife, spend time with your husband, spend time with your kids, your mom, your grandma, cousins, your family, your close friends, whoever. I want you guys to have that time. And it's really important that I teach you guys the ways and the things that work for me so we can get this money. You might even be able to do things better than I can. You might be really good at making seasonings. You might be really good at playing tennis. You could be one of the best tennis coaches right now. Teaching plenty of kids. Making the next superstar. You never know. And then you're going to be sitting down like, yeah, like, I made that guy. Like, not you made him, but like, you helped him get there. You taught him the sauce in the game. And even though you're not the one playing, your soul will have that satisfaction. You'll be happy that you have participation in greatness. So forget the money and understand that you have to participate in greatness. Don't just rely on your trading income. Go harder than that. We got people out here that are depressed, sad. Sadly, suicide rates going up. May God grant them ease. Okay? Me personally, and may God bless their hearts, I've had friends who I've sat down and ate food with who are no longer here on this earth. Okay? Due to mental health issues, jump into things like substances and stuff like that. Okay? There's things that I've struggled with. And this is why God has really saved my life. There's things that I've struggled with. Okay? Off camera. I'm not here to show you guys glitz and glamour and cars and trading and this and this. Life is not about that. I want to be a real person and show you guys the real things about life. There's times I go through depression, anxiety. Okay? There's times I feel fearful of things. Even though my income is straight, there'll be things outside of trading, outside of money that are stressing me out. Okay? So, ask yourself, are you happy? Is your soul happy? And I'm telling you guys right now, the money will not make you as happy as you think. I'm telling you. If you think that the money will make you super duper happy, you're wrong. Okay, you're wrong. Yes, your problems will be relieved for the most part financially. You're not going to stress about that. And that's a beautiful blessing. Alhamdulillah. And you can take care of the ones around you. And you can have fun. So it's super duper beautiful. I'm not saying it's not beautiful. I'm not about to lie to you guys. It's definitely beautiful having money. It's way better to have money than to not. But all your real life problems, let's say if you struggle with things like lust, okay, you're just going to go ahead and use that money and indulge more into your lust. If you struggle with substances, then you're going to use that money and get more substances. If you struggle with materialism, you're going to get more money and buy more stuff that's not asset related. Okay? So we have to ask ourselves, are we doing this for God? Or are you doing this to please people in the world who don't really care about you for the most part? So stay prayed up to God. Keep grinding. I'm going to catch you guys in the next one. I got some work to do. I love you guys so much. Head over to stackmode.net. Just wanted to give you guys a raw talk. I don't really care about numbers or anything. I'm just going to upload as much as I want. Pump as much content as out there as I can. I don't care who sees it. I don't care who doesn't. I just love you guys so much. And this makes my soul happy. Talking about life, talking about the charts, talking about income, getting this income. I love it. And I want to help you guys too. Stay prayed up to God. Keep grinding. Just get out the darkness. Jump into the light. Put the past behind you. And go forward, man. Or woman. Catch you guys in the next one.
All right. Discipline in trading is the ability to stick to a well-defined plan, manage your emotions, and follow your risk, even under pressure. So even if you're performing extremely well, you're in your bag, you're making bread, it's really important to always stay humble, okay? Know what we're doing and stay focused on the system, okay? If you're a break and retest trader, you stick to that. If you're a breakout trader, you stick to that. Whatever you were doing to get you to that bag, you can't change it up. You shouldn't switch it up, and understand that consistency is going to be the most important aspect of where we're trying to succeed at. So consistency is going to come from treating trading as a business and not a gambling casino, okay? So when we're treated as a business, we're understanding that the goal of a business is trying to use our money to make some more money, okay? So you're going to be putting your profit away, breaking your profit down, and understanding like, okay, I'm not just going to go ahead and withdraw and go blow all my profits. Let me withdraw a percentage of my profits, keep some in my account after wins, and let me go ahead and invest into certain things like long-term plays, like crypto, shares plays, okay? Invest your money into making more money. Being structured and disciplined is going to take a lot of pressure off of you over time, okay? The more disciplined you are today, the easier time you're going to have in the future, inshallah. So create a rule-based system. So whatever you like to trade, whether it's break and retest, breakouts, know what criteria you're looking for. Break and retest, for example, okay? You're going to be waiting for an area of resistance to be broken and then turn it to support, okay? Or if you're going to be waiting for support to be broken and turn it to resistance. Or if you're a breakout trader, make sure you stick to your 4-hour close rule, okay? Depending on what type of trader you are, follow your system. And your emotional control is also going to be a big factor in real life and the charts too. Avoid impulsive decisions driven by fear or greed or just any type of idiocy. Okay, we're all humans. Sometimes we all make mistakes. There's plenty of times I would make impulsive trades, okay, causing myself to just lose. But then I realized, I'm like, you know what? This isn't going to benefit my future. This isn't going to feed my family. This isn't growing my account. I can't be making mistakes like this, okay? And over the years, things got a lot cleaner and was able to just finish off the years profitable. Alhamdulillah. So risk management, okay? Stick between 1 to 10% of your account per trade. This way, you're not going to be able to blow up your account in just a couple of trades, which can be detrimental. Okay, there's times I put in a whole check and destroyed it in one trading session, okay? And I don't want you to go through that. And this is why you need to have your trading plan in place, because no one can stop you from clicking buy and sell, okay? You're in full control of absolutely everything when you sign up to be a trader, okay? So it's a great thing, but it can also be a bad thing too if you lose yourself. So stay focused, okay? This is why God is really going to be important too, okay? Keeps us humble, keeps us disciplined, keeps us focused. Okay, so if a disciplined trader runs up a bag and they stop hitting certain trades that they want, okay, they might get emotional. They might be like, what? I was just winning for a whole month. I was just hitting every single trade. How am I losing? Okay, taking multiple trades a day, oversizing, trying to make some money back. We can't do this. We can't lose ourselves due to ego, due to any type of emotions that we're feeling. Okay, we got real people to protect and provide for. Okay, we can't fail. Okay, and failure is just not going to be an option, especially when we're going to hop in on the charts trying to succeed. So let's be structured, let's keep ourselves together, and let's keep ourselves composed. So why discipline is going to be your shield? Without discipline, traders risk wiping out their accounts, and discipline protects you by enforcing structure and rationality. Okay, when you know what you're trading, okay, you know, okay, I know why I'm trading this. Okay, this is going to be a good investment because of X, Y, and Z, fundamentally and technically. When you know where you're going to trade, okay, when you know where your entry is, when you know why you're going to enter the trade, it's going to be an important piece of succeeding, okay? Making sure you're not doing absolutely anything on the block is going to be a big part in whether or not you succeed in trading or not. Why am I closing at this place? Why am I entering at this place? What are my parameters, okay? And keep yourself on a strict structured plan depending on whatever you play. If you're a crypto trader, okay, focus on how you want to trade crypto. If you're a forex trader, focus on how you want to do that. For stock traders, etc. Okay, be the best at whatever sector that you trade in. Play whatever strategy you like to play, okay, and become the master of it and stick to it. Find your consistency, okay, whether through paper trading on your actual account. Once you find that edge that you like personally, whether it be a break and retest, breakouts, whatever, stick to it. Journal each of your trades and stick to it. Stick to it. Over 90% of normal traders, retail traders, non-hedge funds, or large bodies of money pulled together, included just individuals, lose money due to a lack of discipline. Okay. And discipline prevents catastrophic losses from overtrading or ignoring stops. Okay, it's like real life. For example, when you're putting money away in your savings account, if something hits the fan, you're going to be good because you were disciplined. Okay, you were holding back from certain things that you wanted to buy immediately. Said you were in stack mode, you were staying down, putting bread to the side, and you were growing your wealth. Okay, and you were able to handle situations if something were to happen. And emotional stability, it keeps fear and greed in check, reduces panic selling or FOMO buying. Okay, panic selling can sometimes happen. Let's say you're up in a position. If you don't know where your stop loss is, which is an area where you should exit your trade, then that can be a problem. Okay, if you don't know where you want to close your trade, which is an area where you want to take your money, your take profit, that can also be a problem. Because if you're getting reversed on at a place where you should have already closed, then you might just close at a loss, and then price might break it out, and then you might be emotional, like, oh man, price stayed up in the same place. This is why it's important to have a strategic plan. When you have a strategic plan, you know where you want to buy, you know where you want to exit, etc. That type of stuff just does not happen. And disciplined traders with stop losses exited early, while others held losing positions, losing 50+% of their account in a single trade because getting emotional. Okay, so if price hits your stop loss, you gotta close. You just gotta close. Okay, there's no finite, no nothing. If price hits your stop loss, that's it. Okay, that's it. We're gonna be on to the next trade. Okay, God is good. Just grateful we had the opportunity to even put down some size in the first place. And we're going to come back stronger. Okay, just come back stronger. That's it. That's all we can do. Some common ways that traders destroy their accounts. Undisciplined behaviors can lead to account blowups. Let's talk about some dangerous pitfalls. 1, over leveraging. Okay, over leveraging, putting on too much size. Okay, playing with too much money and using excessive leverage or margin can amplify losses. So for example, 100x leverage, and leverage is going to be when the market makers or whoever you're trading on with the broker is going to give you pretty much money to play with as long as you meet a minimum amount of money. Okay, so you can in turn play with like $100 margin, but you're playing with like $10,000 worth of size, for example. Okay, but if you're not careful with that, it can wipe out your account in one move very significantly and quickly. And revenge trading can happen. So that can double down after losses to recover after a decision like that. Sometimes traders can double down, okay, putting on more size than usual. Be like, you know what, I'm trying to make this back and be on the profits. Let me put on the size. Okay, then it just leads to gambling in a downward spiral, all because you got into an emotional situation, you lost your discipline, and you lost your footing. And holding losing trades, hoping for a rebound. And chasing hot trends without research. For example, buying meme coins at peaks during the 2021 bull run. And excessive trades increase feeds and emotional fatigue. Discipline counters these by enforcing rules and limits, keeping yourself structured, and making sure you don't lose yourselves. And building a disciplined mindset. Discipline starts with mental preparation, and you can help cultivate habits to stay focused and rational. And sets you clear goals. You can set realistic targets. For example, 1% monthly returns with like a 5% drawdown. Okay, so don't just have straight profit goals though. I recommend just trading. Okay, it's really just going to help you just grow your structure over time. And routines. You can begin each day with market analysis and trading checklists. And for example, you can review the news and technicals for 30 minutes, see what's going on within the markets, be hip, get updated, and do your thing. And continuously learn. You could read books like Trading in the Zone by Watchlist, Stackmode Network for key steps of probability. It's going to be a lot of books you can go ahead and check out to go ahead and get informed too. Okay, and accountability. Accountability is going to be extremely important. Okay, be accountable for whatever you do. Okay, if you make a mistake, own it. Okay, if you like, you know what, I overtraded today. Not, no, the market's a scam. The market's didn't know. The market didn't do anything. Okay, if you made a mistake, you gotta own up to that. You gotta take it to the chest, and you gotta really let yourself progress from that mistake. Take that loss as a lesson, and then go ahead and progress. Go forward. So risk management is going to be your first line of defense. Risk management is discipline and practice, and it ensures that you never risk more than your account can handle in the first place. Never trade with rent money, grocery money, or any type of bread that you're clenching your butt cheeks if you lose. Okay, just don't do that. Especially if you're a beginning trader, risk only 1 to 2%. As you get better, then it's going to be 1 to 10%. And always set a stop loss if you're a futures or forex trader as well too, due to the fact that you can get margin called, and if you lose money on the margin, you can get sued by the broker. So be careful with that. Options, your stop loss can be the contract, so it's a little different. So diversification. Good spread risk across different assets to avoid single point failures as well too. And a risk to reward ratio. You can aim for 1 to 2 or better. For example, you can risk $100 to gain $200. So that's a 1 to 2. 1 to 4 is you risking $100 to gain $400. Okay, so things like that. So you can also backtest strategies in the worst case scenarios too, like certain crashes, and see how the market developed during there too. See how people bought the dips and see how the market trended afterward. Risk management prevents a single bad trade from wiping your account, even if a crash and stuff like that happens, or bad news and stuff. Okay, so choose what you want to do. And crafting a bulletproof trading plan. Trading plan is going to be a roadmap to disciplined trading. Okay, you can write it down and follow it strictly. Okay, make sure you have your entry and exit rules once again. Okay, define your clear signals. No, you know what? If I'm a retest trader, I'm going to wait till resistance gets broken and turn it to support. And then trading hours. Okay, you can limit trading to high focus periods to avoid fatigue. Okay, or set your alerts. Okay, set your alerts on your phone at your levels that you want to play, and then you can go and get in your trades just like that. And track your performance too. That's going to be important and imperative to succeeding. Track your performance on Discord or journal or whatever. And don't deviate from your trading plan. If you hop into a trade, don't go try to hop in something else immediately. Okay, take your time. Okay, be structured, be disciplined. If you tell yourself, you know what, I'm going to take these type of trades, then take those type of trades. Okay, don't deviate outside of the plan. And there can be some updates in your trading plan too. If you notice you're just losing consistency, okay, be like, you know what am I doing wrong? Okay, but once you catch your edge, once you catch your consistency period, okay, you're good. Stick to that. Do that over and over again until you never trade again. Okay. So if you feel like you're about to crash out, if you feel upset, that can really derail how you feel. Okay, your discipline, and that can definitely derail your P&L. Okay, hop off the charts. Okay, you can go pray, be grateful that you can just make money by clicking buttons and looking at a screen in the first place. Okay, you're good, you're blessed. Okay, you're blessed. Understand that you're even blessed to even have internet and have an opportunity to just make money virtually. Okay, people back in the day used to have to slave, move rocks, all types of stuff. Okay, so just be grateful in the first place and put a timeout. If you got to take a week from trading with actual bread for a week or two, do that. Okay, go paper trade, sharpen your edge, journal, take it serious still, and let's see where you're at. You can also use trading bots to enforce rules on certain platforms too, okay, like Binance. And you can join trading communities to share certain experiences. Yeah. So journal. Okay. Apps like the Stackmode app, which is going to be coming out soon, or Edgewonk, Notion, Discord, notes on your phone. Okay. In-person journals. You can go ahead and journal every trade, and that builds accountability and reveals patterns to strengthen your discipline. What you want to log is your entry and exit prices, rationale, emotions, and your outcomes. Okay. And do weekly reviews. Check everything out. Identify your undisciplined trades. See what you did wrong. See how you could have learned. Okay. And see if you took any trades outside of your plan. Calculate your win rate. Okay. See how much you win. Okay. If you're noticing that, okay, I have a 90% win rate. It's not meaning increase your size significantly. Okay. Just take your time. Be patient, and let's just stay locked in. Don't P&L trade and get averted from the plan. Okay. See how much you lose. Okay, if you're losing extremely often, see what you're doing wrong. See if you need to change your edge and stuff like that. If you notice you're too much on the smaller time frames, then go to the higher time frames and play your edge there. All candlesticks formations still work the same. Just depends on what time frame you're on. Okay, and learn from your mistakes too. Don't crash out. Okay, every time you take a L, really take it as a lesson. Okay, so for instance, if you did overtrade, for example, don't come on the next day thinking, okay, I need to make up from yesterday's loss and make some more bread. It's a completely new day. It's a completely new day. Just run it up again, start over. And the whole reason you're in that situation is because you weren't disciplined in the first place. So fix your discipline, get restructured, come back stronger. So disciplined traders with stop losses preserve capital, while others lost 70% holding through the dip. Okay, so stop losses, especially for futures and forex, can just prevent you from getting margin called, owing the broker money, or going through any hard financial situation, sending you back further from running it up. Okay, so set your stop loss, play wisely, be aware of margins, and be careful for news too. If you're a futures or forex trader, when news comes out, your margin can go ahead and increase, so be aware of that too. And don't chase and copy trade other people too without understanding. Okay, if they're dropping informed notes and stuff like that in the signal channel, that's fine. Okay, like when I give my signals, I always try to make sure I give you guys timestamps, reasons why, because I don't want you guys to be trading the signals forever. Okay, I want you to eventually get off of that. But disciplined traders like to just copy trade people without any correlation or understanding, and you can really lose some bread like that. Just because someone put bread into a position doesn't mean that they're going to be a solid or disciplined trader. Okay, causing you to lose big, and that's definitely not what you want. So discipline prevents emotional decisions that destroy your account quicker than it definitely needs to be. So instead of you growing money positively, having a positive APY, annual percentage yields per year, you're destroying your account, destroying your future. Okay, and it's not worth it. It's not worth it at all. Okay, don't put yourself in debt. Don't set yourself back. Don't destroy the bread that you're working hard for due to emotional decisions. It's not worth it. So market is stressful too. You have the ability to also not play. Okay, you don't have to trade every single day, especially my day traders. Some of you guys think that you have to trade every single day. Not true. Don't have to do that. Okay. If market's too much, if it's not setting up how you want it to, you can hop off. Take a break. Set your alerts at levels that you think are confident in. See if there's closes at those levels and go ahead and play them. Okay, volatile markets really test your discipline the most. Okay, stick to your plan. If it's not how you want, you don't have to trade just because there's volatility and price action going on. If it's not the setup that you want, you don't have to play it. Okay, reduce your risk too. Okay, if you feel like market's too volatile, it's too much going on, you don't trust it, play with less size than you normally would have. Okay, this way you're not going to be shaking in your boots whenever size is down. And monitor the news. Stay informed, won't react impulsively. And take a step back. Take breaks during extreme volatility to reset. And there's some exercises to build discipline. Okay. Number one, write a trading plan, okay? Do that, figure out what you want to do. Paper trade if you need, journal, and go ahead and see if you can find a mentor, okay? If you need a mentor, head over to Stackmode.net, okay? See if you guys just want to talk to one of your friends who might invest, stuff like that, okay? Someone around you could talk to about trading. So let me know what discipline struggles that you face with, and we can go ahead and talk and fix all these issues. All right, guys, this is going to be the easiest way on how to read the crypto chart. So it's going to be really imperative to know how to read the chart. It's going to tell you when to exit a lot of times. So sometimes when you come into the cryptocurrency market, buying when there's a lot of hype could mean that you're buying relatively at a high price. Okay, so when we show you guys when to buy at the dips, how to know when to trim some contracts off or trim a percentage of your tokens off, and how to know when it's a good time to buy in general. Okay, so one, let's talk about support and resistance in the first place. So understanding the logic, this is a left to right chart. So price started way over here, and it's way over here today. Okay, so we can clearly see from a logical perspective, the goal of the chart is to go in an upwards direction. Okay, price year after year, month after month, even with dips, incrementally decided to keep going within a higher direction. Okay, so we can already logically put into perspective that, all right, the ultimate goal of cryptocurrencies are to keep breaking new all-time highs. Okay, because people want to invest their money and make their money by buying and holding it as something that has future value. Okay. And in order to do that, price has to keep breaking new all-time highs. So let's say current price right now, as of this video, Bitcoin, it's 122,000, right? All-time highs, which is going to be the highest area of resistance, and resistance is going to be an area where price decides to fall within a downwards direction. So your highest area of resistance needs to go ahead and be broken over and over and over and over and over and over again. And that's how price progresses. Okay. So if I come over here, I can see at one point in time, the highest price for Bitcoin was 109,000. But then I can see over here to the right, price decided to get above the area of resistance here. And once again, resistance is going to be the area where price decides to fall in a downwards direction. So we can see price getting above the area of resistance here, tried to hold it, and then over here, it definitely held it. Okay, and what happened? Price decided to stop falling around this 109,000 area, and it progressed to a new area, to 122,000. And it's going to try and progress again to maybe 150,000, and so on. It's going to just keep going, maybe to 1 million. Okay, so that's how things work. So as far as the cryptocurrency market, understand that people are investing their money to make more money. So the goal of this is for it to go in an upwards direction. Okay, people are trying to get paid based off of just growth and capital gains. Okay, which means you're getting paid as something moves within a upwards direction. So resistance is going to be a really important thing to understand, especially when just coming onto the charts and just putting on certain trades, because it's going to tell you when to close too. So say you wanted to close a certain percentage of your position, then you'd be able to do that as well too at areas of resistance. Okay, so you know it's an upward chart. So you know areas of resistances are looking to be met with each other. Okay, so prices, as you can see, like this area right here, could mirror each other and do the same thing. So price came into this area once, twice, okay, and mirrored each other. Okay, once, twice. Price hit that blue line and decided to fall within a downwards direction. Okay, so that's why knowing when price is about to hit an area of resistance is going to be extremely imperative, okay? Because it's going to let you know when it's time to close, when it's time to trim some profits or anything like that, okay? So resistance, that's going to be when market decides to make a top and fall in a downwards direction. And the opposite of resistance is going to be support. So the opposite of resistance is going to be support, and support is going to be when price makes a bottom and decides to bounce within an upwards direction. So after resistance gets made, and the whole logical reason resistance gets made in the first place is because price can't just keep going in an upwards direction. People are eventually going to want to take profit and take their money, okay? So they're going to want to take their money off the table, and when that happens, resistance is going to get made. So that's why price goes in a downwards direction, okay? Because it's too much supply. It's more supply than demand, okay? And then when price decides to go in an upwards direction, there's a lot of demand, okay? There's more demand than supply, okay? Make it scarce, which is why people make money when stuff goes in an upwards direction. So that's a logical reason why support and resistance work with each other, why they correlate with each other, okay? So support is going to be when price goes in an upwards direction. Resistance is when sellers come in after holding from a while, and then they want to go ahead and sell, take some profit, and then price is going to go in a downwards direction. Okay. So we know that one, price is always trying to hunt areas of resistance. You can see on the Bitcoin chart here, we know that price is trying to hunt all-time highs here. Okay. Even no matter if price makes the most vicious dump to zero, it's still one day, inshallah, going to try and reach all-time highs. That's just how it works. That's just how it works. Okay, price is going to try and break this 124,000 level here. Okay, it's going to try and just continue to go up. Okay, and what can also happen here, so we see, okay, price is trying to meet up with the highest area of resistance to try to break it, or price might reverse here. Okay, it might reverse here, and even if it reverses all the way down there, okay, finds a low right here. Let's say support gets made right here. So even if support gets made down here, it's fine. Okay, because price is still going to try and sweep back up. That's just a better point to buy. Okay, so you know that price is always going to try and break areas of resistances. Now, due to that fact, you know that, okay, if price makes a good dip down, either A, if price mirrors an area of support and then bounces up, okay, I'm going to know, okay, that's going to be a good place for me to buy. Or if I see an area of resistance, right, get broken and turn into support, then I'm going to also know it's a good area too to buy. Okay, check out this area right here. So I can see right here, this area of resistance got created. Price decided to fall in a downwards direction. Okay, and you can go ahead and see to the right. Price decided to break out of this areas of resistance right here. Okay, and guess what? Price decided to break this area of resistance right here and turn it into support. So resistance got formed, broken, okay? And when an area of resistance or support gets broken, we know that's called a breakout, okay? And resistance, okay, an area where price fell down at, got broken through because price is trying to make some progress and keep making new highs so people keep making money, inshallah, okay? And support gets made right here. So support is going to be that area where price decided to bounce in the upwards direction. So support can be formed after an area of resistance gets broken sometimes. So sometimes resistance can be broken, but it's a support. Okay, it's going to be my favorite model. Okay, and this model is going to be called break and retest. Okay, so whenever you see resistance get broken, turn into support, that's going to be called break and retest. Break and retest is going to be just one of the surefire ways in order to take safe trades, especially when you're taking dip downs. Okay, so if market makes a dip and you're like, okay, is it going to be a safe place? Then you can go ahead and look for break and retest to go ahead and define that. And another way, you're going to go ahead and decide to see if price is going to be a good place to buy at this area, is you can go ahead and look for what I like to call support mirror. Okay. So sometimes you're going to see an area make an area of support. Okay, and then no matter what happens, even if price goes below that area of support, one day it might come above it and then bounce at the same area of support again. Okay, so if you see the same area of support get reacted off of, okay, I like to call that support mirror. Okay, support mirror. So let me go ahead and show you an example of a support mirror. Okay, this is how you know that, okay, price wants to go ahead and do the same thing over and over again. Okay, because essentially that's what price is doing. Okay, it just does the same thing over and over again. So let's check it out. So I can see this area where support was created right here. Okay, again, area of support is going to be an area where price decides to bounce in the upwards direction. All right, so just keeping it simple, we know that. Okay, price bounces in an upwards direction once it hits support. Okay. So I can go ahead and see over here to the left, price decided to create some support right here. Okay, so right here, price decided to create some support. Okay, and then blast it up. Okay, price made this area of resistance, and we're trying to make another one right here and break through it. Okay, all of these up here where price is falling within a downwards direction are going to be classified as areas of resistance. Okay, area of resistance, resistance, resistance. And we can go ahead and see down here, price is going in an upwards direction. Okay, support. Okay, down here, price going up. Right here, price going up. Okay, support, support. But we can see up here, price going down. Price going down. Resistance, price going down. Okay, resistance. Okay, so this is how support and resistance correlates with each other. And whenever you see support and resistance bouncing in between each other like this is what I like to call a range. Okay, so this area of support got created over here. The price did the same exact thing and created support over here again. That's how I would have known, okay, that would have been a simple or good place for me to go ahead and purchase some Bitcoin, for example. Okay, I saw support mirror, or if I ever see resistance get broken, okay, and turn into support, then I'm also going to know, okay, that was a really good area for me to go ahead and purchase too. Okay, so I'm also going to have this area here of resistance that got broken and turned into this area of support right here. Okay, resistance, support, resistance broken, turn into support, or support bouncing at the same place. Okay, even if it's not immediately, even if price breaks the support, but if it comes back up, bounces again at the same place, that's going to be a support mirror. Okay, so let me go ahead and cover another example here. So when we're looking at support and resistance, it's understanding the range, putting everything in the big perspective. Okay, putting everything in a logical staircase mindset. Okay, so essentially that's what we're playing when we're looking at the charts. It's a staircase, and it's just about who can read the staircase ideally the best. Okay, so take this area right here. Okay, so I marked this out a couple of days ago, and we can see it's working out now. Okay, so I can see this area of support right here wasn't just created for no reason. Okay, so I personally like to look at everything on my higher time frames too. So we're always going to be making sure we're doing everything on the 4-hour time frame, and we're going to be doing things on the daily time frame. Okay, so what I'm going to go ahead and do, get the black line here. Let me just put it down. Okay, so I like to look at my daily first, zoom out. I know I'm playing a left to right chart. The goal of it's to go in the upwards direction. So I know that price is always trying to break resistances. Okay, so my take profit is going to be all-time highs. Okay, especially when I'm trading crypto. That's when I'm going to be wanting to take some profit off or close some of the position personally. It's all-time highs. Okay, so boom. I'm going to go to my 4-hour here. And we can see price created this area of resistance all the way over here to the left. Okay, price decided to break this area of resistance. Could see price went up, went up, went up. Made all-time highs right here. All-time highs is the highest point price has ever been. Okay, and price is going to be always trying to aim to break that. So always know that within a logical perspective. So all-time highs, ATH. Okay. So ATH stands for all-time highs. So price is always going to be trying to hunt this area, no matter what. No matter how much we dump down, it's always going to try and sweep back up. And ideally, we're going to be hunting this area. Okay, because the point of these cryptocurrency tokens, the point of these investors and coders and people working so hard to get these laws passed is so it can go in an upwards direction. So not only people can make some more money by investing their money, they're going to be able to have the freedom to send money and transfer money however they would like via the blockchain system. Okay, so it has value. It's not just going up for no reason. This is something that's bringing value to the world. So understand that that's why it's trying to go up. It's not just trying to go up for no reason. Okay, now you can go ahead and see this area of resistance that I created right here. And we can see resistance got broken once again and turned into support. Okay, resistance got broken, turned into support, and then price is heading into an upward direction, looking to break the all-time highs in order to try and break that. And it might even retest off of that. It might break the all-time highs. It's a common scenario. All-time highs gets broken and turns into support for a little bit. It might burst a little bit and then fall down. Maybe try the support again. Okay. And then it might won't even go lower. Okay. It might won't even fall down to an area of support like down here. Okay. So then I might try this area here. This is why it's amazing to have all your levels marked, because then you're going to see, okay, if price wants to go down to this support and then it holds it, okay, you start seeing multiple candles on the daily. You're like, okay, cool. And then you'll catch the whole sweep up. Okay. Even right here, price created the resistance right here, decided to fall down, broke above it. Okay. Created all-time highs, and then price fell all the way down where the original resistance was, decided to turn into support, and it's heading up in a sweep. Okay, looking to break the all-time highs. So let's go over another example here. So when we're putting in the repetition, we're putting in the hours, we're putting in the work, just staring at the charts. Okay, marking out setup after setup after setup, and just having that repetition and understanding that reading dips is pretty much going to be just understanding the logic behind the market. Okay, you know why a market is dipping. Okay, when market dips, it's just creating more ammo, collecting more money, just so stuff can go in a more upwards direction with more volume and volatility. Okay, because if every it's a left to right chart, so if someone got on here and they sold up here, okay, they're not going to keep buying. Okay, they're not going to just keep buying over and over and over again. They're going to go spend their profits. They're going to go reinvest it into something else, and they're going to just take their money. Okay, so that's just how that works. So we have two examples here, right? Two very, very, very simple examples here. So support mirror, okay? So we have this triple area of, we'll say quadruple area of support right here being reacted off of, all right? So we got 1, 2, 3, 4. We got 4 areas of support here. Going within an upwards direction. Support. 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 Okay. Bounce at the same place 3 times. Okay. And we already know where it's trying to head to. We're trying to break through all-time highs. And we can even see all-time highs got tapped twice. Okay. Price came up here and made all-time highs. And guess what? Price created resistance at the same area twice. So we know that this area of resistance is definitely special. The more taps that you have of an area of resistance or support is going to be really solid. Okay. Once again, the more taps that we have of areas of support or resistance is going to be really solid. So let's make sure we always have that in the perspective. Okay. Resistance, resistance. Then we have support, support, support. Okay. We know price is trying to head in the upwards direction. Okay. Price wouldn't just be making support for no reason. It's trying to keep going higher. Okay. So just understanding market within a simple logical perspective can really help. Price is always trying to chase and break areas of resistances, okay, in order to make price go in a higher direction. The higher the direction goes, the more something's going to be worth. The more something's going to be worth, whoever the creators are and the large investors are going to get wealthier. So they want it to go in an upwards direction. Okay. And if you're a large investor, you want it to go in an upwards direction too. Okay. So people are going to buy the dips because everything is not always going to fall down to zero every time. It's not how things work, and it's just not probable. Things build value, and things are not going to always fall to zero. Okay, that's just fear, and just having fear in the market is just not something that's going to be tolerable. Okay, this is why we only fear God. Okay, and we take all the risk that we need to. Okay, so boom. Catching this support mirror would have been quite simple. Okay, and let's say you missed the support mirror. Fine, all fine. This is just confirmation that price wants to go bullish down there. But even if you wanted to wait for a dip down, you can see right here, price created this area of resistance right here. Okay, price broke above it on the 4-hour time frame here and turned it into some support. Okay. So even right here is a dip down too, okay? And then price looks like it wants to continue to go in an upwards direction still. Okay, so you can still see as you scale down too, where it's going to be a solid place for you to go ahead and purchase your contracts, okay? So buying the crypto lows, buying crypto dips and stuff like that is not going to be difficult, okay? It's just about being patient. And even if sometimes you don't get the most perfect entry, okay, because only God is perfect. Okay, so we can't destroy our investment portfolio bring about the best entries of all time too. You see the support here got tapped 1, 2, 3, 4 times. Okay, so price most likely will not come down here a 5th time anytime soon again, I don't believe. Okay, if it just held this area for over 2 months, okay, bouncing in the same place, then I don't think it's going to go down and break it anytime soon. Okay, I would go ahead and just buy. Okay, you know price wants to go ahead and go in an upwards direction. It's holding stable support. And especially when you see tiny dips like this, okay, you're buying on red candles that made some retest. You could be like, oh yeah, and go ahead and take it up to the next leg. Okay, and just go ahead and buy and invest. Okay, you see all this space that's left. Okay, all-time highs. The goal of the market is to break all-time highs. You still have all of this space to go ahead and enter. Okay. There's still all this space left. So much space left. So much crypto to still purchase. Okay. And we're trying to catch the rest of this gap fill from where current price is at right now. Okay, catching the rest of this gap fill. And this gap is going to be bigger than the stop loss gap. And even it's like you're not even playing with stop loss, but if you wanted to, you know, you could go ahead and play there. But I recommend just investing an amount that you are comfortable to lose with certain things. Okay. So if you're going to say you're going to invest in Bitcoin, then you should be comfortable with all the funds that you're going to lose. Okay. Because trying to micromanage your crypto trades can just make you lose money in the end, because don't forget, this is a left to right chart. So the goal of it is to go up, and one day it could just burst and sweep way back up. So this is why it's really going to be nice to buy at dips too, instead of buying at all-time highs. Because when you buy all-time highs, it can do nothing but go in a downward direction, and then you're going to be upset. And then you might close early, and then you might close for a loss just to buy the dip, and then, yeah, it's all over the place. So this is why we just buy the dip. We buy the gap fills. Okay, I can see all-time highs is up here. This area of support is holding down here, and I can see price wants to try and fill the rest of this gap right here. Okay, right here. Price is going to be trying to fill all the rest of this gap. Okay, so just focus on how market logically works, and it's going to be pretty easy to make some profitable trades. Real. And so let's check out Solana here. Okay, so let's say here, we can see up here, price decided to create this area of resistance all up here. Okay, resistance all the way up here. So we know price is trying to hunt that. Okay, we got this much left in the gap. Okay, and let's go and let's check out something here. So I'm gonna check out this area of support down here, right? We black line it. Boom. Okay, I'm gonna see if I see anything. Let me zoom in. Okay, I do. I see a heavy area of resistance right here on this line. Okay, so price created this area of resistance right here. This is why I like to just immediately look at the lows. Okay, I can see price create a resistance right there. Okay. Let me zoom it up here. So price did make resistance there. Let me see, where does price want to retest off of? Price also made a resistance off of here. And let's see if we see any support mirrors or anything to the left here. Gotcha, strong areas of resistances here too. Kind of some resistance right here too. So let me go ahead and go to new time. Okay, so we can see why that support got created. There's some heavy areas of resistance that get created at that black line right here. Okay, so you see, okay, price wants to go ahead and still try and head up in the upwards direction. And then we can see here too, price decided to retest off of this area here. Okay, price created this area of resistance like right here. Okay, and then price turned into support right here. So if price were to come down and try this area of support again, okay, that'd be a good place to go ahead and buy. Okay, or even if price pulled back to like this area of support down here, okay, or resistance. So price is either going to try and come down to bounce at an area of resistance or a previous area of support. So it's going to try and turn previous areas of resistances that it already broke below it into support, or it's going to try and just mirror areas of support. And areas of support are most likely already in areas of break and retest that has happened to the left. A lot of the times that's going to be like what it is too. So let's go over another example here. So we always know that price is trying to hunt all-time highs. Price is always trying to hunt all-time highs when it comes to the cryptocurrency market. Check out Doge, for example. Up on my daily time frame here, I can zoom out. Okay. Oops, it looks like I marked this out here. So let's check it out. So we have this area of resistance that was created all the way up here. And then we have this area of support down here. Okay, and this support didn't come from no reason. It came from this area of resistance right here. Okay, support, and then price already had an area of support get created off the resistance too. Okay, boom, resistance, broken, turned into support the first time right here. Okay, you can see it on the first candle right here, and then price went in the upwards direction. So this is what I like to call the pro tap. When you see break and retest instantly happen, okay, that's what I like to call the pro tap, because you got to be watching the chart there, waiting for that resistance to be broken and turn into support, okay, to see if that's going to happen. But then when you say area of support from the original retest get mirrored again into an area of support again, you know price wants to go ahead and probably hold that area, especially if it doesn't break and you start seeing what's called closes. Okay, so if you start seeing price tap the blue line and give you a wick, okay, I never like to enter on the candles that are wicking off the blue line. I like to personally enter on the candles that are above the blue line, because once it's well above the blue line, I know, okay, price probably wants to go in an upwards direction. I don't like to buy ultimate lows and ultimate highs. I like to sell at ultimate highs. I like to wait for ultimate lows to be created in order for me to catch it into ultimate highs. Okay, so I like to trade just safe. Okay, trading safe is going to be a lot better than trying to be overly precise with the best entry, the best this, the best. It's great to have it, but knowing where you need to close and knowing if it's a good dip area is going to be more than enough to make profit. Okay, take this example. You could see this area of resistance got formed right here. Okay, resistance turned into support. Resistance right here turned into support. Okay, so resistance gets broken and turned into support. Okay, resistance formed, price fell down, broke, retest, turned into support again, price going up, resistance here formed, resistance formed, and then turned into support. And then, you know, okay, I believe price is going to be a good place to go ahead and buy right here. Let me go ahead and take it here, and you take it up, and you still have this whole gap to go ahead and catch. Okay, you still have all of this money to make. Okay, this whole giant gap. Okay. So once you see price confirming itself, making higher lows, okay, heading in upwards direction, here's the ultimate low. Okay, here's an even higher low. So this low right here is higher than this low. And this low right here is higher than this low. Okay, so when you see price making higher lows, heading in a staircase direction, you know, okay, price is most likely ready, inshallah. Okay, so just play logically and just take your time. Take your time and play logically. Understand like how much progress price is trying to make. Okay. It's trying to sweep into all-time highs. No matter what cryptocurrency, no matter how devalued it is, the goal of it is to go up. Okay, it wants to go up. Even if it's not going up, it wants to go up. I'll take this coin for example. So we have this highs area up here, then we have super all-time highs up here. Okay, so I can see that here. So I can see here. Price decided to created a support mirror, support area right here, support area right here. Okay. So, and we can go ahead and see over here too. Support right here. Okay. And the area of support didn't just come from nowhere. Okay. So, resistance. So, area of resistance here, broken. Turn it into support. Okay. Price went in the upward direction. Create an area of resistance up here, also known as the high. Okay. So resistance is just going to be a high area that price is trying to get back to. Okay. So price created all-time highs up there. Okay, so it's not quite all-time highs, but this is just a good area of resistance. How price is trying to get up to. Okay, so you can see price created the area of support here, created support area here. Okay, and then try to mirror it again right here. And the price is trying to bounce it in the upwards direction. Okay, and you can clearly see here, especially once you start looking at your daily. When you start seeing multiple daily candles past where the blue line is supposed to wick from, then you know a lot of the times, okay, inshallah, price is just incrementally trying to make its progress up to the highs here. Okay, trying to fill the rest of this gap here so people can go ahead and make some money, inshallah. So sometimes it's just about the way you're looking at the market. Okay, and then if you want to go ahead and close it there, you can completely just close it there. Okay. Oh. Let's go ahead and check out something else here. So let's say AVAX, right? If I zoom out, yeah, you can see price is definitely trying to make some progress here. Okay, so before we even get to all-time highs, I can see for just one, we're trying to get up here. Okay, it's a major area right here. Gonna have some more major areas too. Major area right here. Major area right here. And we can see the area of resistance got created once. And it's tapping again, okay? So one, and guess what? Price created a low. So I would already know here, price is a good area for me to buy right here. I could see price created the area of resistance. Check all the way over here to the left. Broken, okay? And right here, okay? Resistance, exciting. One area right here, 1, 2, broken, turn into support. It's gonna be a good area to go ahead and buy, okay? And then you can go ahead and try and catch the sweep all the way in the upwards direction, okay? So once again, this is classified as resistance over here. Check out how price is falling in a downwards direction, okay? Resistance. Price falling in a downwards direction here. Downwards direction. Price is always going to try and chase resistances, okay? Even though it mirrored right here, okay? Create a resistance again at the same line. Doesn't matter though. Got broken, okay? No matter how many times things fall down, it's always going to break through, okay? It broke through right here. Boom. Price made some progress. After that, price created resistance right here at this area right here. So this is why it's important to be closing at certain areas of resistance, because you can see price hit that area of resistance and decided to fall down again. Now price might try and break this area, but it depends. If you're just scalping or in a swing trade for a couple of weeks or days, or it's not something you want to hold infinitely, then I advise you close at areas of resistance above current price. Okay, if you buy a dip, or you close at an area of support above current price. Okay, and this is because support above current price can turn into resistance, causing price to dip. Okay, so support can be broken sometimes and turn into resistance, just like resistance can be broken and turn into support. Okay, so check it. Once again, I'm gonna put down this area right here. Boom, check out this line. It's extremely simple. We got resistance right here. Some more resistance right here. Some more resistance right here. And price is going in a sweep upwards direction, okay? So I can assume that price might want to try and break this height right here, okay? But even for that, we got this resistance up here, okay? We got this resistance up here, this one here, and this one here that it just mirrored at, okay? So price is going to keep trying to get past these blue lines above, as these are all going to be areas of resistance. Area right here, area right here, right here, and right here. So it's exciting, okay? Market starts becoming extremely fun when you start knowing how to read the flow. It's, you know, it works in clockwork. And you can see even down here, see price created this area of support right here once, twice, 3 times, okay? And price is constantly making, so here's a low, okay? But this low is higher than this low, okay? So when you see price making higher lows constantly, you know we're heading in an upwards direction, inshallah. Okay. So it's super duper fun and exciting when you see, okay, this is how everything works in correlation. It's like art. Okay. It's like a puzzle piece. That's how everything just it comes together and all clicks. Okay. So the resistance got created there. The support floor got created here. Resistance got broken, turned into support. And you start seeing the staircase in a whole perspective. Okay. It's very, very, very interesting once you start putting everything into logical reasoning. So you can see price is trying to break the resistance up here. Okay. It created it, but we know price is trying to hunt it, break it. So we can head up to this resistance up here. Okay. So AVAX, whoever the creator of it, can claim that they have the best coin. Okay, that's the whole point of people creating stuff, is so they can try and be the best or try and help people. Okay, so it's wanting to go up in an upwards direction. Okay, the developers of AVAX, whoever took time coding the token, thinking of the idea, I'm sure they want their idea to be worth some value. So that's why things go in an upwards direction. Okay, so we can see how much confirmation here that price is bullish. So much confirmation. We have a support floor, strong floor. We have strong floor theory supporting that we want to go in the upwards direction, and we have break and retest, and we have resistance getting broken and turned into support. It's crazy. Okay, so we're good. We can go ahead and get into something like this if we wanted to, and close at any of these areas of resistances above current price, because we can see, just like these areas of resistances can mirror each other, just like supports can. But if we're buying at the bottom, we want to be closing before we get reversed on. Okay, this way we're going to be keeping all of our profit, or as much profit as we can, inshallah. Yeah. So just don't panic too. When you see your close, you know what a good setup looks like. You got to really trust God. You can't have any fear. You're good. Once you get in your setup, you got to trust that. You got to be like, all right, I'm good. I'm good. I'm good. Don't think about drawdown. Don't think about losing. Okay, you got to be comfortable with whatever you put into. Okay, if you put in an amount of money into a trade, you got to be cool with it going to zero. I promise you, it's going to help your psychology a lot. Okay, be comfortable with just losing whatever you put in, and I promise you, your trades are going to work out a lot better. Okay, the goal of these are to go up, and the reason why a lot of people are unprofitable is because they self-sabotage. Okay, they jump in the middle of their trades and they cut it early. Instead of seeing the plan all the way through, you got to see the plan all the way through. Okay, we never know what God has planned. You got to see all the way through. If it's even in your heart to get it in the trade, you got to see all the way through. Okay, if it's working out, if you're up some profit, don't just close it and see it all the way through. You could see 10x for that profit. Okay, you got to see it all the way through. Don't self-sabotage your trade. Don't destroy anything just based off of thinking too much. Okay, that's something I've been having to check myself on with certain things. Okay, so if price creates this area of resistance right here, and then price comes all the way back down to it and turns into support, don't mentally self-sabotage. Get in that trade, okay? And you can confidently take that to this area of resistance here. I'm going to bust out the ruler, and you can see how many units of price action are left. It's a whole gap, still around 5.4 thousand, right, areas of price to go ahead and make on this token here, okay? So you can make a lot of profit here. Still a very, very, very large profit window. Even if you wanted your stop loss underneath this low, right? Say you set alerts down here if you wanted to, okay? The risk to reward, it'd still be positive, okay? Even if you entered right here. So let me pull out the risk to reward tool, and the risk to reward tool is pretty much going to show you how much you're going to make versus how much your risk is. So say the risk is down here and the target's all the way up here. So your risk reward would be a 1 to 2. So no matter what, if you hit take profit, right, you would double your money. Okay, so you would double your money. So just focus on certain things. Okay, put it into perspective. Okay, like, okay, is this the type of trade that I want to get into? Does it match up my parameters here? Okay, and even you could see the ultimate entry is all the way over there, right? Check it out. Here's another confirmation that price wants to go bullish. Inshallah, check it. Boom. Price created an area of support right here. And guess what? We have some more resistance right here. Break and retest. It's spamming it over and over and over again. It's actually almost impossible to not make money in the market. It's genuinely difficult. Okay. You could be the least technically gifted person of all time. You could be blind and you can make money. Okay. Like if someone told a blind person where all-time highs was, and someone set alerts there, okay, and something called out when all-time highs was hit, they would be able to make money. Okay, if anything, that might be better. Okay, because you wouldn't be staring at the charts, you wouldn't even know to self-sabotage your trade. You're just going to be in, just expecting take profit to get hit, and then when your alert goes off, you're going to be good. Because how many times have you been in a trade and then your alerts go off and take profit gets hit? A couple days or weeks later, you're like, dang, I wish I got on that. Okay, so in order to stop that, just don't look at it. Don't stare at the charts all day long. Okay, and don't self-sabotage. It's really easy to self-sabotage by overthinking. Okay, sometimes you gotta just leave it with God and just keep it trim. Keep it trim and just let it do its thing. Okay, let the trade work out. That's the reason why you got into it. You analyzed something. Okay, you saw something good in it. So just play it out. Play it out. So this would be a really good sweep to go ahead and catch too. And you're gonna notice too, all the crypto pairs that we just looked at, they have a very, very similar kind of price action formation. So they all had a very similar gap. Okay. And that's because a lot of the cryptocurrencies, some of them do move like relatively like the other ones, but sometimes like Bitcoin, for example, are just so powerful and just do their own thing. So yeah, depending on what you're looking at. Yeah, but say Hype, for example, Hype could have a very similar looking setup to Link. Okay, with that large gap with the resistance way above. Okay, but then something like Bitcoin, okay, could literally be at all-time highs. Okay. So it just depends on what you're looking at, depending on how many people are investing into what you're playing to. It's going to depict on how quick it moves. So if you just see something else at all-time highs and one crypto just isn't, then one, it's going to tell you how valuable something is in the long run, honestly. And yeah, so you can see this came out in 2021. And price is trying to make some progress and sweep back up, but let's analyze this here. So let me go ahead and instantly put this area of resistance as I'm going to take profit up here. Okay. It's going to be the highest point I can currently see with my eyes that I know price wants to try and sweep. Okay, so even right here, price created this area of support. I can see why. Support got created because of this area of resistance up here to the left. Okay. So that's going to be one thing I like to do, is just put a line down at the lowest area of support and be like, why? Why is this support created? So breaking everything down logically is going to really help you. Okay. So check it out. Even ask yourself why right here. Okay. Why was this support created? You can see this area of support all the way here to the left got created. Price went in the upwards direction, and price mirrored that over here to the right. Okay. And then went in the upwards direction. So that's going to be another confirmation that, okay, I think price wants to go in the upwards direction. Okay. And check this out. This is definitely going to be like, okay, let's see. Price created resistance right here. Resistance decided to get broken right here. And just like our bread and butter, we always talk about, turn this to support. Extremely, extremely simple. And we can see price wants to try and fill in this wedge to this resistance up here. Fill the resistance up here. Okay. And then fill the resistances up there. And we still have around this much area of price action left. Okay. Simple. It's simple. It's not hard. It's not difficult. And it's just taking our time. Really taking our time and knowing when we're investing, why we're investing, and what we're going to be getting invested to. Okay. And it's taking your time. Straight up just taking your time. Okay. When you're waiting for these trades to work out, when you're waiting for areas of take profits, you're like, okay, let me go ahead and take my profit, cycle it back into whatever I want to, and just keep going, keep going, keep going, keep going. Okay, take it trade by trade. And this is going to be a really, really surefire way to keep growing your account. Okay, just analyze each setup, and the patience factor is really what's going to determine how quickly you're going to grow your account. Okay. Because if you run up a bag, you don't wait for a setup that you should be waiting for, and then you blow it. That's on you. Okay, we take that to the chest, we pray on it, we move on, we come back stronger. Okay. But when you're marking these setups out constantly, we just did like 10 setups in a row. You have everything Hawkeye down, just gonna be constantly raking in money, raking in money, raking in money, raking in money. Okay, so it's important to be humble and really disciplined and know what to do with the profits. Have a strategy, know what you're gonna do, whether investing into business outside of trading or just doing whatever. Okay, just know what you're going to do with profits. Okay, because once you know how to read the market, it becomes it's really simple. Okay, it's very, very simple. You know the gap fills, you know how things work, and you can break it down within logical perspectives. Okay, you can say, okay, this works because of X, Y, and Z. This works because of ABC. Okay, and all of these things are going to be like, okay, well, we know why this is occurring, so let me go ahead and do this. Okay, and the logic behind everything really, really helps a lot. Okay, helps a lot. So let's go and let's do one more example here. And going through a bunch of different crypto coins and constantly marking out setups is going to be a really good way to get profitable too, because you're just going to be living on the charts, understanding how things work, and you're going to be like, yeah, this is definitely how market's supposed to be played. So check this out here. I can already see this area here. So I'm good on my daily. I can zoom out. Okay, so I have this area right here. Okay, so I got this area of support right here. So support got created based off of this area of resistance right here. Resistance right here got broken. Resistance got broken. Turned into support. Okay. So resistance got broken, turned into support, and I could see, again, within the distinction, I could see resistance right here got broken and turned into support. Okay. And then price decided to make a new high all the way up here. Okay, so I can see that price wants to try and at least tap this area of resistance right here. Okay. And if I wanted to, okay, would be able to go ahead and invest into this, catch the rest of this gap fill. Okay, close up this area of resistance here. Trim there, you can trim there. Okay, and trim there. Okay. You can see price is trying to make a sweep, and if I bust on my ruler here, I can see all the room that's left. Okay, all the room that's left to go ahead and attempt this to make some money here. Okay. So take your time. Take your time. Take your time. When just reading your setups, keep paying attention to resistance and to support. Resistance and support is going to be your best friends, okay, within the market, and just trust. Okay, trust. Okay, you got to really believe in your setup. Okay, trust God. There's a reason why you're thinking about gaining these setups. You're good. Don't blow it. Don't blow it. You can constantly keep getting in these setups, making your money, putting into other long-term positions that you just don't have to close, that you could have open forever if you wanted to. Okay, so it's going to be up to you how you want to play it and how you want to grow your account. All right. So head over to stackmode.net to learn how to trade cryptocurrency. Say a prayer to God. Keep grinding. Peace. Class, are you guys investing or are you guys gambling like a casino? Let's go and let's talk about the difference between disciplined trader versus the gambler. Each scenario is going to go ahead and represent the scenario that we should be doing, which is A, being disciplined, being humble, not having ego, making sure we're being persistent and consistent within our investment methods. Or a gambler, someone who doesn't play within their risk parameters, does anything, overtrades, is emotional. And let's talk about the difference between the two. And which one are you? So the gambler's mindset. Focus on instant gratification, which is going to destroy you. Anything that comes super quick could definitely be lost extremely quick. Things take time to build, have to be planted like a seed. Okay. And the gambler's mindset, trader and investor, is going to seek quick, massive returns. And they view the market as a zero-sum game of luck, often driven by the excitement of large immediate payouts, instead of thinking of consistently trading the market year after year after year, generating income so they could stop trading effort and exertion for income. Instead, they could make their money, make them money. Instead of having that mindset, they're thinking, okay, let me just make this quick play real quick and try to pull out $10,000 from this trade instantly without any experience or anything like that. And the gambler's mindset trader is going to have irrational hope. They believe they can predict short-term price movements through gut feeling, hype, or just any type of randomness to the trade, ignoring historical data, quantitative metrics, or technical analysis, just buying things based off of the fact that, you know, I think it's going to go up. I think it's going to go up. Okay. And without any true fundamental analysis behind it, make sure you have data behind why you want to get in, whether it be a technical data on the charts or fundamental data. Be like, you know what, this company's doing well. They just put an earnings report out of X, Y, and Z. I think the company's profitable. You know what, I think this dividends PE ratio is going to be worthwhile getting into due to the fact that it's pretty good, okay, compared to other dividends. Okay, so just examples here, but you can go ahead and use logical formations before you just enter in any trade. But the gambler is just going to be entering anything, and you don't want to be doing that. Plot your trades logically and take your time. And they treat capital as lottery tickets. And each investment is seen as an all or nothing bet. Never take your whole check. Never take all of your business income and invest it into one play. Don't do that. Okay, take your time, diversify, have risk into it. And that means that they often risk an unmanageable percentage of their total capital on a single position. Okay, so don't do that. Make sure you guys are controlling where your income is, spread it out, have it in different investments, and keep stacking cash. Okay, and the disciplined trader mindset, focus on statistical edge. Okay, and they view the market as a long series of probabilistic outcomes, expecting not to win every single trade, but definitely expecting that, you know what, I can only lose the trade when I close too. So having that mindset is really going to keep you in the game. If you're here to trade year after year after year, stocks, cryptocurrencies, etc., go up year after year after year. So the goal is not to win every trade, but to execute a positive expectancy model of over 100 plus trades over the course of a couple of years, gaining data, and then having an edge. And disciplined traders are going to be process oriented and understand that success is measured by adherence to a predefined trading plan, not by the single of an outcome of a single trade. So even if you make a whole bunch of money on one trade, you're still going to be disciplined. You're still going to be waking up, praying to God, being consistent, being humble, not losing sight of the plan. Okay? You can't just make $10,000 on one trade, right? Which might happen. Sometimes you catch a gap up and things like that. It might be unintentional money, okay? But you can't do that and then play with a whole different position size the next day that's way over leveraged, not in any calculations of your risk parameters, thinking you're the best trade ever just because you hit one trade. Relax, okay? Withdraw, take a step back, breathe, pray on it, be grateful, and then come back with a logical, process-oriented mindset and make the next trade. And the disciplined trader focuses on capital preservation and just cash preservation in general. And the primary objective is to project existing capital, okay, which is risk management, with profit generation as secondary, and dependent outcome. And losses are budgeted expenses. So for example, the gambler buys a volatile stock based on a Reddit post, for example, or Instagram post, instead of actually looking at the chart, doing their own statistical and fundamental research, making their own analysis, which you should be doing, expecting it to double overnight, right? And the disciplined trader buys the same stock only after confirming its consolidation near a key support level in a trend, allocating less than 1 to 10% of their capital per trade, okay? Letting their money make the money, letting it stack up, and letting their capital just always generate. So the edge, the chance versus quantifiable advantage. So the gambler's edge. The gambler operates with non-existent or poorly defined methodology, and their decisions are typically random and highly discretionary and impossible to replicate or backtest. And no validation. They never test their strategy. They remember big wins, okay, and have confirmation bias, thinking that, you know what, it's going to do this over and over again. Now, I understand that if you find a strategy that works or some technical analysis that falls into place repeatedly, that's amazing. But don't expect this to work 100% of the time. Don't have an idealistic view of this will work, this will work, this will work. Don't think that you're really going to lose, but be comfortable with losing. You should only be investing in that you're cool with losing in this way, that if you win, you're not going to be emotional. And same thing if you lose, and that's going to go ahead and be able to cancel out any anxiety or fear that you're having on the markets. So the gambler is going to be following in other ways too, and trades based on news headlines, social media chatter, or recommendation from unreliable sources without performing due diligence and doing their own research. Don't do that, okay? Don't be a sheep. Do your research. Make sure you want to invest in something that you believe in, something that you feel a connection to. Be like, you know what, I think this is a good strategy. I think this is a good investment. I think this play is strong. And go ahead and get into it. And unseen rules. Entry and exit rules change mid-trade. And the plan is subjective. So if they say, you know, I'll sell when it feels right, or I'll hold until I'm even, instead of having logical checkpoints where they want to exit their trade and enter their trade. And we'll talk about the disciplined trader edge. The disciplined trader must have a statistically verifiable edge and a set of rules that over time yields a positive expensive T, okay? So their win rate is high, okay? And their average win percentage is high, okay? And even if they take a loss, their whole account is not going to be destroyed due to the fact that being a disciplined trader means that you're not trading with more size than you should be trading with, meaning that even if you lose, your account's not going to be destroyed. Why? Because you're trading between 1 to 10% of your account. And the disciplined trader back tests and optimizes their strategy if anything is wrong. And strategy is going to be rigorously tested and studied and back tested over decades of historical data. And the trader knows the system's maximum drawdowns and expected monthly return range. And the disciplined trader has a written plan. Every scenario is detailed in a formal trading plan. And this documents defined setups and valid market conditions, risk rules, and exit mechanisms. Okay? The trader is going to calculate certain mathematical expectancy of their system, be like, you know what, my win rate is this percentage. There's certain trading journal programs that can go ahead and calculate it. And I'm working on the Stackmode app right now, which is going to help you guys calculate your trade journal as well too. So risk management, annihilation versus preservation. And this is arguably the most critical divergence. And a trader's long-term survival is entirely dependent on rigid risk control, which a gambler fundamentally ignores. So I'll talk about the gambler's capital allocation. So averaging down, they panic when a trade moves against them and buy more to lower their average cost instead of just standing on business on their position. Okay, feel like, you know what, I lost. Let me go ahead and have a set place where I should be closing at, and if it exits there or if the price hits there, I'm gonna go ahead and close and exit for a loss. Okay, but instead, when the moves are going against them, they're gonna add more with that gambler's mindset, trying to convert the small loss into a big win. Instead, that small loss just turns into an even bigger loss most of the time, okay? Turning into a catastrophic concentration of risk. And sometimes playing with no stop loss can be bad. So it depends on what you're investing in and how you're investing too. If you're on futures or Forex, you should be trading with stop loss. Why? Because margin call is a thing. You don't want to get margin called by the broker and other broker money. So play with the stop loss, especially if you're on futures and Forex. Okay, stop loss in crypto, you can get away with no stop loss, depending if you're buying and holding. Same thing with ETFs. But for futures and Forex, definitely stop loss. Please do not gamble on futures and Forex, playing with leverage especially. And they believe that the market must come back, all right? And they refuse to accept a small loss, often leading to a margin call or a total account wipeout, which is most of the time only possible on futures and Forex. The gambler is also going to trade with emotional position sizing. And their position size is determined by current emotion or desire for profit, not mathematical risk. And they often risk very, very high percentage of their accounts, 10 to 50% of their account on one trade. And the gambler faces ruination probability. And that's the mathematical certainty of eventual losing all your capital due to oversized losses and emotional decisions. Now let's talk about how to be a disciplined trader. So a disciplined trader position size. So they have a fixed percentage risk. They never risk more than typically a fixed small percentage of their total capital per trade. Okay, so if you have $1,000 in your account, okay, and you're risking 1 to 10% of your account per trade, you're gonna risk between $10 and $100 of your account per trade, okay? Keeping your risk in place. And let's say stop loss. So a stop loss is placed before the trade is entered. So once again, especially if you're on futures and Forex, you gotta know exactly where you're gonna exit at and where you're gonna enter at. And it defines the point where the trade idea is invalidated and the risk is contained. And the risk position is sized. So the position size is calculated based on the distance between the entry price and the stop loss, ensuring the monetary risk does not exceed the 1 to 10% rule. And the disciplined trader ensures that even a string of 10 consecutive losses will only deplete the account by 10% if you're trading 1%, but if you lose 10 trades in a row, and I recommend 10%, 5 to 10% of your account if you're more experienced, because 10 trades, then you could destroy your entire account. But you shouldn't be losing 10 trades in a row realistically. Now, research and information processing. The gambler's information flow. You don't want to be trading like a gambler. So the gambler prioritizes novelty and social proof. Over objective data, information is consumed for emotional validation rather than strategic input. There's a reason why God says don't gamble. Gambling is wrong. Okay, it's bad. It's the reason why is because you don't have any jurisdiction in it. Okay, you're not trading with any logical output. You're not making monetary decisions with any logical output behind it. Okay, just throwing your money into the void, hoping for the best. That's not what we want to be doing. So hearsay and media hype. So they trade based on unqualified tips, sensational news stories, or expert predictions on cable television. Don't trade like that. Do your own research. hop on your charts, hop on your broker, make your own analysis and decisions. And superficial charting, they may use rudimentary technical analysis. Okay, so you might draw random lines, okay, but ignore volume, market structure, or context. And their analysis is descriptive, not predictive or actionable. Okay, so you can go ahead and mark out something, right, that may look bullish on the 15-minute, but then on the weekly time frame, it's a whole different story. Okay, so you can't just look at one time frame either. Don't trade like that. Don't just look at one view. Look at the whole global perspective on every single time frame, and then make your decision. So, lagging indicators. So you can only get in indicators after price has already done its thing. So indicators are going to be pretty late, and getting it late is not always going to be a bad thing. Sometimes it's going to make it more confirmed within a trend scenario, but getting in certain indicators is just, it's not going to be it. Okay, like MACD, for example, it's very late. A lot of indicators are just pretty late. They can be used for confirmation, but you don't want to be relying on that. Okay, understand how the wicks work, support and resistance, and read how the chart needs to correlate. So the discipline trader. So the discipline trader uses a multifaceted, systematic research process to validate setups that align with their quantifiable edge. Okay, know what you're getting into. If you're going to trade break and retest, you're going to trade some break and retest. If we're going to trade reversals, you get in a reversal. Okay, and get some data behind it. Study your setups, back test it, paper trade it first. Make sure it works before you start putting money into the market. And the discipline trader is going to utilize a blend of TA, technical analysis. You can go ahead and look at your patterns. If you're looking for break and retest, put your volume into play. Make sure it's something people trade, and look at the momentum. Okay, see how it's moving. And relevant fundamental analysis. See if it's a profitable stock. See if it's something that trends heavily to really form a complete picture. And track the events too. Know when earnings is going to be too. You don't want to get into a trade and the earnings is the next day. Okay, that's going to be a form of gambling. Make sure earnings is pretty far away and then make your decision. Even if you're a long-term investor, wait till earnings happens first and then go ahead and get in. And they're going to always be on top of the economic data releases or any stock or company releases that's going on, or any type of negative news that could affect the price movement as well too. Okay, you can convert it to couple of news sites which lets you fact it, like forexfactory.com. You can fact check and see all the news and the data reports and put that into correlation. And that helps a lot with futures, for example. And TradingView, for example, shows you all the stock news, and a lot of brokers do too. And look at the market structure. Focus on the who, what, where, and why of market movements. Why is price making resistance here? Why is price making support here? Okay, ask yourself these questions before you get into the trade. Put everything together in your brain, lock it in, and then go ahead and make your trade. And work on the directional bias of the higher time frames. Be like, okay, I want to get in the trade here because of X, Y, and Z, and then make your decisions. And the trader's analysis really answers, okay, why do I want to get in here? Okay, what's my maximum loss? And I understand we're on the charts trying to make some money, but don't lose yourself, okay? Take your time, build up your capital, be disciplined. Because if you full port your account in one trade trying to make some money, you're going to be wishing that you were disciplined and you took your time. So I'm telling you guys, being disciplined is going to be the most worthwhile decision in the long run. So impulse versus automation. So the gambler is going to be trading based off of impulse. You got to pretty much be a robot if you want to be a successful trader. So the gambler is going to be chasing the market, entering super duper late on big giant candles, getting in the trend late and just missing the whole thing. Okay, and getting pulled back on, getting wicked back on, and just living in drawdown. And they often buy at the high or sell at the super low after the move is already completed, catching the final remaining scraps and pieces. Okay, so revenge trading. After a loss, they immediately enter a new larger position to win back the money. And this is the fastest way to accelerate capital loss. Okay, don't do that. Okay, don't do that. If you take your loss, you gotta get off. Okay, plan yourself a better trade. Be like, what? Why did I get in this trade? Did this trade really make sense? Okay, and if it did, okay, cool. Accept that loss. Take a better one. Okay, or try again. Play something with better volume. Okay, there's probably some reasons why the trade didn't work out. Because if you notice, once you start playing S plus setups, they're gonna work out a large percentage of the time. Not every time, but a very, very, very large percentage of the time. So ask yourself, why did I lose before you just get in the trade again, trying to make some money back? And keep a record too, okay? Know how much you're making, know how much you're losing, know how consistent you are, because it's really gonna help you go back and see, well, I've been slamming, well, I've been crushing it. And a lot of brokers keep track of that, but you guys can keep track of it too. To the disciplined trader, you got to be like a robot in the game. You got to get up, be a robot, okay, grind. And the most disciplined person, the most robotic person when it comes to keeping their emotions stable is going to win, okay? You can't be letting fatigue, emotions, anger, fear, anxiety, and none of that get to you, okay? You got to be a boss, stand on business, and get to it. And execution is for a disciplined trader, and it's robotic and unemotional. And the moment the trade is entered, all necessary parameters, the stop loss and the target are set. And strict adherence. Traders are only taken when the market offers a setup that perfectly matches the criteria in the written plan, okay, the edge. And let's talk about the trade journal. Every single trade is logged with the entry, exit, reasoning, psychological state, and a chart screenshot. And this data is used to iteratively improve the edge over time, okay? You can go back, be like, whoa, okay, I was crushing it here. Let me stick to this. Why am I changing it up? Let me invest into this, okay? This led me to positive equity curve at the end of the year. Okay, let me stick to this. Okay, it's gonna help you guys keep your data, and you're gonna have a positive expectancy focus, wanting to crush your goals and be a better you, and just be better every single day. And you understand that the goal is not $10,000 profit today, but the statistical certainty that $10,000 will be achieved by repeating the process over a period of growing your seed, stacking wins, stack mode. Okay, take your time. Okay, it's not a race, it's a marathon, and be in the game for decades, years, okay? Don't just lose your account overnight trying to make a FOMO trade. Relax, be disciplined. I'm telling you, it's gonna be worth it to be disciplined. When you're chilling on the beach, when you're driving in the Lamb, when you're doing what you wanna do, when you're chilling in your house, okay? When you're put up because you stayed down and you were in stack mode, you're gonna be cheesing hard, okay? It's gonna be worth it, inshallah. So let's say, for example, the trader reviews their journal and finds their system has an 80% win rate, okay, on Tuesdays. And they use their objective data to confirm their edge. Let's say news is on Tuesdays and they notice that the news correlates with their edge, and then they go ahead and keep trading that, and they find a profitable way to make some money, for example. And let's say the gambler, okay, they review their account statement, sees a negative balance, leading to frustration, more reckless trading, booting up their account more, whole check into it, okay, and just losing their whole mindset, okay, and not sticking to a consistent edge, which is gonna help you grow your account over and over again, okay? Take your time. So, psychological mastery, detachment versus attachment. Trading is 80% psychology. I'd really say like 90%, okay? Because there's been times you can really give someone really good levels, and if they don't know when to close, or if they're greedy, they can still destroy it all, okay? So the final differentiation lies in how losses and profits are internalized. So the gambler, they're really attached to the outcome, okay? They have way too much greed. They're fiending to win every single trade, and they're very impatient, wanting to make a trade every single day too. You're not gonna trade every single day. It's not realistic. They close profitable trades early too, destroying the risk to reward because of the fact that they're scared, okay? It's why you gotta trust God, okay? Relax, okay? Only trade with what you're okay with losing. You're gonna be cool. Let the trade play out, and if you see something, believe in it. And they hold losing trades for too long, okay? Now, if you see your trades going in the opposite direction and it's way past your stop loss, okay, you could go ahead and close your trade, especially if it's way past your stop loss. You got to. Don't hold something that's clearly not gonna go ahead and reverse anytime soon. That's ego trading. And that's viewing losses as a personal failure or an indictment of their intelligence. And this fuels revenge trading and their need to prove the market wrong, which could lead you to throwing more funds into a loss. And mood swings. They experiences extreme emotional volatility with deep before on wins, okay, extremely happy, cheesing hard, jumping up and down. But then when they lose, crashing out, sad, okay? Be stoic. Whether you win or lose, just keep going. Stack mode, put 50% away, keep 50% in your account, keep stacking it up, keep going, go on to the next trade, okay? Keep getting richer, keep getting better. And the disciplined trader, they're attached to the outcomes. They have a sense of neutrality built into them. Okay, and you got to accept that a single trade is meaningless. Even if you make way more money on one trade than the other, that doesn't mean that that trade was better than the other. Did you stick to your process? Did you stick to your rules? Were you grateful? Okay, and stay humble after your wins. It's really going to keep you guys focused on the process, and which is really going to get you to the next level, inshallah. So the focus is on executing the edge perfectly, regardless of the P&L, profit and loss, and learning from losses. A views of a losing trade that adhere to the plan as a successful win, okay? So even if you didn't make any money on the trade, if you stuck to your entry plan, you stuck to your stop loss, you saw what you needed to see and it just didn't work out, that's a win. Okay, keep yourself mentally balanced, keep yourself mentally good, and understand that losses in life and on the market are just tuition for you to learn from experience and go forward, okay? And objectify, okay? They use if-then statements to govern their actions. If price has stop loss, then they're gonna exit. If price turns resistance to the support and they're looking for a long, they're going to enter. Okay, if price hits resistance, they're going to exit. Okay, so you guys are going to go ahead and have some parameters set. Like, if price does X, Y, and Z, I'm going to do X, Y, and Z. Okay, and that's going to help you trade logistically, robotically, and play the chess moves correctly. And mental discipline is going to be important. The disciplined trader sees a loss. Not as I just lost $1,000, but I just incurred a 1R loss. You know what? It's okay, which is budgeted. I planned for this, and it's statistically necessary for the system to eventually produce 2R, 3R wins. Okay, so when you lose that 1,000, but then you make 4,000, you're not going to be mad. You're going to be like, you know what? I'm happy I only lost 1,000. I'm glad I didn't just risk my whole $10,000 account trying to make a whole play. Okay, because I just stayed within my risk, caught a nice trade, and I didn't blow my account even though I took a loss, and I made it back the right way. So don't be a gambler. Gamblers are driven by emotion. Don't be drinking alcohol. Don't be doing nonsense. Don't be trading with the mindset of, I'm going to come on and make some money. Nah, come on with the market and be like, you know what? I'm going to make some good financial decisions. I'm going to come onto the market. I'm going to enter because I have some logical parameters on why I'm about to enter. I'm going to enter because support is at this area here. You know what? Price doesn't want to go below here. This is safe. Let me go ahead and take this trade here. Oh, resistance just turned into support. Let me take this trade here. Okay. Take the money out of the picture. Focus on the charts. Take your focus off the P&L too. Okay. Get your eyeballs off the P&L. Don't be staring at that. Look at the chart. And the disciplined trader. Focus on statistics. Focus on getting better. Okay. Understanding that the ability to even trade in itself and make some money just looking at the screen is a blessing. Okay. Straight from God. God is great. Okay. So let's go hard. Let's keep going. Let's keep pushing harder than ever. So don't focus on the money. Professionals focus on the process, the discipline behind it. And to succeed, you must first manage your risk. And only then can you manage your profits. Stay prayed up to God. Keep grinding. And head over to Stackmode.net for all trading education. Catch you in the next one. Peace. Yo guys, it's Stackmode Chris here. Today we're going to be talking about what calls and what puts are in the options trading space. Let's jump straight into it. Options 101, the core concept of a contract. So the definition, right, not obligation. So what is an options contract in the first place? So an options contract gives the holder the right, but not the obligation to buy or sell an underlying asset, like 100 shares of a stock at a specified price, before a specified date. This separation of right and obligation is the fundamental difference between buying a stock directly and buying an option. So let's talk about the contract size. Standard contracts in the US represent 100 shares of the underlying security. So whatever option you purchase, you're technically purchasing 100 shares in a leveraged time asset manner. So when you buy one contract, you now control 100 shares worth and the premium. This is the non-refundable price you pay to the seller for the right granted by the contract, and it's the maximum amount an option buyer can lose. Let's talk about time constraint. So unlike stocks, options have a fixed expiration date. And if the option isn't profitable by that date, it typically expires worthless. So calls. You're going to play calls if you think price is going to go in an upwards direction. It's the bullish tool. A call option grants the buyer the right to buy the underlying asset at the predetermined price when buyers expect the price to rise in an upwards direction. Okay. And let's talk about puts. Okay, the bearish hedge tool. A put option, okay, so once again, a put option grants the holder the right to sell the underlying asset at a predetermined price. So put option is going to be bought if you think price is going to go in a downwards direction. Okay, if you think price is going to fall in a downwards direction, then you're going to go ahead and buy a put option. Okay, and it's important to understand the concept of leverage as well too. Options allow you to control a large block of shares. Okay, so it's 100 shares per contract. Okay, so it's a lot of leverage. Okay, it's a lot of power you're going to have to control. Okay, when you start trading options, you're going to realize that it's a lot different than Forex, futures, anything else. Okay, that's a couple of factors that come into its profitability. It's not just you get paid based off of directional buys. There's going to be time that comes into place, strike price that comes into place, etc. Stuff we're going to talk about and get into. So you pretty much purchase 100 shares for relatively small upfront cost, which is at the premium. And this magnifies both potential gains and losses. Okay, so if you're a good trader, you can really take advantage of this leverage. But if you're someone who's not consistent, you could get punished. So let's talk about the call option. Profiting from the upside. So once again, if you think price is going to go in the upwards direction, then you would go ahead and purchase a call option. If you think price is going to go in a downwards direction, you purchase a put option. An analogy I always tell my students is call. What do you do to call? You pick up the phone. And what do you do once you're done with the phone? You put down the phone. Okay, so think of put down the phone and call, pick up the phone. So profiting from the upside. When you buy a call, you're predicting that the stock's price will move significantly above your strike price before the expiration date. So buying a call, all right, let's talk about a long call. So you pay the premium and your maximum loss is limited to that amount. And your profit potential is essentially unlimited if the stock soars. So the purpose of it, right, is speculation on a stock price increase or buying the stock cheaply if exercised. And your max loss is the contract cost. So if a stock option contract costs you $500, the max loss you could lose is $5. You can't lose any more than that. Okay, it's not leverage in that sense with margin. Whatever the contract costs is the max you can lose. It's pretty amazing. But the profit you can make is going to be unlimited. It's crazy. So the max profit is unlimited, theoretically, as the stock can rise indefinitely. So there have been times where people have turned $5K to $300,000 on certain pumps and stuff like that. Options is amazing. Okay, thank God for options. So let's talk about selling a call, right? A short call. So it's when you receive the premium up front and you're betting the stock price will stay below the current strike price. So the strike price is going to be the current price. So if you ever hear the strike price, it's the current price. So you're betting that the stock price will stay below the strike price. Okay. So the strike price is going to be the price that you think the options contract is going to be going to. Okay. Typically the price that, you just want your options contract to go to. And the purpose of it is to generate income. Okay. To where you can bet against significant upward movement. And as far as the max loss, right, it can be unlimited, as the stock price can rise infinitely, forcing you to buy high. And the max profit, right, it's going to be the premium received. So for example, $200. So here's a call option example. So let's say stock A is trading at $50 and you buy a $55 call. The reason why you buy a $55 call is because you think it'd go up to $55, even though it's trading at $50. If you think it's going to go up to $55, then that's going to be a contract you're going to go ahead and purchase. Okay. And so going back here, so the strike price is going to be the number that you want to buy. Okay. Not current price. So if stock A closes at $60, right, and you bought a $55 call contract, you'd make a lot of money. You're getting paid based off predictions. So if you think price is going to go to 70 and it's at 60, if you buy a 62 calls contract, that's in between 60 and 70. So any strike price contract in between 60 and 70, you're going to be able to purchase successfully. Okay. So if stock A closes at $54, right, and you thought it was going to go down to $50 and you bought a put option, okay, then you'd be in the negatives. Okay. If you bought a 50 puts and price at 54, okay, and price hasn't hit that, you'd probably be in the red. Okay. Say price is at 60. You bought it at, let's say you bought it somewhere near 60, right? And then you think price is going to go down to 40. Okay. If price A goes up to 70, that's further away from 40. Okay. So your put contract would then be in the negative. Okay. So the further away of the opposite side would make your money go to the downside. Okay. So if you think it's going to go up and the price starts going down, you'd be losing. If you think the price is going to go down and the price starts going up, you'd be losing. So the put option, protecting against the downside. So buying a put is like buying insurance, and it gives you the right to sell your asset at a fixed price, limiting your losses or allowing you to profit from a price drop. So buying a put, right? Let's talk about long puts. So it's when you pay the premium for the right to sell. And this is the primary tool for betting on a drop in the underlying stock price. So you can speculate, which pretty much means you place a bet on directional bias, okay? Or you can hedge, which means you buy puts and calls whenever something's going to happen to protect a long stock position. And your max loss is going to be whatever you paid for the contract. So if you paid $300 for a puts contract, your max loss would be $300. And your max profit, okay, would be limited for a put contract, as the stock can only drop to it can only drop to 0. And there's only a few instances of that happening. But if something's profitable and really helps the economy, there's short sale restriction laws to really prevent things from tanking down to 0 like that. So keep that in mind. So selling a put, so especially when you're trading the crypto and stock market too, keep that in mind. Okay, when you're trading against a market where people are trying to buy and hold their money, expecting it to go up. So your downside trade is going to be pretty limited. So keep that in mind. So let's talk about selling a put, right? Short put. So it's when you receive the premium and you're betting that the stock price will stay above the strike price. And your risk is substantial if the stock crashes. So the purpose of this is for income generation. Okay. Or you could put on an aggressive bet on upwards or sideways movement. And your max loss can be substantial. Okay. And the max profit is going to be the premium received. And a put option example. Okay. Let's say current price is at 70. Okay. Let's say you think price is going to go down to 60. Okay. You could buy any contract in between 69 and 60 in order to try to make some profit. Okay. Now, if price goes up to 75, you'd then be in the negative profit. Okay. But if price goes down, any number between 69 and 60, you'd be in the positive profit. So decoding the details, right? The essential terminology. So let's understand 4 terms that they're vital to really interpret any option chain. So the strike price, it's the agreement price. This is the fixed price at which the option buyer has the right to buy, call, or sell put at the underlying stock. And this price is set when the contract is created. And the expiration date, it's a deadline. So every contract has an expiration date. The further you buy out, the better. We're going to talk about leaps here soon. So what a leap contract here is. So a leap contract is pretty much just a really, really, really long contract. Okay, so it's whether a couple of months or you have some years on the options contract. Typically, you want to make sure you have your options contract for at least months or years. Okay, this way you guys aren't going to be getting destroyed by what's called the Greeks. Okay, some crazy things that could destroy your profit if you don't position or do your research. So the premium, right? Let's talk about that as first. So the premium is the market price of the option contract itself. So you're going to see options contracts in decimals. So you're going to see an option contract be like 1.70 or something like that. Okay, or you'll see like 2.10. And what you're going to do, any decimal that you see on the options contract, you're going to have to multiply it by 100. Okay, so that would equal $210. So 1.70 times 100 would equal $170. Okay, 0.75 times 100 would equal $75. Okay, so keep that in mind whenever you guys are trading options and you just see a bunch of numbers with decimals and stuff like that going on. Okay, that's what's happening. Keep that in mind. So moneyness, right? The profit status. So this refers to the immediate profitability of the option if exercised right now. And let's talk about in the money. It means the option has intrinsic value and immediate value if exercised. So for a call, stock price, or strike price. And for a put, you're going to be doing strike price over stock price. Okay. So at the money, it's when the strike price is equal or very close to the current stock price and contains only time value. And let's talk about the term out the money. It means that the option has 0 intrinsic value. And for a call, the stock price must be less than strike price. For a put, stock price would be greater than the strike price. And these only consist of time value. And rule of thumb, out the money options are cheaper, but they have a lower probability of becoming profitable. And the money options are more expensive, but they carry less risk. Okay. So that's the reason why in the money options focuses on the stock price. Okay, especially for certain things like a call, for example. Okay. In the money option, you want to try and play or buy a strike price contract that's going to be as closest to the current price as possible. Okay, so focus more on the stock price more than you're focusing on the strike price level at the times. So let's talk about Greeks. Okay, these Greeks can be absolutely crazy. Okay, these are going to be things that could destroy your profit if you don't understand them. Okay, it can really destroy your whole portfolio, destroy a lot of things you're working hard for. So let's understand them. So the Greeks are measures of the sensitivity of an option price, right, the premium, to changes in key factors like time, price, and volatility, and they're crucial for serious risk management. So let's talk about the delta, right? So the delta tells you how much the options price to change for every $1 change in the underlying stock price. It also represents the probability that the option will expire in the money. And the theta. The theta measures the decrease in the option's value, right? It's the premium for every passing day. And as an options buyer, theta is your enemy. Once again, as an options buyer, theta is your enemy. As an option seller, theta is your friend as you profit from the time decay. Okay, but theta is typically a negative value. So gamma. So buying options and selling options is going to be two different things. I'm going to make a completely separate video on that. Buying options, you're wanting the direction to happen. Selling options, you're selling options to people. You're pretty much selling dreams to people. That's pretty much what selling options is, selling dreams. So gamma. Gamma tells you how much the delta value changes for every dollar change and the underlying stock price. And that doesn't mean a good selling dreams too. They're pretty much betting on you to lose. Okay. And gamma is going to be the rate of acceleration of your options profitability, and it's the highest for at the money options. Okay, and it's always going to be positive for option buyers. So the Vega, right? Let's talk about volatility. So Vega measures the change in the options price change for a 1% change in the expected volatility of the underlying stock. And high Vega means that the option is sensitive to market sentiment and expected price swings. So the investor's perspective. If you're buying an option, you want high positive delta, high positive Vega, and low negative theta. And if you're selling an option, right, selling dreams to people, betting on their optimistic goals, okay, or optimistic views, betting on them to lose. And if you're selling an option, you want the opposite. You're looking at profit from the time decay, okay, the theta, and you want a stable stock price for the most part. Okay, that's just what you're going to be looking for as a seller. It's going to be two different games between buying options and selling them. Okay, two different games. So some basic strategies, right? Long versus short option. All basic option trading can be broken down into two core activities: buying contracts, okay, that's for going long, or selling contracts, okay, going short. So let's talk about buying options, okay, long calls and long puts. So this is generally the starting point for beginners because the risk is defined and limited, and you pay the premium upfront. So it has defined risk. If you think price is going to go to a certain place, you buy the contract for it in the direction that you want. Calls if you think it's going to go up, puts if you think it's going to go down. So you have a defined risk when you buy options, and your maximum loss is the premium paid. You can't lose more than the cost of the contract. But due to time decay, and this is why you would pay a leap contract. So a leap contract is going to be a contract over like 3 months to a couple of years long. So any contract with months on it, years on it, that's a leap. So you won't have a high probability of loss. Okay. So in order to counter high probability of loss, make sure you guys buy time. Okay. Buy leaps. Please don't try to trade 0 DTEs and weeklies and you don't know what you're doing. So due to time decay, theta, most options expire worthless. So this is why it's important to buy certain contracts close to current stock price. Okay, focus on the stock price. And you need a fast, large move in your favor to overcome the premium cost sometimes. Okay, but if you play options like shares, where you're buying options contracts years out or months out, expecting to hold for a long time, you can outplay the system. Yes, they cost more money, but trading is not just about making money. Okay, don't just focus on the trades that are going to make you money. Focus on the trades that aren't going to lose you money. Focus on the trades that are going to preserve your money. Focus on the trades that are going to keep you safe. And options has leverage returns. If the stock moves favorably, the percentage return on your initial cash outlay, right, the premium, can be really huge. So let's talk about selling options, right? Short calls and short puts. It's when you collect the premium upfront, and this requires a much higher level of caution and often higher margin requirements. So there's going to be unlimited risk involved in between selling options. Okay, so for short calls, selling uncovered calls has theoretically unlimited risk, making extremely dangerous for beginners, and a high probability of gain, right? Since most options expire worthless, depending on which ones you do, let's say price is at 60. If you sell an option that's at 75 and somebody's optimistic and they buy that, okay, then you would make money, okay, because they didn't win. So it's trading. When you make money, somebody is losing. When you're losing, somebody is making money. Okay, that's just how trading works. So since most options expire worthless, the seller has a statistical edge and profits if the options expire out the money. Now, if you're really good at the market though and eyeballing certain things, you could definitely slam buying options for sure. But the defined reward. Your maximum profit is strictly limited to the premium collected when you open the position. And a critical risk note, right? Never start by selling naked uncovered call options. This means selling a call without owning the underlying stock. If the stock unexpectedly surges, your losses can really wipe out your account really fast. Okay? And stick to just buying options until you have the advanced experience with risk management and margin to sell options if you wanted to. So options give you the right, but not the obligation, to buy speculative direction. Calls give you the right to buy, and puts give you the right to sell. So remember, calls are what you purchase if you think price is going to go in an upwards direction. And you're going to buy puts if you think price is going to go in a downwards direction. And risk is defined when buying options. Okay, your max loss is going to be what you pay for it. If you pay $400 for a contract, you're going to lose $400 max. But guess what? The profit you can make is infinite. Okay? The God is great. So theta is going to be the time decay. In order to counter that, make sure you guys are buying months out. Okay, buy months out, years out, and give yourself time. And shorter term options are riskier due to high theta. So even though they might be cheaper and look more intriguing, stack up, get in a stack with it, and buy the contract that's going to really get you to where you need to be. And practice first. Make sure you guys are paper trading. Try it out. Make sure it's what you guys like before you put in any type of real capital, all right? I want you guys to stay creative to good. Keep grinding. I'm going to catch you guys next one. I love you. Peace. Class, let's talk about crypto arbitrage trading, the pursuit of risk-free profit in digital markets. Welcome to the lecture. Welcome to Stackmode, and let's jump into it. So the essence of arbitrage. Arbitrage is fundamentally the practice of simultaneously buying and selling an asset in different markets to profit from a temporary difference in price. It's the closest thing to a risk-free profit and opportunity in finance. And in the cryptocurrency space, this occurs because the global market is highly fragmented, with hundreds of independent exchanges that are not perfectly synchronized their prices in real time. This creates transient imbalances within the cryptocurrency community. So arbitrage is not about predicting the future prices, right? That's going to be speculation. It's about capitalizing on the current now price discrepancies for the same asset at the exact same time. So why do discrepancies exist in cryptocurrency in the first place? So latency and speed. Network delays mean that a price change on one major exchange may take a few milliseconds to reflect on a smaller, slower exchange. And this tiny window is the opportunity that people use in order to capitalize on some profits. So let's talk about some regulatory and geographic factors. Differences in regulatory frameworks or capital controls in various countries can cause persistent price differences. The community premium is a classic example. And liquidity differences. Exchanges with low trading volume might have larger bid-ask spreads, leading to minor price offsets compared to high volume exchanges. And we'll talk about transfer fees and withdrawal delays. The cost and time associated with moving capital between exchanges also contribute to price gaps that need to be larger to be profitable. So the foundation. Let's talk about simple exchange arbitrage. So the two exchange model. And this is the most straightforward form, involving just two exchanges and one asset. For example, Bitcoin, also known as BTC, BTC USD. The goal is to exploit a direct price difference. So step one, right? So this is how you do it. For example, you would buy low and simultaneously place a market order to buy one Bitcoin on exchange A, where the price would be $50,000, for example. And then step two, you would sell at high. At the exact same moment, you would place a market order to sell one Bitcoin on exchange B, where the price is $50,050, and result a gross profit of $50, okay, and less trading fees and withdrawal costs, okay. So, capital allocation challenge. For this strategy to work instantaneously, an arbitrage must have the capital prepositions on both exchanges. This is known as a capital risk or funding issue. So the required capital setup. You must have the fiat currency, for example, USD, okay, dollars, stable coins, etc., ready on exchange A to buy, and the asset, for example, let's say you're buying Bitcoin, ready on exchange B to sell. If you have to transfer the asset after buying, the price gap will likely close, and the opportunity will most likely vanish. And due to razor-thin margins, the speed required, this strategy is almost exclusively executed by automated trading bots that operate in milliseconds. So the advanced strategy, right? Triangular arbitrage. So 3-act cycle. Triangular arbitrage all occurs on a single exchange and exploits inconsistent pricing between 3 different currency pairs, creating a closed-loop trade with a net profit. The core idea is that the implicit exchange rate calculated from 2 pairs does not match the exchange rate of the third pair. And the path. Example, using USD, Bitcoin, and Ethereum, and trade 1. Get started. Okay, so you would start by converting your crypto currency. Let's say, for example, let's say your starting currency would be USD to Bitcoin. Okay, so turn your fiat currency into cryptocurrency. Okay, so via the BTC USD pair. Okay, you could also turn your cryptocurrency into cash as well too, and do the same thing by whatever asset you want. Let's say you want to do Ethereum too. Okay, and the midpoint, you would convert the final asset, all right, or the first asset, that would be Bitcoin, to the second asset, for example, Ethereum, okay, via the ETH BTC pair. Okay, so you can use a cryptocurrency to swap it to different cryptocurrency pairs as well, or use your cash to do cryptocurrency and then buy the pair that you want. And you convert the second asset, such as Ethereum, back to your starting currency for your USD via the Ethereum USD pair. So the margin requirement and the speed of this. For the trade to be profitable, the final USD amount must be greater than the initial USD amount after all 3 trades and associated fees are deducted. And why this is faster? Since all 3 transactions happen on the exchange, the trade can be processed much faster than moving assets between exchanges. And this makes it a primary focus for institutional high-frequency trading. Okay, which can be a good thing and a bad thing because that can bring up bots as well. And this strategy is highly dependent on sufficient liquidity for all 3 legs of the trade to ensure that the bot can execute its large volume orders without slippage, which is the change in price due to the order execution itself. So the frontier, right? DeFi arbitrage and flash loans. So let's talk about DeFi pools and DEXs. Decentralized finance, which is DeFi. Arbitrage involves capitalizing on price differences between different automated market makers, also known as AMMs, like Uniswap and SushiSwap, or between a DEX and a traditional central exchange, okay, also known as a CEX. And let's talk about the liquidity pool inefficiencies. Prices on DEXs are determined by the ratio of tokens in liquidity pool. And when a large trade happens on one DEX, the ratio shifts, creating a temporary price difference relative to other platforms. And there's going to be a gas war, right? So gas in the cryptocurrency world equals fees. So when you see the word gas, think of fees. So a gas war. A significant risk here is the cost of gas, right? The network transaction fees. And arbitrage. Bots must bid high gas fees to ensure the transaction is included in the next block faster than their competitors, okay? And nice writing here. And the game changer, all right, flash loans. So flash loans are a novel decentralized finance concept that allow a user to borrow any amount of uncollateralized assets, provided liquidity is available, so long as the funds are borrowed and repaid within the same blockchain transaction. So let's talk about some zero capital arbitrage. Flash loans enable an arbitrator to perform a large-scale arbitrage without needing any initial capital. The bot executes the buy low, sell high sequence, and then repays the loan plus a small fee, all in one automatic transaction, okay? And if the transaction fails for any reason, for example, if price moved, the loan is automatically reverted, eliminating execution risk. So the automated lifecycle of an arbitrage trade. So opportunity scanning, right? We can go watch it. So the bot, right? Having a bot especially as AI progresses and things like that. The bot continuously monitors real-time price feeds across dividends exchanges, calculating the net profit after all fees for every possible pair or triangle. And it seeks a spread that's going to be wider than the combined cost of trading and transferring the funds. 2. Trade evaluation and execution, the trigger. Once a qualifying spread is identified, the bot initiates the simultaneous execution. And for interchange arbitrage, this means sending API calls to both exchanges at the same moment. And the execution must be extremely fast to beat other bots. And let's talk about the settlement and rebalancing, right? The closer. So after the trade fails, the arbitrage now has an imbalance of assets. For example, more Bitcoin on exchange A or less on exchange B. And the final step is often transferring the net profit back to the seller account and rebalancing the capital for the next opportunity, which incurs more fees. So the necessity of automation for arbitrage, the bot stack. Manual arbitrage is essentially impossible in modern markets. An entire process relies on sophisticated low latency software, written primarily in languages like Python or C++, and the API integration. Bots communicate directly with exchange APIs, application programming interfaces, right? That's what API stands for, to retrieve real-time order book data and submit orders. This bypasses the slow web interface entirely. And collocation. Professional arbitrage often host their bots physically close to the exchange servers, known as collocation, and to shave precious milliseconds off their network latency. And high-frequency data. The bot must process tens of thousands of market data updates per second to stay. And algorithmic sophistication, the net profit calculation. A good bot doesn't just look at the price gap and must factor in variable market maker fees, taker fees, slippage estimates, and potential withdrawal transfer fees to calculate the true expected net profit before initiating trade to make sure that's worth it. And the competitive landscape is going to be fear as more capital flows into arbitrage and the profit margins are driven closer and closer to zero. And this creates an arms race of technology and speed and execution efficiency. So, 1, the execution risk, right? The closure. So this is the biggest threat. The arbitrage opportunity often disappears before the second leg of the trade is filled. If you buy low on exchange A, but the price on exchange B drops before your sell order executes, you are now holding the asset at a loss. This intended simultaneous nature of the trade hasn't failed. So 2, slippage in the costs, right? Arbitrage profits are often less than 0.5%. If an exchange increases the trading fees or if a large order causes slippage, which is filling at a worse than expected price, the small profit can instantly turn into a loss. And arbitrageurs must strictly track their trading tiers and fee schedules to make sure that the trade is going to be worth it before they put on some size. So, withdrawal and funding risk, right? The weight. For inter-exchange arbitrage, the capital needed to rebalance the accounts, right? So moving the final asset back to the original exchange can be tied for minutes or hours due to blockchain confirmation times or exchange enforced withdrawal limits. This is known as going to be opportunity cost. So, walking through a hypothetical Bitcoin trade, right? Let's say on exchange A, you bought low. Okay, let's say the Bitcoin USD price, 60,000, you have 100K available, $100,000 available. USD, fiat currency. Okay, on exchange B, you would sell high. Okay, on exchange B, the Bitcoin USD price is 60,050. Okay, and you have 1 Bitcoin available. And for the fees and the spread, for the trading fee on the each side, right? So trading fee, 0.1%, and the gross spread would be $50, right? So the buy cost on A, be buying 1 Bitcoin for $6,000, okay? Take the trading fee times 0.001, okay? So 60. Sell 1 Bitcoin for 60,050, okay? And then same thing with the other trading fee, that'd be 60.05, okay? 60.05 plus 60 is 120.05 gross profit, okay? And that's just gonna be the total fees paid, okay? So that's the calculations you do to get the fees, and then your gross profit would be $50, okay? The gross profit minus the fees, then boom. You see the arbitrage fail due to fees, making the trade not worth it. So sometimes fees can destroy your profit. So keep it in mind about that. Even if you're a day trader, spamming trade and stuff like that, especially if you're losing, can increase your losses and certain fees depending on certain brokers or exchanges. So check them out depending on whatever you trade on. It's not going to be the same everywhere. And arbitrage is only profitable when the gross spread significantly outweighs the total cost, right? The fees and the slippage. The threshold must be met first. Okay. So the evolving landscape and the challenges ahead. So the market efficiency. The long-term impact of successful arbitrage is the increase of market efficiency. Arbitrage and the pursuit of profit automatically correct the price imbalances, forcing the market to converge on a single fair price. Okay. So reduce volatility. By buying low and selling high, arbitrage stabilizes prices and reduces unnecessary volatility caused by large temporary discrepancies. And fair pricing is involved. It ensures that retail traders, which means just non-bank traders, just individual traders pretty much, are less likely to buy or sell at an artificially poor price. And the competition and innovation. From HVT to MEV, the focus has shifted from simple inter-exchange arbitrage to complex, low latency strategies like miners plus maximal extractable value, right? MEV, arbitrage on the blockchain networks. Blockchain is going to be the cryptocurrency network where people can go ahead and trade. Okay, it's going to go and check all the transactions and manage everything via smart contracts. Okay, so unlike a bank system where money goes from person to the bank where they confirm it, and then the person, cryptocurrency, happens to work on a person-to-person system, okay, making it one of the most dominant systems in order to send money or receive money. And as global crypto markets mature and become more interconnected, traditional arbitrage opportunities are shrinking, and success now requires cutting-edge technology, faster network access, and highly sophisticated risk management algorithms. And the race for speed continues to define who profits and who loses in the zero-sum game of crypto arbitrage. So summary of arbitrage trading, right? Arbitrage is the simultaneous trading of an asset to exploit temporary price differences for risk-free profit. It's not speculation, but rather a corrective mechanism for market inefficiencies. If you have enough capital, then inshallah it'll be profitable. And types and methods. Okay, so we covered inter-exchange markets, right? That's the two markets, triangular, 3 pairs, okay, and 1 market. And DeFi, which stands for decentralized finance, using flash loans. And they're all highly dependent on extreme speed and technological automations. And the reality of risk. While theoretically it's risk-free, execution risk, high transaction fees, and slippage can easily eliminate the tiny profit margin, turning a potential gain into a guaranteed loss. And automation would be mandatory for success most of the time, inshallah. Okay, so I pray to God, keep grinding. If you want to learn how to trade cryptocurrency, head over to stackmode.net. Peace. The strong reasons why market's going to be going in upwards directions is due to the fact that these stocks help the United States economy. That's going to be the strongest reasons, and there's a reason why the billionaires within the trading community are people who play United States stocks companies, whether owning shares and options such as Warren Buffett, etc. Because it's going to be honestly the easiest market to play. Forex market is very sideways. Futures you can't hold overnight unless you have a certain amount of margin. So the United States stock market and even cryptocurrency is going to be great realms to just buy and hold your money. Okay, so let's go ahead and continue the lesson here. So these stocks aren't just random stocks listed on TradingView or these brokers so people to just make invisible money. These stocks are real companies that people actually work at, okay, that we might have worked at in real life, okay, and they generate real income. So since they generate real income, they can also employ people. So they can employ people. And when they employ people, these people pay taxes to who? The government. Okay, so as long as these companies are making money, okay, and people are working at these companies, then the government will continue to make more money. So these companies being profitable, these companies doing well, these companies making money, they help out the government. And anything that helps out the United States government will be pushed. Okay, that's just what we know about trading and just fundamentals of things. Okay, if it helps the government, it's going to be pushed.
Okay, there's a reason why cryptocurrency didn't get a big push until SEC laws and stuff like that were regulated. Okay, so until the government regulates it, and unless the government has something to do with it, it's not going to have too much value until then. But every single one of these stocks boost the economy since they put jobs out for people. Jobs include people who pay taxes. Taxes go to the government, making the United States more wealthy. Wealthier we are, more power we have over other countries. Okay. So it all starts from just simple things like wealth. So options and the fact that these shares and stocks go up in an upwards direction is really important. Okay. It's way more important than people even think. Okay. So market's not just, oh, I'm going to come on here and just make some money. Okay. It's real life stuff happening on these charts, and really understanding everything is going to help us understand what we're going to be trading for. So market's going in an upwards direction. So this is why we're going to be focusing on call options. Okay. So as we know, call options, they pay you whenever you think price is going to go in an upwards direction. Okay. If you speculate and you're buying a call option and you think price is going to go in an upwards direction and you're correct, then you get paid. Okay. So that's going to be a call option. And the reason why we're going to be focusing on call options is exactly what I just broke down. These stocks have incentives to go up. There's also going to be laws such as the short sale restriction that are going to be in place too, to make sure that these stocks don't just fall flat down to zero. Okay, there's a reason why decades of these stocks of going in an upwards direction has been a thing. Okay, so it's about letting go of all the fear, trusting God, not having any weird anxiety of, oh, what if it just falls down to zero and it's time to start just investing and being a boss. Okay, so we're going to be talking about the proper levels to play at. Okay, and we're going to keep talking about why we're playing at these levels and what we're buying. Okay, I always want you guys to understand why. I never want you to just be like, okay, just do the X, Y, and Z and just do this. It's going to work. No, I want you to understand the deep reasoning why this works, why people are billionaires buying just shares and call options. Okay, so it's about finding things that are undervalued and catching the sweep up. Okay, every company wants its share price to go down. It doesn't make sense to really play puts due to the fact that market is not built to go down. Exactly. And even when market does go down, exactly. Even when market does go down, people are quick to buy the dip. People are quick to buy the dip, and market will recover right back to wherever it dipped from heavily. It'll fill it right back up. All it is just a discount. All it is just like clothes and cologne and whatever. It's just going on sale. That's all it is. Market just goes on sale whenever it falls down. So puts don't really make sense to purchase, especially when you get on your higher time frames, especially when you're playing companies that have good revenue and actually make money and the share price increases year after year. Playing puts, not only are you going to have significantly shorter trades, your take profits aren't going to be as easy to put down because one, you can't predict where the market's going to bounce at. Okay. So you can't predict where the market wants to stop at all the time. Now, shorting and stuff like that comes really from Forex traders and is something that's seeped over to the stock market. But the Forex chart and the stock market chart is completely two different worlds. Okay, stock market just goes up in an upwards direction. Okay, and that's just the truth of it. Okay, if I pull up the Forex chart here, Forex is extremely sideways. Okay, you have price action all the way up here. We got price action all the way from here from 1977. We got all types of stuff going on. Okay, but if I click on the fluffy stock market, it's literally going up in a straight line. Okay, it's almost impossible to not make money in the stock market. This is why I'm so passionate about teaching in these videos. I'm starting to realize that they've literally made it to where we can just get money for free. It's welfare. It's genuine welfare. Instead of making stupid decisions, trying to flex for people who don't care about us, trying to make decisions that are just way too fancy right now instead of staying down and investing. Okay, those are the things that keep people back from being financially free significantly early. The opportunity is here for us to just invest money and infinitely turn your money into more money. This just goes up in a straight line. It's impossible for anyone to not make money on the United States stock market. It's impossible. Okay, and it's about just making really good decisions. So
price has an incentive to go up. So forget put options. We're focusing on calls. Okay, we don't want to be shorting the stock market. There's a reason why you can't even short the stock market on a lot of brokers too. You also have to think about that from a logical perspective. Most people on most brokers cannot short with shares. Okay, they can't short with shares. They can only purchase shares. So everyone's trying to just buy the stock. Also, CEOs are trying to be richer than the next CEO. So they want their company's share value to be going in an upwards direction. They want to be classified as a billionaire. So also more incentivization to go in an upwards direction. And there's also something called dividends. Dividends are going to be what the stock pays out. So the more you invest into a stock, if a stock is making good income, it'll pay out what's called a dividend. And that's going to be money that it pays out back to the shareholders. Okay, so it's like, you know what? Thank you guys for investing in us. Here's some money back. Okay, here's your reward. And that's what it's going to go ahead and say. Okay, so if a company has enough money to do that, that means that it's profitable. If it's profitable, it's most likely going up on the stock market. Okay, so there's incentive for it. The more profitable something is, the more it's going up on the stock market. Hence why when a company makes a big deal, it just shoots up. Okay, because it's now more valuable. Okay, the more money and the more valuable something is, the more of a high share price it'll have on the stock market. Okay. So cool. That's keeping those things in mind. So now let's talk about when a setup is going to be good to play and when not. Go. So let's say, for instance, here, I have this area up here. Okay. One area that we're not going to play at is going to be called all-time highs. Okay. We're just not going to be playing at all-time highs because, one, we're trying to catch a sweep up. Okay. So all of your setups will look like a V. Every single setup will look like a V. Okay. And what your profit is going to consist of is the right side of the V. Okay. So the left side of the V is going to be the resistance. Okay. This is where price is falling in a downwards direction. So you can see here, you could see price creating resistance here. Okay. This is the left side of the V. Price is falling down. Okay. The left side of the V. What we're looking for is playing the right side of the V. Okay. We're playing the right side of the V. All of your trades are going to be the right side of the V. Okay. You're going to be buying call options, expecting price to sweep up. Okay. That's what you're going to be looking for. So how can you play the right side of the V if price is falling the left side at all-time highs? You can't. Okay. So let me show you a good example of an actual good setup. So this is how we find a setup. What I'm going to be looking for is a couple of things. One, I'm going to be looking for higher time frame areas. So I'm going to make sure that I'm on my higher time frames. I'm going to make sure I'm on my weekly time frame first. My weekly time frame is going to help me see everything. It's going to be my eyes. I'll go from my weekly time frame to my daily time frame to my 4-hour time frame. Okay, so you're going to start off on the weekly time frame first, due to the fact that the weekly time frame is going to help you once again see everything. It's going to be like an eagle eye. Okay, because tunnel visioning when it comes to trading can be extremely bad. Okay, you want to be able to see the full picture and not just what you're seeing on a smaller time frame. You're then going to go to the daily just to see the picture painted a little bit in more detail. And then you're going to go to the 4-hour to see any hidden candles. So what we're going to make sure is that whenever you're on your 4-hour time frame, and this is why we can't just use the daily and the weekly, we have to make sure our extended trading hours is on. So as you can see, the daily and the weekly don't have that. That's due to the fact that they don't show pre-market hours because the weekly and the daily go off of 24-hour blocks. So that's why we still need our 4-hour time frame. And then we're going to be able to turn on extended trading hours to see all the true candlesticks that we're missing. Okay. So we are So yeah, extending trading hours always needs to be on. So we're going to go from the weekly to our daily to the 4-hour. So let's go ahead and let's mark out a setup, for example. Okay, I'm going to talk about what I'm going to be looking for, and then I'm going to jump onto the charts. So my setup is only going to consist of 2 things. I'm only going to play setup 1, which is going to be a support mirror. Okay, if you see price bouncing at an area of support, you're going to be good to go ahead and purchase there. Okay, if you see price bouncing at an area of support, reacting from another area of support, okay, that's going to be a good area to purchase. Support is going to signify an area of demand where people want to buy the price. So it's going to indicate where buyers step in. Okay, so buyers step in an area of support. And we're buying call options, meaning we get paid when price goes in an upwards direction. Okay, so we want to be buying at areas of support. Okay, so if you see an area of support mirror itself one after another, that's going to be a good setup. Or it'll look like this. Sometimes you'll have an area of support. Price might run down through it. Okay, it might not bounce at the other area of support. It might break below it. But then it might come back up and bounce at the support again. Okay, even this would be considered a support mirror. Okay, so even if price runs down underneath the first area of support, if price decides to bounce at the area of support again, that's a clean support mirror, I like to call it. Okay, so you'll either see one area of support bounce right after another, or you'll see an area of support mirroring an area of support from the past that maybe didn't get reacted off of immediately. Okay, so your setup will either look like this, or it'll look like this for criteria number 1. And criteria number 2, very simple. It's when an area of resistance gets broken, and an area of resistance is going to indicate where sellers are. So resistance indicates where sellers are due to the fact that people have too much supply. So that's why resistance gets created in the first place. There's too much supply. When people have too much of something, when they've made too much money, they're like, all right, you know what? It's time to close. I'm out. Okay. And then they're going to go ahead and close their trade simultaneously. And a wave of enough people doing that is going to create what's called resistance. Okay. That's going to create resistance. So let's continue on here. So if an area of resistance decides to get broken past, okay, if an area of resistance or support gets broken past, we know that's called a breakout. So resistance getting broken past and turned into support is going to be called break and retest. Okay, break and retest. Okay, waiting for resistance to turn into support after it's been broken. So it's when you're waiting for the resistance to turn into support after it's been broken. Okay, if you see this, you can take the trade pretty much safely. Okay, we're going to talk about some certain criteria, how to read daily closes, etc., what a close is. But let's talk about some more fundamentals we are going to be looking at. It's important to have a logical mechanical process before we put down any type of size or money. Okay, did price do this? Did price do that? Having a large checklist is going to save us a lot of money when it comes to making any type of mistakes on the market. Okay, so one thing we're going to pay attention here too is the earnings. Okay, whatever broker you're on will most likely tell you, but before you put down a trade on whatever stock you're looking at, make sure that you look at the earnings. The earnings are going to go ahead and let you know when the report is going to come out, and the stock can significantly make upwards or downward sweep when these earnings reports come out. So we want to be making sure that earnings aren't anywhere near. Okay, if earnings are 7 days or less away, and you're trying to don't open a new trade. If you're already in something, it's fine. But if you're trying to open a trade and earnings are 7 days or less away, don't do it. Okay, because the price action is already going to be weird and people are going to be wary of the same thing. They're going to wait for earnings to happen first and then make the trade. Okay, so if you see earnings a week away, 7 days or less, don't take the trade. Okay, just don't take it. Now, if earnings is far, you're fine. So those are going to be the criterias we're going to be taking. Let's talk about it on the chart. So once again, we're always going to start off on the weekly time frame, doing what's called top-down analysis, TDA. T stands for top, D stands for down, A stands for analysis. Okay, top-down analysis, TDP, TDA. Okay, so what we're going to do is I like to always mark out, okay, where would I want to close this trade if I got in? Okay, I can see price made all-time highs up here. So let me just go ahead and draw a zone up here. Okay, and I like to just eyeball. Okay, we don't use any indicators. We're not going to need any indicators. What we're going to do is pay attention to straight candlestick price action. Just like I told you, price should be doing the right side of the V fill. Okay, so we can see price decided to fall in a downwards direction here. Okay, this is going to be the left side of the V. Okay, and what we're doing is catching the right side of the V. Okay, we're going to be catching the right side of the V. So let price form the left side of the V, and then we're going to get in and catch the right side of the V. Okay, so you can see price maybe potentially trying to make a low right here. Okay, potentially trying to make a low right here. Let me go to my daily. Okay, I can still see price making a low right here. Okay, I can see, okay, I'm on my daily time frame. So I'm gonna get on my weekly, put an area of resistance, put a zone around it, okay? Because I know, one, price has an invitation to go in an upwards direction, okay? It helps the government, helps the economy. It's trying to go and be the most profitable and helpful company, okay? It's a lot of recognition, and as human beings, we care about things like that, okay? So recognition will be coming with being the most profitable and best company. So in order for that to be credible, share price has to be decent. People have to be investing into it. So let's increase the share price. Okay, that's what people are hoping for. So let's drop better products so people buy from us. That is what people are really hoping for who are behind these companies. So let's think like them. Okay, so you can see price deciding to make a bottom here. Okay, so then I'm going to start on my weekly. Okay, I can see just this large gap of space here between here and up here. So here I have the left side of the V. Okay, I have the left side of the V. Price already created it for me. And then price already drew out the bottom point. Okay, so now I'm going to go to my daily here. I can see price drew out the bottom point for me here. Okay, now we can see price potentially wanting to fill up the V. Okay, so what we're going to be doing is catching the whole right side of the V. Okay, so we can see price made the left side of the V already for us. Okay, we can see it. It made it left side of the V. Now, price made a low already. I can see on my daily candlestick, and this is what I'm going to be looking for. Okay, no indicators, no nothing. If I'm on my daily and I see price bouncing from a low, okay, with a large gap of area from an area of resistance, and I see price making multiple daily candlesticks go up in a multiple color stick direction. So I can see here green candlestick, green candlestick, green candlestick. I see multiple green candlesticks in a row. Okay, multiple green candlesticks in a row, just like we have multiple red candlesticks in a row going down. If I have multiple green candlesticks in a row going in an upwards direction, and I see a large area looking to be filled in to fill in the right side of the V, okay, even if price falls down at the resistance and goes down to all the way down there, we don't care, okay, because we can clearly see that price wants to try this area of resistance again. It's like, hold on, how am I going to fall down right here? I'm not with that. Let me try it again, okay, and it's going to try it again. And when it goes to try it again, that's going to be our profit window. That's our opportunity. We're not here to get the
best entries in the world. We're not here to predict the most high point of the market, the most bottom point of the market. We're here to react. We're here to come onto the market, scroll down, see, oh, market made a low right here, and it make it high. It looks like it wants to try this high again. Okay, it might want to break this area. And that's what you do is you react within the market. Okay, and this is going to be the trick on options. So option sellers, right? Before we jump into the trick and why we're going to do what we do, let's talk about it. So option sellers, what they're preying on is that people make some ridiculous gambling dice decision. Okay. They want people to make some just fried, horrific decision. So people, options aren't just spawning out of thin air. There's a reason why certain stocks don't have any options attached to them. Because one, nobody is selling the options in the first place. Okay. So options are not just spawning out of thin air. It's called trading for a reason. Once again, it's called trading for a reason. Okay, contracts have to come from somewhere, and they come from people turning their 100 shares into a contract and then selling it. Okay, and what they're trying to make money from is that we don't win. Okay, they're trying to make money hoping that we're wrong. Okay, but we're trying to make money hoping that we're right as options buyers. Okay, so here is how, as an option buyer, how we can make some good profit. Right, let's talk about it. So as an options profit buyer, okay, of course we want to make some profit and some money by being in the right direction of the trade. Okay, so obviously we're buying calls, so we want market to go in a upwards direction. Okay, so in order to outplay the option sellers, we're just going to play not ridiculous bets. So you can see we just did all that criteria to determine if price was ready or not. We looked at another trade and saw it was at all-time highs. We would not buy because that's the left side of the V. We're looking to only purchase the right side of the V, which looks like it wants to be filled up here. Okay, let's catch the rest of the candlesticks and farm the rest. So what I'm going to do is come up here to the T. Okay, and I'm going to be able to see the options list. Okay, so the furthest to the left here would be the closest, and the more right I go will be the furthest. So what I'm going to be focusing on is called an options leap. The reason why people say options are so risky and etc. is because they're just not playing it right. Everything in the world is risky. Okay, driving on the road every day is risky. So we're not going to be scared. We're going to be smart. So options leaps. Okay, this is what we're going to be focusing on. Leaps is a contract that I say you hold between 3 months to 2 years. Okay. Any contract that you hold between 3 months to 2 years is a leap contract. Okay. So let's say this contract here, right? Let's say I bought this. Let's say I analyze this area of support, right? Let's say I'm like, yeah, price make the bottom of the V here. Okay. Just like a V, a V has a point. Okay. Let's say I like the bottom V here. Let's say I want to go ahead and catch the right side of the V, right? Let's say I believe in this. Okay, I'm like, you know what? I'm on my daily time frame here. I can clearly see market's been trending in an upwards direction for quite some time. Okay. You can clearly see we're just sweeping up year after year after year. You know what? This is a profitable stock. Oh, okay. Cool. We're beating earnings, beating earnings, beating earnings, beating earnings. I like that. We're paying out dividends to people. Okay. I like that. This is going to be a comfortable play. So I would go ahead and purchase a contract that makes sense. Okay, so this is going to be some sauce right here. So I'm going to buy at least a year out if I wanted to. Okay, so I would buy for a year out. Okay, or I could buy 2 years out to be even safer. Okay, so let's say I want to buy 2 years out. This is how you know what's going to be the best contract to buy. Okay, so what a lot of options people get destroyed on is the theta. Okay, and what theta is a Greek. Okay, so options has Greeks. We have delta, theta, and gamma. Okay, theta is going to be the Greek that equivalates to time. Okay, so whenever you think of time, think of theta. Okay, so once again, whenever you think of time, think of theta. So in order to outplay the theta, we need to make sure that we have plenty of time on our contract. So the theta and the Greeks don't destroy our mental patience, okay, and make us want to crash out. Okay, so
Instead of worrying about, oh man, I gotta close my trade in 2 seconds. Like I gotta close my trade in a week. Nah, you have years on it to hold. Okay. And you can see price is already bouncing in an upwards direction. So what you're gonna do is whatever the current number is of your options contract, okay? Whatever the current number is, and your options broker, wherever you're on, will always tell you. Okay, it'll always tell you, it'll be in the middle of whatever options chart that you're looking at. Okay, the best contract to purchase at all times, okay, is going to be the contract one number above, okay, we're going to purchase the contract one number above the current price. Okay, so if current price is at 26.20, right? What we're going to go ahead and do is purchase the 27 contract. Okay, that's all we're going to focus on since we're buying a call contract. Okay, because we only want to buy in an upwards direction. Okay, just like we broke down, there's reasons why stocks wants to go in an upwards direction and why they go up year after year after year. Okay, and why people get rich by just turning their money into more money by investing into companies that put the money in the government's pocket. So you can get rich by investing in companies by putting money in the government's pocket, inshallah, if God wills. So we're going to go ahead and focus on the call side, since that's the side that pays us whenever options are going in an upwards direction. Okay. So we're then going to focus on the current price. Okay. So let's say current price of this stock is 26.20. Okay. We just did all of our verification. Is price ready on the right side of the V? Okay. If price is ready on the right side of the V and already made a bottom point, we're ready to go ahead and purchase that. We're going to go to our options. We're going to make sure that we're buying at least 3 months to 2 years out, depending on how far your take profit is. Okay. My take profit here, let's say I did on the weekly, I think this gap is pretty big. So just to be safe though, don't be cheap. Okay. Be safe. Okay. Being safe is what's going to get you wealthy within trading. Okay. Focus on the trades that aren't going to lose you money. Okay. People want to trade zero DTEs, trying to make some money feeding for bread, but they end up blowing up their account over and over and over again, not making anything or making some money and then losing it all. Okay. Because it's not safe. It's not consistent. So play options in a safe way. Buy 2 years out and buy the number one above current price when it's already trending in a positive direction. So this way, you're going to get your bonus points too. So this is why we use our higher time frames for options too, because we want to be catching the whole move. Okay, so we're buying years out and catching the whole move. So the higher time frames is going to show us the whole move here. So I can see I would personally close at the area of resistance. Okay, you always want to fill in the V structure. This is why the V structure is important. Okay, price will make the left side, you catch the right side. Okay, and you fill in the V structure. Wherever the V started at, slanting to the downside, is where you close at. Okay, so it's going to be where you close at. So price started resistance here, fell down, made a bottom point. I'm going to keep my profit window is going to be the remainder of the V. Okay, the remainder of the right side of the V. Even if price was up here, okay, I would still be able to catch the remainder of the V up here. Okay, the earlier entry that you see is just the more money you're going to get. But even if you enter later, that means that you have a higher probability of being right. Okay, and we're here to play safe. Okay, you want to focus on the trades where you're not going to lose. Okay, you don't know if price wants to bounce down here. But once price has showed you that it wanted to bounce down there, it's a lot easier to get in and make your decisions based off of that. Okay, so let the market react for you. You don't have to predict, just react to the market. Okay, react. Okay, market decided to make a heavy area of resistance here. Close at the heavy area of resistance here so we don't get reversed on here again. Okay, we don't know if price wants to reverse right here. Okay, it might not or it might want to. All we know is that price wants to go and give it another whirl, it looks like. Okay, and we're just going to take advantage of that and be happy with that profit. Don't ever try and 50-50 the breakout. Okay, your take profit will always consist of an area of resistance above current price, or it'll be an area of support above current price sometimes. Okay, sometimes your setup's going to look like this. You're catching the right side of the V. and you're closing at the area of support. And that's because, just like the opposite, resistance can be broken, turn into support. Support can be broken and potentially turn into resistance. Okay. So we want to keep that in mind and trade safely. Yeah, it's really just taking your time and just letting the market react and do its thing. Okay. So these are going to be the two things we're going to be looking at. Okay. Close at areas of resistance above current price, which a lot of the time it'll be, or support above current price, since resistance can be formed there and you want to get in before market falls down. Since we're focusing on calls, we want to get paid whenever market goes in an upwards direction. Okay. So we don't want market to fall down. Okay. So keeping all this in mind, catching the right side of the V, we know what contract we want to purchase. Okay. I'm going to go 2 years out. Okay. I'm going to look at current price. And even though my take profit up here is 29, I'm still going to look at current price and buy the contract one above. I'm still going to buy the 27 calls contract. The reason I'm not going to buy the 29 calls contract is because options, once again, you get paid based off of predictions. So even though our chart closing is going to be at 29, we're going to buy the 27 contract because all the profit we get is going to be bonus points. Okay, 27 is the number before 29. So even if we bought 28, you would get bonus points too. So any number of a contract that you buy before your take profit will be bonus points. So it makes sense to buy the number one above. So even if take profit was 35, I would still buy 27 just because 27 is before 35. And I would get all the bonus points. I would get, and the more points that you go, so if I bought at 27 and I closed at 35, it would get bonus points per number. So it would be bonus points at 28, at 29, at 30, at 31, 32, 33, because I'm so right. Because I'm right way before. Right? So because I'm so right, it just pays you out stupid amounts. And that's how people just do nasty flips. And I've done some nasty flips on option myself. Okay. So let's talk about another setup here. Okay. So you're always going to want to be looking for a price to be forming at a low. Okay. You want price to have made a low already. All right. And you want price to have made a high too. Okay. So in this instance here, market's still looking for its low. Okay. It hasn't quite made its low. It tried right here. And this is why I like to look at the daily here and wait for multiple candlesticks going in a green upwards direction. Okay. So you can see here, we wouldn't have gotten faked out by that. Okay. So this right here, say this low that people tried to buy, this is why we don't buy what's called falling knives. Okay. You don't know where market wants to bounce at. Okay. You can have a good idea of it, especially when it comes to the upside. Okay. And you don't know if market wants to break out. So if market creates resistance here, I'm going to close at this resistance. I'm not going to say, oh, market's not going to fall down there again. No, I'm just going to close at the resistance. Okay. It's a lot easier to play like this and play to the upside than it is to catch ultimate bottoms. Okay. Just wait for the bottom to form and then play to the upside that's already been formed. It's a lot easier. Okay. So instead of trying to catch every single bottom and then price keeps falling and then you're losing money catching a falling knife, wait for the bottom to form. Okay. Until I'm on the daily time frame and I start seeing green candlesticks going to upwards direction, I'm good. Okay. I want to see multiple green candlesticks in a row before I take any type of trade. Okay. So take some type of low like this, right? If I see price make a low and I see multiple green daily candlesticks in a row going up, I'm like, oh yeah, price wants to do that. But I can clearly see here, like an area like this, price just faked them out here, okay? Price tried to go up, but it's red, okay? Red candlesticks, and they're very sideways, and then market just dumped, okay? But then we have a low right here. Green heavy candlestick. I'm sure this candlestick was green too before the close. And then green candlestick, okay? Super heavy low right here. Green candlestick, green candlestick, green candlestick, okay? Even right here. Green candlestick, green candlestick, green candlestick, right here. Okay, same thing. Green, 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 green in a row. So if you're not seeing at least a couple of green candlesticks going in an upwards direction on the daily, then that low just isn't true. Okay, the low is just it's pointless. Okay, it's what you want to be looking for. Look at this low here. Okay, this low worked out, it formed, and then we started seeing green daily candlestick. See, I would have answered on the second one. I never answer on the first one in the zone because I don't know if price really wants to bounce there. But if I see another green candlestick and then another green candlestick, I'm like, oh yeah, that's cool. But price, it was pretty much close to the area of resistance here, and then we'll see if price wants to continue from here. Okay. So price decided to fill in this area of resistance right here. Okay, we have this area of resistance right here, and then price falling down right here in the zone. Okay. And then one day price will try and break this area potentially, and then we'll try and go up to this area of resistance, I assume, up here. Okay. So could wait for price to find another V and then take the whole side upwards like that. Okay, but right now it's just not ready. Okay, market is dumping on this, and it gotcha. So here, gotcha. So if I bought right here, I would close my first contract here, just because price keeps spamming this resistance. Okay, I would close, yeah, close the first contract here, and then if I have more, then I'll go ahead and I'll close the next one up here. And this is why I buy years out though. But even if I, yeah. All right, let's go ahead and talk about how we can go ahead and make income by trading options. It's going to be a simple guide, an easy guide, and we're going to go ahead and break down the fundamentals of why stocks go up in the first place, what options is, and how we're going to use this whole logical formation to make some money. So one, let's talk about what an options is in the first place. So an option is going to be a contract that lets you trade 100 shares worth of value. Okay, so it's pretty much going to be a leverage asset, and it gives you the power to trade 100 shares per options contract. So if you don't have enough to buy 100 shares, but you have enough for an options contract, then you'd be playing with the power of having 100 shares. Now, the best way to play options is to take advantage of the time. Okay, so on options, you're not just getting 100 shares to play with 100 shares, you're playing against time as well too. So on options, you get paid based off of predictions. Okay, so whenever you're buying an options contract, you're thinking that price is going to go to a certain direction, and if it hits it, then you make money. So it gives you the ability to play with 100 shares worth of product. Okay, whatever stock you play with, one options contract equals 100 shares worth of pretty much leverage. Okay, but the downside to it is that there's going to be time. Okay, so unlike shares where you can sit there and hold forever, options contracts actually have expiration dates. So these expiration dates will trigger whenever the expiration date hits. Okay, so we'll talk about that as time goes on. Every option expires on a certain date. Now, there's going to be two ways you can play options. Okay, you're going to buy a call option, and then you're going to have a put option. So you have a call option and a put option. So call options we're going to play if we think price is going to go in an upwards direction. Okay, so if you think price is going to go up, let's say current price is currently at 26 and you think it's going to go to 28, then you would buy a call option. So call equals up. Okay, if you think price is going to go in an upwards direction, you'd buy a call. Okay, think of a call like, what do you do when you call somebody? You pick up the phone to call somebody. So pick up to call. So up equals call. And a put equals if you think price is going to go down. So if current price is at 26, you think it's going to go down to 24, then you buy a put. After you're done picking up the phone to call, you put down the phone. So think of put down, you put down the phone. Okay, so you're going to be putting down the phone. Okay, so putting that into logistical reasoning, let's go and let's keep talking about certain things. So the stock market, okay, so options give you the ability to buy 100 shares. Okay, you're going to buy 100 shares. And I like to look at the market all the time on my higher time frames. Okay, so the higher time frame that you're looking the market at is the real answer. Okay, so I like to look at the market on 3 time frames. I'm going to be focusing on for options. I'm going to be focusing on the weekly. The weekly time frame is going to be my full eyes for everything too, and so is my daily. Okay, so the weekly and my daily, my higher time frames, they're going to give me the true price action. See where true areas want to be created at and where true areas want to continue towards. Okay, instead of me being tunnel vision on the smaller time frames, on the minutes, getting told a completely different story. Okay, we can use the weekly and we can use the daily to put a logical trade into perspective and win, inshallah. Okay, then after the weekly and the daily, we can go ahead and go to the 4-hour time frame. Okay, so the 4-hour time frame is going to be the last time frame that we're going to go on. And the reason why we're going to use our 4-hour time frame is that in the bottom right, you're on your trading view, wherever, you're going to see something called extending trading hours. Please make sure that that is enabled. Okay, setting trading hours is going to let us see every single candlestick that we need to see that we can't normally see on the daily or the weekly, since the daily and the weekly time frames don't show pre-market or like the weekend stuff sometimes. Okay, so in order to see the full picture and make sure we're seeing everything we need to see, we're going to do top-down analysis. We're going to go from the weekly to the daily to the 4-hour. Okay, from the weekly to the daily to the 4-hour time frame. Okay, and that's what we're going to do. Okay, weekly, daily, 4-hour. Okay, making sure we get the whole perspective and picture. Now, let's talk about why stocks go up in the first place. So stocks just don't go up to go up. Okay, stocks go up for a certain reason. Okay, one, these stocks fuel the economy. Okay, and what the economy is pretty much jobs, money, and just what's going on within the United States. Okay, so these stocks fuel the United States economy. They put jobs within the market. Okay, and jobs lets people feed their families. Okay, and it also generates money for the economy too. The more money companies are making, the more taxes they get to pay to the government, thus boosting the government economy. Okay, so these companies aren't just random companies. Okay, people work at AT&T, people work at Amazon, people work at Wells Fargo. Okay, there's people who work on these actual stocks. Okay, and you might even be working at one of these stocks at some point in time. Okay, there's people who work at Chevron. Okay, people work at these stocks. So these stocks employ people. Okay, and in order to employ people, that means a company has to be making some money. And if a company's making money, that means they're paying taxes to the government, which is helping out the economy. Okay, so stocks have an invitation to go up in an upwards direction. There's also going to be these things down here, which you're going to see the blue D's. Okay, the blue D's at the down here are going to be called dividends. So whenever a company is profitable and it starts making money, what it's going to do is anyone who's investing into it, they're going to give them some money back. So the whole reason why companies put stocks on the stock market anyways is because of the fact that they want to generate some more money for themselves. Okay, so they're going to generate more money for their company by having people invest into them. Okay, so instead of begging for $1,000, they're going to just put their company on the stock market and have 100 million people invest $1,000. Okay, which is going to be a lot better. Okay, and then from there, after they use their profit to do whatever they need to do, whether increase company production, hire more people, pay more people, etc., they're going to go ahead and pay what's called dividends. Dividends are going to be money that they pay out to the shareholders. If a company has enough money to pay out people who aren't even employees, but they can pay out its investors, that's a really, really, really good sign. Okay, a good sign that the company is making money, okay, and that the company wants to continue in a positive direction, most likely. Why? Because it wants to take care of its investors and wants people to keep investing. It's just paying people for no reason. Okay, there's a reason why they give those dividends out. Okay, they want people to keep investing. Like, come on, we'll pay you guys to invest into us. And then they're going to take their profit, do what they need to do, and then go ahead and make their trade and do what they need to do based off of that. Okay, so let's go and let's talk about hopping on the chart, what we need to do to find a setup, and the type of setups I like to take in first place. So I'm going to start off with the type of setup that we just don't take. Okay, so the type of setup that we don't take is we don't really take trades when they're all-time highs. Okay. So if market's at all-time highs, that's not something that we want to trade. Okay. So all-time highs means that market, it doesn't really have much further it can go in upwards direction. Okay. So when market's at the tippity top, okay, it can't really go anymore. We're gonna stay away from that until market decides to come down. Okay. So even here on Google here, okay, and I'm gonna always start off on my weekly time frame. Okay. So I'm gonna look at the highest area of resistance all the time. Okay. So once again, these companies employ people too. Okay, they're competitive. And one way companies can be competitive is by having the highest share price. So if one tech company has a higher share price than the other tech company, it's going to clearly show that one tech company is more valuable than the other. Okay. Share price is going to show how valuable something is. And this is a competitive world. Human beings are all competing with each other for the best spot. Okay. And there's people coding many hours behind these companies, working behind these companies, investing. So they want to see their share price go up so they can increase their revenue. Okay. And pay out more to their investors, which is going to signify people to invest into them back more. So it's a full circle plan if the share price goes up. A lot of advantages. But what I'm going to stay away from is when price is already near all-time highs. Okay, I can see there's not much of a gap here left to the all-time highs. There's around 5 points left, okay? So even if I did take this trade here, okay, which would be possible, I know that price wants to always break all-time highs. Why? Because it's a competitive market, once again. Price has incentive to go in an upwards direction. So that's why for options, I'm only going to be focusing on call options. That's all we're going to be playing. If you're playing the United States stock market, you should only be playing call options. There's no reason to short the market. You could just buy something else that already made a low. Okay, so you could see Google decided to make this low down here based off of this area of support right here. And we're going to jump into exactly what that is. And then price decided to bounce in a upwards direction. Okay, and we know where it's going. It wants to meet up with this area of resistance and try and break it. So just like we know, areas of resistance will either try and reverse or break. Same thing with support. So we can see support decided to bounce at the same place twice. And what support is, it's going to be an area of demand. Okay, once again, we're going to be looking at everything on our higher time frames too. The weekly, the daily, and the 4-hour are going to show you the true key areas of support and resistance. So support, it's an area where buyers are, and it's going to signify demand. People want it right there, okay? And buyers are stepping in. So support has the ability to mirror itself like that. Price decided to bounce in an upwards direction at one area of support. Price came all the way down and bounced at the same area of support again. Okay, that's how simple market can be. Okay, 2 areas of support being bounced at, and then price decided to go in an upwards direction. And then we could see here, price stopping at this area of resistance here. Okay, price fell down once, fell down twice, okay, and it tried to fall down the 3rd time, but now we're trying to get above it. Okay, so we came up here, fell, came up here again, fell, came up here again, fell, and now we're trying to break above it. Okay, so just like areas of support can bounce on each other, we also can have areas of resistances bouncing on each other. Okay, so even if market decides to run through it, market can still repeat an area. Let's talk about what that means. So say price decided to bounce at an area of support. Even if price broke the support, if price came back up and then bounced at the same area of support again, that would still be a good area for me to go ahead and purchase because it's doing the same thing. Same thing with resistance here. Okay, if I was taking a certain example like this, okay, then you could see price would still potentially mirror what it needs to, even if it ran through the original one. Okay, so, and that's gonna be the same thing said with break and retest too. So price formations will always look like a mirror. Okay, it'll always look like one of these things. Okay, it'll either bounce at the resistance twice or bounce at resistance twice like this, even if it ran through in the middle, or bounce at support immediately, one support into the next, or support, run through it, and then bounce at support again after it comes back above it. And then we have the ability for price to take the area of resistance, wait for price to break it, and turn it into support. Okay, and then wait for price to go in the upwards direction. Okay, so support can be broken, and also turned into resistance. Okay, so this is mainly the setup we're going to be focusing on though, since we take calls. So we're going to be waiting for resistance area to be broken, and then we can wait for that area to turn into support. And if so, we can take it up if it's probable. Or we're going to take a support mirror where price is just going to bounce at certain low like this and then bounce again. Okay, making it extremely easy, making it easy to be successful within the market. Okay, so the reason why we're closing at areas of resistances is because these are where areas can reverse at. If we're buying a call option, that means we're expecting price to go in an upwards direction, just like the workers are, just like the competitors are, just like the CEO is. Okay, they all want their stock to go up. Okay, so it's a bunch of people who want the stock to go up versus down. The CEO doesn't want it to go down. The employees don't want it to go down. We don't want it to go down. Okay, so that's more people who don't want it to go down than there does. And the government doesn't want it to go down. Because if these companies can't stay alive, the economy would suffer. Who's going to bring our Amazon packages? Okay, things like that. Okay, these are important companies that run the world. So price is either going to bounce at areas of support, okay, or it's going to fall down at areas of resistance. Okay, and why price decides to fall down at areas of resistance is because there's too much supply. Okay, there's way too much of it and people want to sell off. Okay, they're already up a bunch of money, and it's going to indicate an area where sellers are going to be at. Okay, so resistance indicates that's too much supply, so people are going to go ahead and sell. Okay, they got in way down here. Of course, they're going to go ahead and sell. It's a left to right chart too. Okay, so people got in way back here. Of course, they're going to go ahead and take profit eventually. Okay, so whenever you see market going down, all it is people taking profit, taking their money off. Okay, and since I know price wants to keep going in an upwards direction, since the CEO, the employees, and we want it to too, and the government does too, I like to only take trades when I have resistance above current price, so price has something to travel to. Okay, and even if price decides to reverse at the area, okay, like it did over here, even if price decides to reverse at the area here, 1, 2, and then 3 times, right? One time, eventually, inshallah, it'll break the area. And if it breaks the area, it's going up to the next area of resistance. And it'll try and break this and maybe reverse here. Okay, and then break this, maybe break and retest and continue on. But price always wants to do one of two things when it comes to the stock market. It wants to always try and chase an area of resistance above current price to either reverse at it or break through it. Okay, so we're always going to be chasing an area of resistance above current price or an area of support above current price. Okay, because we know, just like we talked about, support can turn into resistance. Okay, so price might need it to come up to the support, turn into resistance, and then break the resistance. Okay, but we know price at least wants to go up to the area of support above current price to maybe turn it into resistance, so price can go down further, collect ammo, make a new low, and then break the previous area of resistance and support, making it line up with the new area of resistance. Okay, so that's how things work. Now let's go ahead and jump into some setups. Okay, so what I'm going to go ahead and always do is start off on my weekly time frame. But I like to start off on my weekly time frame, and we'll go to 10 through 100. Okay, so criteria I'm going to be looking for. Okay, this is not fit criteria. Okay, this stock right here, it's at all-time highs. So this is why I start off on my weekly time frame. If I zoom all the way out, this is the highest point of the market. Why would I buy at the highest point of the market? So I can eat the whole dip down and then be in the red? No, we're not going to be doing that. Okay, we're just going to go choose something else. You do not want to be buying at all-time highs, because if you're on drawdown getting pulled back on, you're going to be upset. So we're not going to buy at all-time highs. What we're going to do is make good, logical decisions, and we're going to be patient. Do not buy at all-time highs. Okay, unless it's Bitcoin or something like that, do not buy at all-time highs. Do not do that. Okay, and even with things like that, I don't even recommend all-time highs, but some things you're investing into to just stack cash. Okay, you don't really care where you buy. You're just using it to stack cash. You know, price is going to try and break it, or just using it more of like a savings and stuff. But when it comes to your options plays, you have to be extremely precise. Do not buy at all-time highs. Try not to buy anything at all-time highs, because yes, price can continue upwards if it wants to, but since there's no resistance or support above current price, you don't know how high it wants to go up.
So you're pretty much just gambling because there's no structure up here. You don't know where it wants to travel to. You don't know where it wants to stop at. And you're pretty much making random miscellaneous decisions that you just don't want to be making, okay, within a market that can be played if you just play it correctly. Okay, so all-time highs is one thing I'm going to go ahead and ignore. I'm just not going to take that. So I'd rather take something like this, for example. So I'm going to be on my weekly time frame. Okay, and once again, I know price wants to always chase areas of resistance above current price. Okay, so I can get on my weekly time frame and I can see this area of resistance above current price. I'm going to go to my daily. Okay, and I can see the area of resistance up here being created. Okay, before price decided to fall down. Okay, even if I want to do this area down here. Okay, this is the whole area of resistance right here. Okay, we have this area of resistance right here. And then we have the area of resistance right here. Okay. So I can wait for price to easily just fill in this gap here. Okay. And how do I know it's ready to fill in the gap? So this is one thing I'm going to pay attention to. Look at the low. Okay. So on your weekly and your daily time frame, if you see price made a low already, okay, you can see price here making a low. You see price making a low. And one thing we're never going to do, okay, so you could say we have one area of support here, and then I have one area of support here in the same exact area. One thing we never want to do is buy in the zone, okay? I would wait for a candlestick to get above the zone, okay, whether it be on my weekly, my daily, okay? I'm going to wait for a candlestick to get above the zone. So if I see price bouncing at this area of support, right, and then I see price coming down again, so we have this area of support here too. And then let's see I have price coming down here again, right, to bounce up. I'm not going to buy the first candlestick in the zone. Okay, this candlestick right here in the zone, I'm going to ignore it. I'm just not going to play this one. Okay, because it's in the zone. What I'm going to do is wait for these candlesticks above the zone. Okay, these candlesticks are above this gray box where these bounces are. Okay, because I don't want to buy and then see it wicking and then get dumped down on. Okay, no. I'm going to wait to see if, like, okay, price actually wants to confirm the support. Even if you got to wait a couple of days, see if it wants to happen. Okay, just because you didn't get the super low entry, don't cry. That's not money you're missing out on. If anything, this is better. Okay, because it's just showing you that price wants to confirm itself. Now you can clearly see this whole rest of this gap up here is straight profit. Okay, straight profit. From here, price already made its low. You're playing an upwards chart. Okay, Coca-Cola, there's plenty of people who work here. Okay, and price most likely wants to go in an upwards direction here, or already created a low. So this whole area of profit up here until the area of resistance, and we're going to close the area of resistance because price could fall all the way down even lower if it hits that area of resistance. So we know price wants to at least hit the area of resistance. It could either fall down there or it could break out above. But either way, it wants to hit there to see what it's going to do. So we're going to take advantage of that, and that whole gap up until the area of resistance, okay, is what we're going to go ahead and take and what we're going to go ahead and trade. Okay, and we're going to take that up to the upside and use that as the remainder of profit. Now, for the contract, okay, so for instance, I would come over here. So as of when I'm recording this video, it's October 2025, right? So I like to buy at least 3 months to like 2 years out. Okay, so to be safe for this trade, okay, since I found my trade on my weekly, I would go ahead and buy a year out. Okay, about. So this is how I know this is the best contract to buy. I would look in the middle, wherever current price is on your options contract list. You're going to see current price. Whatever the one above the current price is going to be the best contract to buy. I don't care if your take profit is all the way up here. Okay, whatever the one above the current price is the best contract to buy. And the reason why is because on options, you're getting paid based off predictions. So if you think price is going to go to 70, okay, but you buy a 67.5, okay, it's going to be all bonus points. 68, 69 are going to be all bonus points because you're closing at 70, but your prediction that you bought is 67.5. 67.5 is before 70. So that is going to help you make a lot more profit if you buy certain what I call bonus plays contract. Yes, they're going to be more expensive, but it's going to be more worthwhile. You never want to be cheap in options. Okay, being cheap in options is a good way to just destroy money. Okay, we never want to be cheap. If we don't have the profit to buy a contract, we either play something else or we get into stack mode, collect some more funds, and try to buy another contract. Okay, that makes more sense for us to purchase. Okay, so if I take 67.5 here,
and I'm going to go ahead and pull up my price chart. Okay. So this is going to be the options price chart here. So the options price chart is going to show me how much the options contract costs and how much I could potentially make if it hits certain areas. So I could see here, price decided to make this certain low. So just like the actual chart, price made a certain low. Okay, it made this tiny low. And then I could see this candlestick right here. And then price decided to bounce in an upwards direction. Guess what? Price came back down into the same exact low. And it looks like we're trying to go ahead and fill in the area of resistance. Okay, so even on the price chart here, price is looking like a V. So what we want to be doing is just playing V formation. Okay, and we're going to be waiting for price to meet up with these areas of resistance over and over and over and over again. Okay, it's really just about making trading simple, not making it difficult, and just taking probable setups. So when you get on the price chart and your price chart looks exactly how your chart looks, that's a really good sign. Okay, that's a really good sign. That's going to let us know that, okay, market might want to actually do what it needs to do. When you start seeing a V formation and a curl, that's a really, really, really good sign when it comes to buying in the upwards direction. Okay. So even Cisco here, for example, okay, I can see all-time highs up here. Okay, we're not quite at all-time highs yet. So let me go to my daily time frame. I can zoom out. Okay, I can see price decided to make a low right here. So price made a low right there, and let me go to my 4-hour time frame and see everything. Okay, so I could see price made this low here. Got on my daily. Okay, I could see a candlestick above the zone. Okay, multiple 4-hour candlesticks going up. Okay, so even if I bought right here, okay, I know, inshallah, God wills, price wants to have resistance get meet up here. Okay, so even if price were to do something like break and retest off of this resistance over here on the 4-hour, or if it mirrors this area of support over here. Okay, so we can see I have some tiny 4-hour resistance here, which turned into support. And then just like we talked about, even if support gets created, price gets ran through. Okay, you could see price ran through the support here, and then price came back above it and bounced on it again. And then price came back above it and bounced on the support again. Okay, you're going to be able to see it right there. Okay, so that's letting me know that, okay, price is bouncing in the same area of support twice. Okay, still a support mirror. So even if I wanted to take the trade there, that would still be fine. Okay, and I could go ahead and close it at the resistance all the way up here at all-time highs. Okay, so it's still, let me get my ruler, pull it out, and I still have around like 3 points left. Okay, so here, I could do the same thing. I would still buy a year out just to be safe. And I can see on my price chart here, price already made a certain low. Okay, and I can see price wants to try and fill in this resistance gap right here. Okay, and that's going to go ahead and just be our profit, the resistance gap. Okay, because you know price wants to try and break this area. Okay, it's going to either try and reverse at this area there, okay, or it's going to try and break out. Okay, that's just what it's going to do. It's either try and reverse or break out. So even right here, take Citigroup here. Let's say I have price down here. Okay, I could see price decided to make a low. Okay. Price decided to make a low right here. And then it made a low. 4-hour. Okay. Have this area of support here. And then I have this area of support over here as well too. Okay, so I have triple area of support here. Boom, another area of support right here too. Actually, I'll say just double. We'll delete this one. So I have this double area of support here. Okay, so support being bounced off of once, price went in upwards direction, and then price came down again in the same place, gave me a daily close. Okay, so we have the first one, and then we have a daily close above the zone. So even if I wanted to buy right here, okay, I would go ahead and be able to catch the rest of the gap up to the resistance area up here. Okay, and catch the remaining of the 5 points.
Okay, so price is always going to try and hunt this area of resistance. It might not want to break out immediately. Okay, price could definitely hit this resistance and fall straight down, but we don't care because we close at the resistance. Okay, so as long as you close at the resistance, you're going to be good, or support above current price. Okay, so take this trade here on me. So I marked this out a couple of weeks ago here too, and let's go and let's chat about it. So we can see price here. Price decided to create an area of resistance twice at the same area here too. Okay, so let's go and let's talk about it. So price decided to, okay, let's start over here. Okay, price decided to make resistance right here. Okay, resistance is going to be the area where price decides to fall in a downwards direction. Okay, price made resistance right here. Okay, it made resistance. So resistance is an area where price decides to fall in a downwards direction. So resistance can be broken and turned into support. Okay, so resistance can be broken and turned into support. Okay, resistance can be broken and turned into support. Okay, so resistance can be broken and turned into support, which we can see right here. Okay, and that's going to give us the break and retest staircase formation, letting us know that price potentially wants to go ahead and fill the gaps. Okay, so, and then we can see up here too, price decided to fill in this area of resistance up here. Okay, price met up with this area of resistance. So even after we broke out of the area over here, price decided to make a high. Okay, price turned the resistance into support, did it again. Okay, and then price decided to come up to this area. Okay, and then we met up with this gray box of resistance before price decided to fall in a downwards direction. Okay, and now you can see we're above it to this day. But then you can see this area of support here. So resistance can be broken and turned into support, and that can be the same thing said for support. Support can be broken and turned into resistance. So you can see here you have this area of support right here to the left. So we could see price decided to break that area here. Okay, price decided to break the area of support right here and then turn it into support, turn into resistance. Okay, so support can be broken and turn into resistance. Okay, then you can see the resistance got created again over here. So especially when we're reading our chart on the higher time frames, we're going to be able to eyeball everything. Then we can see the resistance got broken, okay, and turn into support. And then we can see here, price decided to head up to the previous area of resistance up here. Okay, and then we can see up here again, resistance got broken and turned into some more support. Okay, resistance got broken and turned into some more support, and price is going in upwards direction again. Okay, so it's just about making it simple. Okay, not making the market hard, taking good trades that we need to be taking. Okay, not taking any bonky ghetto trade. Okay, and not investing in any ghetto company. Okay, we want to be making sure that the company is making some money and is profitable, etc. Okay, so take this example. Go and pull out my watch list here. Okay, this would be something of what I'd personally like to play. Okay, so something with just large areas of gaps to be filled. So I could see here, let's take this stock for example, right? You can see price decided to make a low down here. Okay, and made a low down there. Okay, and then price looks like it decided to continue in an upwards direction. Okay, so we made a low down here. And then we made another low up here. Okay, and then I see a higher low being mirrored over here. Okay, so I see a support mirror. Once again, support mirror. So even if we run through it, it's fine. Support mirror. Support. 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 Okay, support. Confirming the lows. Okay, confirming the lows. And even right here, price potentially wants to go for some break and retest. Okay, we want to see if this area of resistance wants to turn into some support here. I'm going to my 4 hour here, and we can see here. So this is why we need our 4-hour time frame. Okay, we want to make sure our extending trading hours is on. You can see the wick down here. Okay, the wick down here correlates with this area of resistance right here and right here within the zone. Okay, and then price decided to bounce in an upwards direction. So if I got on my daily time frame here, just like the other trade, I, inshallah, God wills, would be able to take it up to this area of resistance up here. Okay, price already showed me break and retest down here. Okay, I can see this area of resistance that was created over here. Okay, I have resistance. Okay, and this is going to be resistance because I can see price falling in a downwards direction from this area. Once, and then twice. Once and then twice. Okay, huge. Then from there, we could see price turn the resistance into support. And I like to get on my daily time frame, and I can see a candlestick above the zone. So I have multiple candlesticks above the zone. Okay, so now I can go ahead and safely take my trade, inshallah. So then I know price might want to meet up with this area of resistance. So it already turned the old area of resistance into support, or it already broke out the area. Now let's go ahead and let's make some progress. We're going to make some money by catching the rest of the gap fill to the area of resistance up here. Okay, so same thing. Since I'm on my weekly time frame and my daily time frame, right? You could see the area of resistance up here on the weekly too, where price suddenly just kind of went up and then came down. What we're going to do is catch the whole remainder of this block up here. Okay, we want price to trickle in an upwards direction, inshallah. Okay, this is what we're waiting for. Okay, waiting for price to trickle up. You want it to trickle up. Okay, that's what you're waiting for. So I'll go path, options, I'll buy a year out. Okay, and then I would go ahead and buy the contract one above the current price. Then I can go ahead and see price made the low down here, and then I would go ahead and be able to just wait for my play to go ahead and work out. I could set alerts where I want to close on the chart and wait for my trade. Okay, so let me go ahead and check out another example here. Okay, so even if I traded something like this, okay, I can get on my weekly time frame here. Okay, can see price decided to make a low right here, and then I see price decided to have this area of resistance created with support here. Okay, and I'm gonna go to my daily, and then I have this area of resistance here, and this area of resistance got met up with recently. Okay, so I can wait for price to go ahead and find a certain low. Okay, whether if price wants to make a low down here. Okay, even if it wants to make a low down here, or even if it wants to make a low where it's at right now. Okay, I would wait for price to come up and meet up with this area, because we could see price decided to reject at this area once and then twice. Okay, it rejected at the same area twice, and it bounced at this area once, twice, 3 times. Okay, so right now this is going to be the range that we're going to be able to play. Okay, if we go down, then we go down to a new low. Okay, and then we could try and bounce maybe at a different low and then wait for it to get to the resistance. Either way, no matter how low it dips down to, once it finds a low, it's going to try and break this resistance up here. So whenever price starts curling in an upwards direction on the daily, we can go ahead and get on our options, buy a couple years out or just a lot of months out, and then take our trade. And then take this trade here too. I marked this today. I marked this yesterday, so I can't fake this. Go. So check it. We have this area of resistance that was created right here. Okay. Once again, like I told you, price is always going to be chasing all-time highs. Okay, it's always going to be trying to break resistances. Okay, so let me go to my weekly here. Okay, I can see this resistance high. Okay, and then I have this resistance high, and price broke out. When price gets past an area of support or resistance, that's going to be called a breakout. So let me get on my daily here. I can see the breakout occurring. Get on my 4-hour. Okay, I can see the resistance got broken, turn into a support a bit. Okay, and it looks like price wants to travel in an upwards direction and meet up with this area of resistance up here. Okay, so we still have, from current price, we still have until this resistance up here, still around 3 points in order to catch the remainder of the trade. And then next take profit would be this resistance up here. And then the other resistance is up here too. Okay, then we're gonna have this one,
then this one, and then final take profit all the way up here. Okay. So let price come to each of these resistance levels here. So resistance there, resistance there, resistance here, resistance here, resistance here, and then we got resistance up here. Okay. We got price passing this area of resistance here with what's called a breakout. So a breakout is when price breaks past a higher time frame area of resistance or support. Okay, and I emphasize higher time frame because that's what we want to be looking at. Okay, a lot of lower time frame levels can really just be tricks and just stuff to make you look at things you don't even need to be looking at in the first place. So you see that price wants to try and bounce the ticket to the resistance. Price could potentially reverse at the resistance maybe. Okay, but for the most part, we'll see what it wants to do. Okay, so this is what I mean when I say like look for a setup here. Okay, we want resistance to be above current price. You want your take profit to be here. We can see why we're entering. Okay, either we're looking for a confirmed low or a confirmed like breakout area. I can see the break and retest got confirmed here, and I can see the remainder of the gap wants to fill into the area of resistance. Okay, so same thing here. Options, I would go about a year out, and then be able to buy the contract one above current price, and then that's going to go ahead and show me the contract cost. Okay. So if I'm right here too, okay, if I'm on AT&T, I like to go ahead and mark a zone at all-time highs, especially if I'm close, for example. Okay, and I could see the daily here making curves. Okay, so I could see price decided to make a low right here. Okay, now I'm gonna go to my 4-hour time frame. Make sure it looks like what it needs to look like. I have a one low there. Okay. And then I have another low created right here near the zone. Okay, and right here. So even though it broke out down here, okay, price decided to try right here. And it's just holding it again. And on my daily time frame here, okay, one outside of the zone, I have multiple daily candlesticks above the zone. I have one right here, and then I have another one right here. Okay, 2 daily candlesticks going up outside of the zone. Looks like we want to try and fill the rest of this resistance gap here. I can get my ruler, measure the gap here, and that'll be the remainder of points I'd be able to go ahead and catch. Okay, get on my options, choose. We're gonna go a year out. Okay, and then contract I'm gonna purchase. I'm gonna look at the current price within the middle, and then I'm gonna go ahead and buy the contract that's one above the current price. And then from there, I can see here too on my contract, price decided to make this certain low right here. Okay, price made a low, and it looks like it wants to fill the V formation. So that V formation is what all your trades should look like. All trades, all options trades should look like a V. All options trades should look like just like this. It should look like an upwards V. Okay, and you should want price to fill the upwards V. Okay, fill the right side of the V. Okay, because this is a left to right chart, so the right side is always going to be the current price action. So you want the right side of the chart to be filling up the upward curve of the V. Okay, so the downtrend is going to be the left side of the V, and the uptrend is going to be the right side of the V. Okay, and we're going to go ahead and catch the right side of the V, catch the upward curve. And even if price wants to reverse here, we don't care because we caught it up to the resistance. Price could resist and fall all the way down there if it wants to. And we wouldn't care because we closed at the resistance. Okay, and then it might want to find an even lower ultimate low and then come back up. But just the fact that we know it wants to chase the resistance and see if it wants to either go lower or break out from the resistance, we're going to take that logic and just trade to the resistance. Okay, we're going to completely outplay the system. Okay, so that's going to be how to trade options for a living. Stay prayed to God, keep grinding, and that'll be the lesson.
Yo! Back. Another episode of Coop Talk. Chilling out right now. I pray you guys are doing well. We're going to talk about the trade journal. Make sure you guys get you one. It's important. It's imperative for success. You got to know what type of trade you're even looking for before you even enter in. You got to know where you're going to close. You got to know why and where you're entering. Why and where you're entering is a really key and imperative part to being successful on the market. Okay, you can't just buy to buy. Whether being a technical decision, whether, let's say, price is in an uptrend, right, for an example, and you see price making higher lows, you're going to want to go ahead and close at an area of resistance where price decided to fall downwards from. Okay, and if you see higher lows being made, then you can go ahead and assume an uptrend is in motion. Okay, so if an uptrend is in motion, you would take your uptrend, you would take your long setup, okay, since you think market's going to go in an upwards direction. Breaking it down logically, okay, breaking down each trade, why you're getting in, how you're going to get in, okay, whether be it you're on futures, make sure you have enough margin so you don't accidentally blow your account and you owe the broker money and stuff like that. Make sure on options that you have enough capital before you get into the trade, and make sure you know what broker you're going to be using, stuff like that, etc. Don't hop in a rush state like, oh, market just opened, let me go ahead and hop in, and you're trying to decide if you're going to use one broker today or the other because you got money in both, and making just bad decisions. Okay, please write them down. Write them down. Okay, write down your steps that you take before you enter a trade. Okay, if we're going to take a long setup, you see higher lows forming, write down the setup criteria. 1, on your higher time frames, is market at all-time highs. Okay, if not, okay, ask yourself, is market in a pullback formation? Is market making higher lows? Does market have room and buying pressure to go back in an upwards direction? Write that all down in your journal, especially if you're a beginner trader. Breaking down all of your notes and understanding the perspective of why you're getting into the trade really helps you at first. Okay, it really, really, really helps you at first, and you got to progress in certain ways, and in order to do that, you have to break it down. You have to break it down. So, talk about stop loss. Write down every single time that you set a stop loss, write down why you're going to close at that area. If you're taking a long setup and your stop loss is at an area of support, okay, talk about if that area of support gets invalidated, then what's the next plan? What's the next stock that you're going to go ahead and trade? Okay, what's the next type of setup? Or you're going to go ahead and be patient and wait for a reset, wait for market to reset and catch a new trade if that old one didn't work out. Okay, it's really important to be patient, and writing it down and strategically formulating your plan is what's going to give you the advantage versus other traders. People hear the term trading and forget that you're competing against other people. When you're trading money with another person, which means that when you're winning, somebody else is losing, and when you're losing, somebody else is winning. Okay, so it's really important to be making the correct and right decisions, and your discipline and your structure is what's going to keep you profitable. You gotta wake up, pray to God, work out Monday through Friday, because you can't be having cortisol, anxiety. You can't be going through certain phases of desperation while you're on the charts, because it will hold you back. And these are things that held me back in the past before I was able to conquer it, thank God. So I don't want you guys to go through those hard issues of, oh man, I gotta pay for this, let me go ahead and over leverage just so I can hit this trade. Or I just lost a whole bunch of money, let me go ahead and double my leverage so I can make it all back. There's no such thing as making it all back in the trading world. Once the money is gone, it's gone. Okay, now if you grow your account to a bigger size, amazing. But don't think, oh, I gotta put on a trade to make this back. Don't ever think that way. And write down in your journal your risk management parameters. Write down, okay, I'm gonna be risking 1 to 10% of my account per trade. If I'm risking 5% of my account per trade, that's 25 trades before I blow my account. That's a lot of room to work with. Okay, it's a lot of room to work with, and taking your time. Don't get in other people's bag. Just stay focused on your journey. Stay focused on your journey. Write down your profits. Don't look at my profits. Don't look at the next person's profits and try to compare. Stay focused on your portfolio, on your account, And your journal is really going to be like your personal story. Okay. And I promise you, there's really times I look back on my old journals and it's cute. It's really amazing. And I thank God I've been able to come so far. A lot of the goals that I would write down in the past have been achieved. And I'm really looking forward to filling up a new journal, taking my plans and trades a lot more serious, and just getting some good trades out for you guys, really, especially. That's definitely what I care about for sure. I definitely want to get some good trades out for you guys. You guys can head over to stackmode.net if you want to catch my trades with me. But putting out some good winners as of 2025. So 2026, looking forward for an even better year, inshallah. So definitely trying to push it harder, be more disciplined, be more structured in every single way. I never want you guys to think I'm just yelling at you guys. I'm also talking to myself when I make these videos too, because it's important. Now, the reason why journaling really helps too, especially in the beginning, even if you're extremely advanced, still do it. It doesn't matter if it's a physical journal as well too. It doesn't have to be a physical journal. You could do it on Discord, Notion, tons of other apps and stuff like that too. You guys can use TradeZella, etc. to track your trades, track your progress. A lot of brokers track your progress too, but it really helps when you write your own emotional notes in between your journal, because you're going to be a lot more emotionally attached to your trades, to your portfolio, and that's going to help you not crash out and make decisions that you wouldn't be proud of. You know what I'm saying? So when you write down in your journal, I will not fail, I will not overtrade, I will take my setup, and this is why I'm entering this setup, you're going to be a lot more inclined to take the proper kinds of setups over and over and over and over again. I promise you. Okay? I promise you. Create your own personal story with this. Build yourself, develop yourself, level up. Okay? If you play video games, I really recommend you guys quit. Once again, I'm not speaking from a place of perfection. Only God is perfect. I used to play video games. So use your journal and write your own notes. Level up your own character. You got your own stats to work on. Okay? See how disciplined you could be. See how consistent you could be. And use your P&L as an equity curve to see how much improvement that you've been making. All the old stats, forget about them. They're in the past. They're all in the past. All the old stats are now irrelevant. It's time to go hard. Create a whole new, fresh journey. Leave all the old losses in the past. Stop looking back. Okay? Look back, repent to God if you need to, if you made a horrible mistake. But otherwise, if you just lost some money on the charts, don't look back. Understand why you lost the money. Study even harder. Grind even harder. More hours on TradingView. More hours studying the free course on Stackmode.net. Watching the free videos. Tons of education. I have a free book for you guys too. So just get yourself in order when it comes to these markets. It's so much money to be made, and it's so much money to flow. Once again, I always talk about the asset river, and I always want you guys' money to be flowing within the asset river. I want you guys to be abundant. I want you to be able to protect and provide for your families. And I want you to be able to live a nice, great life, really. I don't want you guys to be struggling when you don't have to. And I want you guys to be able to get to the point where your whole mindset is just focused on God and just being disciplined. And that hunger, it's really, really going to help when you're tracking everything down, whether it be it on a spreadsheet, personal journal, Discord, Notion, whatever. Track it down. It helps a lot. Okay? You guys are amazing. I love you guys so much. Head over to stackmode.net for all trading education. I'm going to catch you guys in the next one. Peace.
Trading can be difficult sometimes, but through prayer, discipline, and being consistent, you won't have any days of you just sitting at your screen wondering how everything slipped out of your control. Emotional trading days feel heavy, but they don't have to follow you into tomorrow. The truth is, recovering starts with separating the market from your identity. One bad day does not make you a bad trader. Sometimes it's just the wrong mindset meeting the wrong moment. So let yourself step back and give your mind space to cool down, because the clarity never shows up when your emotions are running the show. Once the noise fades and once things shift, the mistakes you made earlier stop feeling like failures and start looking like signals. Little messages from the market about what needs to change, and that shift alone is powerful. It turns frustration into fuel.
Because the real comeback doesn't happen on the charts. It happens in your head. When you decide that today's chaos isn't your story, it's just a chapter, when you choose to reset instead of spiral, when you remind yourself that disciplined trading is built on composure, not emotion, then that's when you'll start seeing the profits flow in. Let's go and let's jump in how we can control ourselves and become a more disciplined trader, inshallah. So, trading discipline, it's going to be the factor that determines if you're going to be profitable or not. Okay, if you're not going to stick to your trading plan, if you're not going to stick to your risk parameters, okay, and if you're going to lead with your flesh, you're going to continue to get those results over and over and over again. Okay, so being spiritually grounded is going to be extremely important. In Quran, okay, it states, and those who, when they spend, do not excessively or sparingly, but are ever between that, justly moderate. Okay, so that means that you want to be spending your money not in an excessive manner, even when you start making 10, 20, 30K a month from trading. Okay, you don't want to excessively be blowing through your money. Okay, take your time and having that grounded mindset, trade after trade after trade mindset, stacking it up over time. Okay, no matter how much money you make from the markets, you're going to stay patient. Okay, you're going to still stick to your risk parameters. I don't care if you start making 50K a trade. Okay, you still wake up, pray, stay disciplined, and keep taking the same type of setups, because exactly what got you there is what's going to keep you there. So don't lose that consistency. Don't lose that discipline that's been built into you just because you start touching the money and the numbers that you finally want to get. Okay. Do not start spending excessively, and do not start making excessive decisions once you start getting to a certain point. Okay. That doesn't mean once you start getting a 90% win rate, okay, to just start putting on 5 trades a day just because you have so much conviction, okay, based off of past results. It's about being consistent today and every single day, okay, and finding peace through God, balance, and moderation. So let's go to the next slide. So you got to recognize the tilt, okay? Check yourself emotionally, okay? You know when you're about to get upset. You know when you have a feeling of wanting to trade over and over and over again, okay? You know when you're having feelings of wanting to crash out, okay? So keep heed of your emotional red flags, okay? Before you can fix it, you got to admit to yourself, okay, that things got to change, that you're broken right now. So an emotional trading day usually involves revenge trading. Okay, so if you take a loss for $200, okay, say that was in between your 1 to 10% of your account risk parameters, right? That's fine. But then you take another trade. Okay, so instead of just using $200, you now lose $400. Okay, and then say you try to put on some size trying to make back that $400. Okay, and then you end up losing $800. Okay, and that's how the cycle starts, and that's how quickly you can blow up your account. So don't revenge trade. Okay, if you take a loss, close your trade, and that's it. Okay, plot out another trade, a cleaner setup, and stick between your 1 to 10% of your account rules per trade. Okay, because trying to make it back will end up turning your account into a whole different spiral in a different direction than you'd expect it to go, a lot quicker. Okay, because if you lose, you might lose again. If you lose again, you might try and risk more than normal trying to make back the double losses. Okay, so I'm telling you, if you don't recognize the tilt, you could lead into a whole different spiral and mental mind space than you'd want to be in the first place. And paralysis. Okay, so staring at the screen, making you unable to execute a good setup. This is why it's really important to have your stop loss set up as well as your take profit too, with limit orders, especially if you're trading futures or Forex. Okay, this way you guys aren't going to have any emotional paralysis. Say something just clips way past your mental stop loss, you're not going to freeze, okay, because you don't want to lose all that money and close out your trade, even though you know you should, okay? And increased size, once again, increased size usually comes into play when revenge trading comes into play, okay? But for the most part, you shouldn't just be increasing your size out of the whim. Stick between 1 to 10% of your account per trade, okay? So don't double down on risky trades out of anger or out of past losses, okay? And check yourself, okay? So ask yourself, are you feeling anxiety? Is your heart racing, okay? Are you cursing at the monitor? Are you breaking things, okay? If so, you got to stop immediately, okay? You got to stop right then and there, okay? Get up, go pray, take a breather, hop off the charts, immediately check yourself right then and there, okay? It's not worth destroying your family's future, destroying your seeds that you have planted in the ground because of a quick moment of disparity and anger. It's not worth it. Okay, keep your account alive. In this game, it's not really about making money. It's about who can be consistent, who cannot be led by their flesh, and who can be disciplined every single day. Okay, so let's head over to the next slide, class. So the pattern interrupt. Okay, walk away physically. Okay, if you notice yourself, especially if you're on prop firm or trading something quick like futures or Forex, where you can instantaneously lose money fairly quickly, okay, you got to get off the charts. Okay, hop off the charts. If you notice you have a trading addiction, you got to pray to God, okay, and really ask to get better. Okay, ask yourself, why are you taking so many trades too? Are you chasing money? Do you have bills that you're trying to pay? Do you have some debt that you're trying to clear? Okay, because you can't trade out of desperation. Okay, trading is not something that you look to when you're dead broke trying to make it out. Okay, you got to get your life together first, get some income, then come onto the charts. Okay, get closer to God, build that relationship with yourself, and know yourself intimately and deeply. This way you can check yourself and check any type of emotional parameters or boxes whenever you feel like you're about to crash out or having a rough trading period. Okay, you can't solve a trading problem with more trading. Okay, you need to sever the connection between your brain and the charts. Okay, so once again, you cannot solve a trading problem with more trading. You have to sever the connection between your brain and the charts. Okay, so close the terminal. Okay, if you notice yourself crashing out, taking multiple trades during a day, okay, you got to close TradingView. You got to close your broker and you got to just hop off. Okay, or sign out of your brokerage account and log into paper trading. Okay, and change your environment. Okay, leave the room, go outside, take a breather, and the change in lighting will really help reset your circadian rhythm. So when you come back on the charts, you're going to be like, you know what, I was tripping. Why was I crashing out and doing all that? Okay, and don't check quotes on your phone. Okay, whenever you enter in a trade, stop staring at it tick by tick. Okay, enter your trade, have your alert set at your stop loss and take profit, or set your limit orders. Okay, and don't look at it. Don't look at it. Okay, because I'm telling you, you might look at it, make a decision that will ruin your trade, okay, and then end up taking another trade, and that could start a whole downward spiral that you don't want. Okay, so understand that trading is pretty passive and hands off. Okay, after you've aggressively studied and gained the knowledge, once you actually hop on the charts, it's going to be pretty passive. Okay, so let's head over to the next slide, class. So you got to reset your biology completely and get out of survival mode. Okay, give yourself a cold reset. So your nervous system is in fight or flight mode, especially when you enter a trade for the first couple of times. Okay, and you got to force it back to rest and digest. Okay, so some actionable tactics. Number one, praying to God. Go to God about all your issues. It's really going to help and really going to build accountability within yourself too. Okay, you can't just be blaming the markets like, oh, market's doing this, market's manipulated, market's not manipulated. Okay, it's been going in an upwards direction, especially United States stock market, year after year after year after year after year. It's not manipulated. You have to check yourself and hold yourself accountable. Okay, if you're making monkey decisions, don't make monkey decisions anymore. Okay, check yourself. There's plenty of times where I've made monkey decisions. Okay, plenty of times where I blew an account within a couple of minutes. Okay, due to the fact that I was chasing that quick money. Okay, so checking yourself and staying in tune with yourself, even when you fail, is going to be an important part of being a CEO and being a boss. When you're a trader, you're not just on here trying to get some money. Okay, you're signing up to be a business person. Okay, you're signing up to be your own boss. You're in control of your finances whenever you come onto these charts. You're in control of when you get in, when you get out, and how much you're going to risk. Okay, so don't run around blaming the market when you got to take accountability for the actions that you did. Okay, so breathe. Okay, breathing is also going to be a really good tactic too, something I've been working on myself. Okay, so breathing is really going to help you out. Okay, if you notice you're about to crash out, close your eyes, take a big breath. Okay, and working out in the morning too. If you notice that feeling of high anxiety or intensity in the morning, make sure you guys start your day with a prayer. Okay, and then go work out. Okay, when you guys work out, your body's going to release a lot of cortisol. Okay, and it's going to be in more of that healing and building mode instead of fight or flight mode. Okay, so your journal. Okay, make sure you guys have a trading journal. I don't care if you do it on Notion, Discord, a physical trading journal, whatever. Okay, just get it out. Write out your emotions. Okay, write out your goals. Write out how you're feeling. Okay, and emotions loop in your head until you write them down. Okay, once they're on paper, your brain is going to feel safe. Okay, to let it go. Okay, so if you notice yourself, you're struggling with over trading, like, man, I keep taking 4 trades a day. I can't accept a loss. Write down why. Write down what you're trying to chase. Why do you want the money that bad? Okay, and break it down logically, and it's really going to help you be more intimate with yourself. Okay, and write answers to these 3 questions. Okay, what specific rule did you break? If you notice yourself losing consistently based off of just emotional decisions, Okay. Ask yourself how you're feeling before you enter the trade. Okay. And ask yourself, what's the worst case scenario? If stop loss gets hit? Okay. Because if I'm hitting my 1-to-4 risk to reward ratio trades, let's say I'm risking $100. Okay. If I'm making $400 per trade, okay, then I'm still going to be profiting $300. Okay. Which is going to give me more extra room in case I ever have a losing streak. Okay. So the worst case scenario is that you hit stop loss. But the thing about it is that if you stick to your rules, okay, you stick to your discipline, you stick to the plan that you wrote down. If you stick to your stop loss, how are you going to be unprofitable? If you have a decent win rate, you're sticking to your risk to reward ratio, okay, and you're staying in between your risk management parameters, trading between 1 to 10% of your account per trade, how could you lose? The math is right there for you, okay? The only way you lose in this world is when you lead with your flesh, okay? It's the only way you will ever lose. If you are disciplined and consistent, it's almost impossible to lose. Let's head over to the next slide. So, radical acceptance, okay? Forgive yourself, okay? Beating yourself up creates more emotional pain, which leads to more bad trading tomorrow, okay? And sunk cost. The money is gone, okay? Once it's gone, don't try and chase it back. Don't try and boot up your account again and be like, oh, I'm about to recover all this. No, don't do that, okay? You cannot trade to get that money back. Once it's gone, it's gone. Once something is gone in the world, it's gone, okay? But that's perfectly fine, okay? Because you can only trade new setups. There's going to be better setups, okay? And view every single loss in life, in business, wherever, okay? Just view it as a lesson. View it as tuition, okay? Some of you might be in college, okay? Paying for your tuition. Treat every single loss in life. I don't care if it's on the charts, okay? Business, relationships, whatever it is. If you need to view it as a lesson to learn and progress and go forward, okay? And you're not your profit and loss, okay? You're your risk manager. You're still going to be the same person if you're making $50 a trade or $50 million a trade, okay? You're still going to be the same person, okay? Your spirit is still going to be the same. So the money is not the thing that changes you, okay? The thing that changes you is the knowledge, okay? And you learn how to keep your spirit happy, how to not go through pain, okay? And that's what we're here to do on this earth, okay? Pray to God and find out ways to keep our spirit happy and avoid pain, okay? If you notice yourself crying at the end of the night because you crashed out your account and you got bills due the next day, okay? You need to learn from that pain so it doesn't happen again, so you don't grieve your spirit, okay? So if you're frustrated due to your own actions, stop doing it. Okay, pray to God on it, check yourself, and come back stronger and better. Don't let it happen again. Let's head over to the next slide. The return protocol. Okay, start small. Okay, don't jump back in with full size. Okay, if you got to scale down, take a step back. Okay, because it's not about the money. It's not about the money. Okay, if you notice yourself crashing out, if you're trading with $200 a trade risk, okay, and you're crashing out with that, lower it. Maybe you should be risking $50, $100, okay? Lower your size, especially when your confidence is damaged, okay? So for the next 3 days, okay, try to trade with 50% size or less, okay? If you just had a horrible streak of losing, crashing out, being led by your flesh and emotional decisions that led you to straight destruction, okay, take a step back, okay? It's all good. You can always come back stronger. So try it for the next 3 days. Try and trade with 50% size or less. Okay, and prove to yourself that you can follow the rules before you're allowed to go back to risking your full normal size amount of capital. Okay, because before you can even start touching the money, you gotta have the discipline built in you. Okay, you're not gonna touch a thing, or you're not gonna be able to keep a thing if the discipline isn't built in you. It won't matter. I'm telling you, it won't matter. So if you're making $1,000 a trade, you should still be happy if you're making $100 a trade. Okay, just the fact that we can come onto these charts, look at candlesticks going up or down, and clicking buy or sell and being able to make money is a blessing. So why are you ruining it for yourself? Okay, please don't make it hard. It's welfare. Okay, it's welfare here. And all you have to do in order to get it, you don't got to go sign up on no website. All you have to do is be disciplined. Okay, be disciplined. And praying to God is going to be the #1 way on this planet to build discipline. Then from there, you guys can start working out. Then from there, start grinding every single day. Then from there, you're going to get very strict on your setups. When you're praying to God every single day, you have a strict health diet regimen, okay, and you're sticking to your trading plan. Trading is not going to be difficult for you. I'm telling you, it's going to be very, very, very simple. Okay. But most people who struggle with this, and it just shows you how undisciplined 99+% of the world is. Okay. The main reason why 95% of people plus aren't profitable is because most people on this planet lead with their flesh. Everyone always wants to feel good all the time. Everyone always wants to be comfortable all the time. Everyone always wants to be happy all the time. And that's not realistic. Okay. You have to be disciplined, consistent, and you have to have that iron edge regardless of what's happening in life. Okay. If you want to live in a fake realm, okay, being led by your flesh, that's fine. You'll continue to get those results. Okay. But if you want to be the 1% in the world who's ready to reap the harvest, okay, who's ready to get the resources, who can help everyone else out, okay, you got to put yourself through the fire. Okay. And you got to come out not tripping. Okay. Let's head over to the next slide. So tomorrow is a new market. Stop tripping about the past. Okay. That little bread that you messed up, forget it. That account that you blew up, forget it. Okay. Whatever happened back then, it happened back then. That was a weak version of you. And it's time for that version to die. Put it away. Okay. Come stronger. Build yourself a whole new version and come way better. Think different. Okay. So wake up, pray to God, and work out. When you guys are working out consistently, it helps your cortisol run through your body a lot less intensely, so you're not going to have random crash out spurts. Okay. Working out is really, really going to help you. Okay. And walk away from the computer too. If you notice yourself pansying on the market, spamming buy or sell because of a loss, relax. Walk away, go pray on it, check yourself. You probably did some emotional stuff that's your fault, and cool down physically. Okay. Then go journal the mistake. Okay. Throw it in your Discord, your Notion, your trading journal in real life, notes on your iPhone, whatever. Okay. You got to release the loop. You cannot do the same things in life and expect different results. Okay. So if you're doing something in life and it's working, okay, you notice you're waking up, you're praying to God, you're grinding, and you're getting somewhere, continue to do that. Okay. But if you throw off the loop, if you notice yourself throwing in random days of doubling your leverage, okay, then your risk to reward and your consistency is not going to be able to be built like that. You can't be risking $100 one day and then 2 days later you're risking $400. It's not how you're going to build yourself. Okay. And then when you return to the market after a crash out series, start smaller. Okay. Start smaller because you're not even ready for the money right now. So if you're blowing up your account, you're not even ready for the money. Some of you guys are thinking about the money, but you're not even ready for the money. Too many of you forget about the grind. If you have a skill, a talent, and discipline in this world and you pray to God, you'll get to some money. But some of you forget about praying to God. You forget about the grind. You forget about the hours of studying that it takes to be successful in whatever you want to be in. Okay. I don't care if you want to be an athlete, if you want to be a CEO of a business. Okay. Whatever you want to do in this world, if you forget about the grind, and most importantly, if you forget about God, you're not going to be able to be successful. That emotional turmoil might catch you, and that one bad day could destroy you. But understand that one bad day does not define who you are in your career. Okay. Stay hard, stay disciplined, stay focused on God, and keep grinding. Don't ever give up. I'll catch you on the next one. Peace.
So what's the difference between major, minor, and exotic Forex pairs? Let's go and jump into a class. So an introduction to the Forex market. So the foreign exchange, also known as the Forex market, is the largest financial market in the world, with the daily trading volume exceeding 7.5 trillion as of 2022. So this is a pretty recent study. It operates 24 hours a day, 5 days a week across major financial centers like London, New York, Tokyo, and Sydney. And it's a decentralized market where currencies are traded over the counter. And it involves speculation on currency, and speculation is going to pretty much mean to where traders can get paid based off of directional bias on currency value fluctuations driven by economic, political, and geopolitical events. And participants include banks, corporations, governments, hedge funds, and retail traders, which are just single individuals. So let's go on and jump into the classifications of the currency pairs, their characteristics, and how they impact the trading strategies. Let's go. So what are currency pairs? In Forex trading, currencies are always traded in pairs because you're essentially buying one currency while selling another. The first currency is the base. So let's say, for example, USD. okay? And the second one is the quote currency. So the first one here is going to go ahead and be the base. So USD before the slash is going to be the base currency. And the second one, okay, is going to be the quote currency. So let's say euro. Okay, so let's say you were trading USD euro. The first term, USD, is going to be your base. And then the second one is going to be your quote. So an example, for example, here in euro USD, then euro will be the base and USD would be the quote. And if the pair is at 1.10, it means 1 euro buys 1.10 US dollars. And currency pairs reflect the relative value and are influenced by interest rates, inflation, and economic data releases like GDP and employment reports. And understanding pairs is crucial for risk management and profit potential in trading. So for example, if you believe that the euro will strengthen against the US dollar, you go long on euro USD. Conversely, if you think it'll weaken, then you'll go short, okay? And long means price is gonna go in an upwards direction that you speculate, and going short means that you think price is gonna go in a downwards direction. So some categories of the currency pairs. Forex pairs are categorized into 3 main types, okay? Based on liquidity, trading volume, and the economics involved. Majors, minors, and exotics. So majors, they're mostly traded and involve the USD and major economies. And minors, play cross pairs without USD and still for major economies. And exotics, involve emerging or smaller economies. And these categories help traders choose pairs based on their risk tolerance and strategy. So major pairs, here's the definition. Major currency pairs are the most liquid and widely traded in the forex market. They always include the US dollar paired with another currency from a major global economy. And majors account for about 85% of the daily forex volume. And the US dollar dominance due to the US economy size and the dollar's role as the world's reserve currency. And high trading volume leads to tighter spreads, okay, which means you're going to be hit with less fees whenever you do close or sell off your trades, and better execution, which means you're going to go ahead and get filled. So when you click buy, you're going to go ahead and be entered in the trade, or sell, you're going to go ahead and be exited out the trade. And major pairs are traded heavily during the overlapping sessions like London session or New York session. And New York session is from like 9:30 a.m. to 4 p.m. Eastern time, okay? And in between that, London session overlaps. So London session ends at 11 a.m. But due to the fact that New York session opens at 9:30 a.m., there's going to be time where New York session and London session are going to go ahead and overlap. And major pairs are going to be ideal for beginners due to their predictability and abundant market analysis available with so much data. And we know this is a left to right chart. That's just how it works. So examples of major pairs. Here are the 7 most common major pairs. Euro USD. So euro/US dollar is the most traded pair globally, has the most volume, has the most money running through it, and has the most people trading it. So USD JPY stands for US dollar and Japanese yen, and is known for carry trades. GBP/USD, that stands for British pound. So GBP stands for British pound. Okay. /US dollar is volatile due to UK politics. So the United Kingdom politics really affect the pair GBP/USD. And USD/CHF, okay, US dollar/Swiss franc, it's a safe haven pair. And Australian dollar/US dollar, okay, it's commodity driven. And USD/CAD, US dollar/Canadian dollar, it's oil influenced. Okay. And New Zealand dollar/US dollar, it's very agricultural focused. And detailed example, so Euro USD, it's influenced by ECB and Fed policies. And for instance, if the Fed raises rates, USD strengthens, pushing Euro USD downwards. So some characteristics of major pairs. Majors exhibit specific traits that make them attractive. Okay, so high liquidity, major pairs is really going to be a spot where trades are going to be able to take place quickly. So if you click buy, you click sell. Since there's so much liquidity, aka people trading or money being flowed into it, when you click these buttons, you should be filled pretty quickly. Okay, so high liquidity, they're easy to enter and exit positions without price slippage. Okay, and more stable. Okay, but can spike on news like non-farm payrolls. And tight spreads, often around 0.5 to 2 pips, reducing the trading cost. And there's going to be abundant information on major pairs, extensive coverage, a lot of government information, economic information, etc., affecting the price. And there's going to be extensive coverage from sources like Bloomberg and Reuters, for example, and different correlations. They often move in tandem with the stock markets or bonds. And these characteristics allow for scalping, day trading, or long-term position holding. And advantages of trading the major pairs. The pros include some lower risk due to the stability and liquidity. They can be cost effective, they have minimal spreads and commissions, diverse strategies are going to be able to play it within them. They're suitable for technical and fundamental analysis, so when you put news and charts together and your TA together, technical analysis, then it could be a really good way to make some money, inshallah. But not without risk, be careful. And global impact, you can react to worldwide events providing opportunities. So for example, during the COVID-19 pandemic, majors like USD JPY saw safe haven flows, creating a predictable trend. And so disadvantages of trading major pairs. So some cons to consider. Lower profit potential, less volatility means smaller price swings, and high competition. Crowded trades can lead to reversals, and new sensitivity and sudden announcements can cause whipsaws. For example, in 2016, Brexit, which was something that involved the European Union, it caused GBP, which is the British pound, US dollar /US dollar, to drop 10% in one day, catching many traders off guard. So even if you were in a good position, due to the fact that you're trading something that's based off of economic news, can still be subject to certain drops or certain uprises. So be careful. Make sure you have your stop loss set, and make sure you're trading within your risk parameters. Trade within 1 to 10% of your account. So the definition of minor pairs are going to be known as cross pairs, and they consist of 2 major currencies, but exclude the US dollar. They represent about 10 to 15% of the Forex volume, and are traded between major economies. And they're derived from majors. For example, European /GBP is influenced by European USD, and GBP /USD reflects regional economic dynamics without USD influence. And USD stands for, once again, US dollar. That's going to be the fiat currency used in the United States. And they're more active during European or Asian sessions. And miners often offer diversification from USD-centric trades. And some examples of minor pairs. Some common minors include Euro /GBP. Now remember, minor pairs do not include US. Okay, so minor pairs are going to be Euro GBP, Euro AUD, which is going to be for Euro Australian dollar, GBP JPY, that's for British pound Japanese yen, AUD JPY, Australian dollar Japanese yen, Euro CHF, that's Euro Swiss franc. Okay, so CHF equals Swiss franc. Okay, and Euro GBP is Euro British pound. And then we're going to have CAD JPY. CAD is Canadian, and JPY is Japanese yen. So for example, GBP /JPY, known as the guppy, it's volatile due to the carry trade interest rate differentials. So some characteristics of minor pairs. So minor pairs have moderate liquidity, less than majors, but sufficient for most traders. And they have higher volatility. They have more price swings than majors due to the fact of different certain parameters. They also have wider spreads. It can consist of typically 2 to 5 pips. Okay, so low liquidity is also going to lead to wider spreads. So beware of that too. And they have a regional focus, influenced by local news. For example, European data for European pairs, and correlations, often inversely related to US dollar strength. And they're suitable for intermediate traders seeking more movement. And pros and cons of minor pairs. Advantages: higher volatility for profits, bigger moves in shorter times, and they're used for diversification too. So you can avoid the USD exposure. Let's say the US economy is going through something, then you can trade minor pairs. Some disadvantages: they have higher cost and wider spreads eat into the profits. So let's say you made $200, okay, on your trade, the spreads would go ahead and make it like 184, for example, okay? So this way you're going to be down like $16, something like that, okay? So they also have increased risk too. They're more unpredictable during off hours as well. And during 2022 for inflation, for example, Euro /GBP fluctuated wildly on the ECB versus BOE policies. So once again, any big economic news that occurs is going to go ahead and affect the price. So be wary. Have your stop loss set. Stop loss is going to be an automatic order that cancels out your trade for you, so you guys don't lose money for no reason. So exotic pairs, here's the definition of that. Exotic pairs are a major currency, usually USD, with a currency from an emerging market or smaller economy. And they normally have low trading volume, making up less than 5% of the market. And emerging economies like Brazil, South Africa, and Turkey are going to be involved. And they have high sensitivity to local events like elections or commodity prices. And they're traded sporadically, with liquidity peaks in specific time zones. And exotics are for experienced traders who are willing to take higher risk, who believe in the future of a certain country, for example, or smaller companies' progression. So some examples of exotic pairs. You're going to have USD/TRY. That's going to be USD/Turkish lira, okay, for Turkey. So USD/MXN, USD/Mexican peso, so the US dollar and the Mexican peso. USD/ZAR, the US dollar/South African rand. Okay, it's going to be South Africa's currency. Euro/Turkish lira, so the European Union currency can be traded with the Turkish currency. And USD/THB, the US dollar, and the Thai currency, the baht. So THB is going to be representing Thai's currency for the baht, and USD/SGD. Okay, that's going to be for the Singapore dollar. Okay, so SGD is going to be Singapore dollar. So, for example, USD/TRY, it's highly volatile due to the Turkish inflation and constant political instability. And certain other countries too that have not a stable government can be subject to certain volatile price action fluctuations, so be careful. So some characteristics of exotic pairs. So some distinct features, class. They normally have low liquidity and they're prone to slippage and gaps. And they have a high volatility, and large swings can happen depending on the news. And that can be a good thing or a bad thing, because they could throw off your technical analysis depending on just certain events. And they have a huge spread when it comes to fees, and they have up to spreads of around 10 to 50 or more, okay? Which could mean that if you make like $200, you could be getting like $100 back, depending on the certain amount of spreads. So be careful. And local influences, commodity and politics dominate, okay? And certain governments are going to be corrupt. And higher swap rates, overnight costs can be significant. And this requires deep research into an emerging economy and see if they're actually improving. And some pros and cons of exotic pairs. Advantages, they have high profit potential, and volatility allows big gains. And unique opportunities, okay, less crowded markets. And some disadvantages, they have high risk and sudden devaluations possible. They can be expensive as wide spreads and low liquidity can make certain things not work out. And limited data can be harder to analyze too. And in 2023, USD/ZAR surged hard due to the fact that South Africa decided to invest heavily within energy business, okay? So surge hard due to the South African energy crisis. So if you make a good investment and the economy starts improving, you could potentially make some good profit based off of that. So the key differences. So comparing the three. So liquidity, majors are going to have the most, then minors, and then exotics are going to have the least. And volatility, exotics are going to have the most due to the fact that they're going to be the most unstable, then minors, and then majors are going to be the most stable. And spreads, majors are going to have tight spreads, so you're going to get most of your money. Minors and exotics have wide spreads. And trading volume is high for majors, low for exotics, due to the fact that majors are more trusted, more news, more data, and risk levels are low for majors and high for exotics. And you could choose based on your experience and goals. And once again, I'm not saying one is better than the other, just do your research before you trade. And liquidity explained. Liquidity refers to how easily you can buy and sell without affecting the price. And majors have extreme liquidity with minimal slippage. And minors can be good but thin out after off hours. And exotics can be poor, leading to higher costs due to the fact that slippages can be destroying you. So if I would think different about trying to swing trade or trying to day trade exotics, I would maybe swing trade. And during low liquidity, exotic pairs like USD/TRY can gap up like 100 pips on news. So be careful. And volatility explained. Volatility measures price fluctuations in the magnitude. So majors have an average daily range of around 50 to 100 pips. Minors move around 100 to 200 pips with more opportunities, and exotics can move 200 plus pips with high risk to reward. Not saying one is better than the other, do your research. And use tools like ATR, average true range, to measure if you want. And here's what spreads are. Spreads are going to be the difference between the bid and the ask prices. A lot of the time, the ask prices is what you're going to be buying at, and the bid prices is what you're going to be selling at. And majors have a 0.1 to 1 pip on average, minors have 1 to 3 pips, and exotics have 5 to 20 pips or more. And a 10 pip spread on exotics means you start 10 pips in the red. And trading strategies for each. Tailoring strategies. Majors, okay? The trend following the trend is really going to depict what you want to do on the majors, okay? And news trading. And minors, they can carry the trades and have different range bound systems. And exotics, okay? They have fundamental analysis and different long-term holding. And always use stop losses and position sizing. And some real-world examples. Applying concepts. So major, European/USD. During the 2022 Fed hikes, the USD strengthened. And minor, GBP/JPY in 2023, volatility from BOJ policy shifts. And for exotic, USD/MXN during the US-Mexico trade talks, swings on tariffs. Okay, so different examples like that can be used. So for example, for a major pair, in this scenario, let's say you're trading USD/JPY during a risk-off event. Japan's yen is a safe haven. In the 2022 market crash, the USD/JPY dropped from 1112 to 101 as the yen strengthened. And the strategy, short USD/JPY on the stock market decline, and you ended up outcome with profitable low spreads, since it's a major pair. And exotic pairs risk. Let's say you're trading USD TRY during a Turkish lira crisis. Okay, may God bless. Okay, in 2018, let's say TRY depreciated 40% against USD due to inflation and politics going on. And strategy, then you could long USD TRY if you wanted to, but wide spreads cost extra. And with high rewards but overnight swaps, eroded the gains. Okay, so exotic pairs, even if you make a really good trade, fees, spreads, and stuff like that could just wipe away the money that you make. And the whole purpose of putting on a good trade. So in conclusion, major, minor, and exotic pairs is the key to successful forex trading. And it starts with majors, you can graduate to minors, and appropriate exotics cost sheets. You can practice on demo accounts and stay informed with economic calendars. Stay prayed to God, keep grinding. Put any comments below. I'll catch you guys in the next one. Head over to Stackmode.net if you want to trade forex or anything trading related. Peace. Class, let's go and let's jump straight into it. Today we're going to be talking about mastering financial analysis, and this is going to be the beginner's guide. So what is a financial statement analysis? Financial statement analysis is going to be the process of reviewing and evaluating a company's past and present financial reports, the three statements, to make better economic decisions. And then it involves calculating key ratios and comparing data over time against competitors. So we want to be making sure we know how to read how much is a company making. Does it have a lot of debt? And are we going to be able to profit off the company due to the fact that A, they're putting a smile on people's faces and it's a profitable company, which is going to affect the future? And is it a company that's hiring people and nonstop making profit? Okay, because that's going to let us know that the share price has an incentive to increase. So it's going to be a comprehensive course on analyzing a company's financial health. Let's understand that the financial statements are going to be the bedrock of intelligent investing, effective management, and sound business decisions. Whether you're an aspiring investor, a business student, or a founder, these skills are going to be fundamental and imperative. So let's take a look at past performance. So you got to look at past performance to identify trends, growth rates, and recurring issues with the company. And comparative analysis, benchmarking the company against its closest competitors, peer group, or industry averages. Okay, see how it's faring up. If it's a tech company, see how it's faring up against other tech companies. If it's a healthcare company, see how it's doing against other healthcare companies. Okay, and do it like that. And forecasting, using historical data and current trends to project future financial performance. So it allows us to answer certain critical questions about a business. Once again, how much money are they making? And are they in debt? It's pretty much going to be the two main questions that's going to let us know if something's going to be a good investment or not. So the income statement, profit and loss, and measuring performance. So the income statement is also known as the profit and loss statement, and it measures a company's financial performance over a specific period of time, for example, quarter or a year, and it shows how revenue is transformed into net income. And the core structure, a journey to profit. The statement is constructed like a ladder, and subsequently deducting expenses from revenue to arrive at different levels of profitability. And the revenue sales. Revenue is going to be the total amount of money that's generated from the sale of goods or services. And this is going to be the starting point. And the first thing we want to look at is the company making money in the first place. Let's check the cost of goods, COGS. The direct cost attributable to the production of goods or services sold. And this includes raw materials and direct labor. And gross profit. Gross profit is the revenue minus the cost of goods sold. And this metric shows a company's ability to manage its production cost. An operating expense, OPEX, the costs not directly tied to the production, and primarily selling, general, and administrative, SG&A, and research development. An operating income, this is earnings before interest and tax, and this represents the profit generated from the core business operations. And let's talk about net income. Net income is going to be the bottom line. And net income is going to be the operating income minus interest expense and taxes. And this is the profit available to shareholders. So the key income statements, ratios. How to analyze the P&L effectively, you got to use margins to see what percentage of the revenue remains at certain profit levels. And gross profit margin is calculated by dividing the gross profit by revenue. And a higher gross profit margin indicates better efficiency in production, which means they can go ahead and scale the business up while still bringing in profit. Okay. So the balance sheet, the accounting equation. So the balance sheet provides a snapshot of a company's assets, liabilities, and the owner's equity at a specific point in time. And it's based on the fundamental accounting equation, which must always hold true. So the foundation assets, okay? Assets equals liabilities plus equity, okay? So this equation dictates that everything a company owns, its assets, must have been financed either by debt or by owner's contributions, which is going to be the equity. So assets, they're going to be whatever the company owns. Assets are anything of economic value that can be used to produce goods or services. And current assets, they're expected to be converted to cash within 1 year. For example, cash, accounts receivable, and inventory. And non-current assets. Long-term items are not easily converted to cash. Okay? Property, plant, equipment, and intangible assets. And liabilities, they're going to be what the company owes. Liabilities represent the company's obligation to external parties. So current liabilities, obligations due within 1 year, for example, accounts payable and short-term debt. And non-current liabilities, obligations due beyond 1 year, for example, long-term bonds and deferred tax liabilities. And section 3, the shareholder's equity, okay, and that's the owner's claim. And equity is the residual claim on the assets after all liabilities have been paid off. And it includes common stock and retained earnings, which is cumulative net income minus the dividends paid. So that's how you get that equation too. And so let's talk about tracking real cash. The cash flow statement is often considered the most reliable statement because it bypasses non-cash entries like depreciation and crucials found in the P&L and balance sheet, and it shows the net change in a company's cash balance over a certain period of time. So the 3 core activities, OIF, the CFS is divided into 3 sections that explain where cash was generated or spent. So 1, the cash flow from operations, CFO. This section starts with net income from the P&L and adjusted for non-cash expenses and changes in working capital accounts. This tells you the actual cash generated by the company's normal business activities. So the key adjustment, adding back depreciation and amortization, which is pretty much going to break down expenses on the P&L, but do not involve an actual cash outflow. And working capital changes. Changes in accounts like inventory, accounts payable, and accounts receivable are adjusted here to reflect real cash movements. And cash flow from investing, CFI. This tracks cash used for investments in long-term assets or revenues from selling them. And the largest item here is usually capital expenditures, CapEx, which is the cash spent on maintaining or expanding PP&E. Okay, so interpreting CFI. So a negative CFI, right, which is going to be the cash outflow, is often a sign of a growing, healthy company that's investing heavily in its future by purchasing equipment or new facilities, looking to scale its business outcome and business income by putting all the profit back into the business pretty much. And a large positive CFI may indicate a company is selling off core assets, which can definitely be a red flag, okay? Which means they're going broke. So if a company's going broke, that's not a good sign. And it's a good sign that the stock might actually crash within a negative direction. So check a look for that. So turning data into insights. Ratios allow us to standardize financial data across companies of different sizes and asset-specific aspects of their health. Most notably liquidity, which is the short term, and solvency, which is the long term. And liquidity ratios, can we pay the bills? These ratios measure a company's ability to cover its short-term obligation using its short-term assets. Generally, a higher ratio is better, but industry context is crucial. So it's current ratio. The most common liquidity metric is it compares a company's total current assets, which is its cash, receivables, and inventory, against its current liabilities, which is its payables, short-term debt, etc. And the ratio below, let's say $1, is usually a 1 sign. And the current ratio is calculated by dividing current assets by current liabilities. So, quick ratio, the asset test ratio. A stricter test of liquidity, excluding inventory from current assets, as inventory can be slow to convert to cash. And this ratio focuses only on the most liquid assets. And the quick ratio is calculated by subtracting inventory from current assets, then dividing the result by current liabilities. So, solvency ratios, long-term survival. Solvency ratios gauge a company's ability to meet its long-term debt obligations, and whether it is financially sustainable. Excessive debt can cripple a business during economic downturns. So debt to equity ratios, DE. It compares the amount of debt financing to the amount of owner investing financing, and a high ratio indicates a company is highly leveraged. And the debt to equity ratio is going to be calculated by dividing total liabilities by the total shareholder equity. Let's talk about the interest cover ratio. It measures the company's ability to cover its interest payments using its operated earnings, the EBIT, and the interest coverage is calculated by dividing EBIT by interest expense. And a ratio of $1.5, for example, or higher is generally considered safe, but the higher is going to be better. So putting it all together, let's talk beyond the numbers. While the financial statements provide the objective data, a world-class analyst always incorporates qualitative analysis to provide context and foresight. And let's talk about the qualitative factors, the moat. These are non-numerical factors that determine the longevity and strength of a company's competitive advantage, its economic moat, and management quality. It assesses the track record and reputation of the executive team and asks, do they make rational capital allocation decisions? Are they investing their profit properly? Okay, and asking those questions is going to be a good thing to know before we just put money into an investment. And doing the industry analysis. Is the industry growing or is it shrinking? Okay, tech industry as of currently in the 20th century has just been booming, for example. And what are the key competitive dynamics? Okay, is there any threat of new entrants? And what's the pricing power of it? Okay, and competitive position. Does the company have a sustainable edge? Okay, patents, brand recognition, low cost reduction, and how many smiles does it put on people's faces? And the small summary of the three statements. Okay, the three financial statements. Okay. 1, your income statements. That's going to be the performance over a period, and it focuses on the profitability. Okay, for example, margins, how much money a company's making. And the balance sheet, it's going to focus on its assets, liabilities, and equity at a point in time, and it focuses on resources. And then we have the cash flow statement. It tracks cash movements over a certain period, and it focuses on liquidity and funding activities. Okay, so look at all of them. Okay. So your goal is to cross-reference the three statements. For example, if the net income, okay, is high, but the cash flow from operations is low, it suggests that the company is booking sales, but not collecting cash. That's a critical finding, okay, meaning that it's sinking, okay? So figure out what you guys want to invest in, okay? Stay prayed to God, keep grinding, and head over to Stackmode.net to learn how to trade and invest. Peace.
All my day traders out there, there's going to be a completely different world to trading, and that's going to be long-term investing. Take some of your profits and siphon that back into shares, certain stocks that you believe in, into certain cryptocurrency plays, into ETFs that pay out dividends, so that you can generate passive income. Use your money as a tool, and that way you're always going to be using your money to generate some more money. Okay, so trading is really going to be more of a career, more of a wealth generating tool, as far as day trading, weekly trading, options trading, and just swing trading, closing position from between 1 day to a couple of months, 2 weeks. And the other one is going to be holding positions for year after year. There's also going to be some long-term tax benefits that come into play as well too. So you actually get some benefits for holding trades for over a year. So I recommend you guys have 2 portfolios, one portfolio for your day trading portfolio and another portfolio for your long-term investing portfolio. It's really going to help you break everything down. And when it's time to do taxes, you're going to be able to calculate and differentiate everything pretty quickly and easily. So let's jump into it. So class, even if you start making 3 figures a day, 4 figures a day, 5 figures a day off of day trading, don't lose yourself. Okay, it's really easy to be reset back to zero, especially after a season of like a long wing streak and market, say for example, swaps the trend. Okay, you might get into some kind of ego horizons certain time, not being able to accept certain losses, especially after you just streak like that. So you had a really good month, you just won pretty much every single day of the one, and then when you take your loss, you might end up taking 2 or 3 trades. Okay, losing 3 times in that day because of the fact you just won so many times. So your brain can kind of get skewed. This is why it's really important to be with God and really just be humble at all times. Focus on the discipline and just forget about P&L. Update your contract size as your P&L grows, of course, but you can't just think money, 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 money. Okay, focus on the consistency in the process and the infrastructure around the type of trades that you're taking in the first place. So once you start making your day trading income as well too, take 50% of that away. Okay, say you make $100 in a day, for example. Take that $50, okay, and then you're going to take that $50, whatever the withdrawal amount is, okay, or say you make $1,000 in a day, okay, then you're going to go ahead and withdraw 500. Okay, so that $500, you're then going to take 30% of that $500, and you're going to go ahead and put that away. Okay, that 30% of $500 is going to be for taxes. Okay, and then whatever you have left over of whatever your withdrawal amount is, okay, take 30% of that, put it away for taxes, and then whatever you have left over, or you can honestly just split it 50-50 if you want. You could go ahead and do 50% of your initial withdrawal profit and then break that down into half as well too. Split that into 2 separate accounts, and that way when you pay your taxes, you're going to have some overhead money. So you can go do whatever you want, either reinvest it or ball out, do whatever you want to do, because your stuff is going to be together. Taxes are paid, and anything that's overhead you can either use to get further ahead or just spend on it if you want. Okay, and that's kind of going to be your reward account, especially when you have overhead after paying your taxes. It's okay to go ahead and ball out. You know, we're still only here for one life, so do that, especially in your tax account. You can use that as a reward for being on top of your finances. So when it comes to long-term investing, and that really means holding position for over 1 year, because remember, there's going to be long-term tax benefits for holding positions over 1 year. And the goal of that is really going to be to just build wealth, security, and you're not going to be trading your time for money at this point. Okay. In hindsight, you are, because you're going to be waiting for things to go up, but you're not going to be wasting physical human exertion in order to gain income. So at this point, your account's going to be built up. Let's say you have around 50K. Okay, let's say you have $50,000, right, inside of a ETF paying you dividends. Let's say that dividend pays you $2,000 or $1,500 a month. So if you have $50,000 invested, right, so that's a pretty average income, right? $50,000. If you have that invested into a dividend, say that dividend is paying you $1,500 quarterly. That's all of your rent, your expenses, etc., paid just because you invested. Okay, so you can actually get $2,000 a month for just being invested. So start working on your dividend portfolio, keep siphoning money into that. And once you have enough investment, the shareholders will pay you out what's called dividends. And you can make like $1,500 a month, $2,000 a month, and have your money put up securely and safely. So forget 401k, Roth IRAs, all this slow type of wealth. There's a lot of wealth you can really be building now. So stay down for a couple of years, you know, don't do anything, just work, grind. You know, get closer to God, work on your spirituality, and it's really going to take you on a long-winded journey, especially once you start touching the 6-7 figures. Your mind can really go aloof. Okay, so it's really important to just stay humble and keep reinvesting that profit into cycles. This way, you're not even going to get the chance to blow up your account in the first place. Okay, when you're taking that profit and constantly reinvesting it, and you have the mindset, you've trained yourself to understand, like, okay, money's just a tool. Like, I'm not just going to use this to go splurge and do X, Y, and Z. I could just get wealthier and then let everything pay for itself. Because when you get to a certain point of investments, you can pretty much live completely for free. And living for free is just no stress. You don't have to physically exert to pay your bills. As long as you have a certain amount of investments, you can live stress-free. You'll have money coming in at all times. You'll be making money every single second. So if you just stay down for a couple of years, couple of months, keep your head down, stay focused, okay? All those friends telling you to go out, etc., that's not doing anything for you, okay? If you want to end up broke in the future, that's fine. But if you don't want to progress, if you don't want to put your family in a better position, then go ahead and slack off. But for the people who do want to actually achieve their goals, get somewhere and provide for their family, stay down for a couple of years, okay? No buying clothes, no buying jewelry, okay? If you have a super nice car, like a premium, for example, okay? I used to pay premium gas. I used to be an idiot when I was around 18, 19. I had an Audi A4 and was paying premium gas during the height of it. It was around $6 a gallon, and I lived in Georgia. So I couldn't even imagine what gas was for people on the West Coast at that time, probably like $10 a gallon. So spending around like $190 or around $80 per fill up, it's really just wasting money, okay? Just driving around doing absolutely nothing instead of investing, okay? And Bitcoin example, I made a mistake where I had tons of Bitcoin, okay? I had around like 30 grand worth of Bitcoin and would just constantly spend it every single cycle. Would just spend it. So me not staying down, me not stacking up really resulted into me realizing like, okay, you can set yourself back years if you don't plant your seeds, okay? You got to think of investing like a garden. You got to really plant your seeds in the ground and let everything sprout and grow over time, okay? But if you plant your seeds and say the tree gets big overnight and you instantly just chop the tree, how do you expect to keep getting fruit? How do you expect to keep growing from that? Okay. So even when you touch that big bag, you can't just chop down your tree. Don't just withdraw all of it and stop trading. No, you got to stay down. Don't get overzealous, reinvest it. And then you're going to be able to get to the point where you can pretty much live for free. Okay. And once again, living for free is going to be just being able to pay your bills, feed your family, and go on trips, etc., without any physical exertion involved. Okay, so work hard now. Okay, you don't have to physically exert yourself forever. If you do the hard work for around like 1 to 5 years, okay, hard investing, hard work, growing your business, growing whatever niche that you want to execute in, then you're going to be able to achieve the goals that you want to achieve. Okay, it's going to be easy to jump into real estate from there, especially with all that capital from there. Okay. And say you were to generate a large income, okay, and have a large savings amount. Say you were to chop down that savings and buy a house, for example. Say you wanted to buy a house or buy a duplex or a triplex, right, and rent it out to a family, okay, or a couple families. Let's say you bought a multifamily, okay. If you use that profit and bought a multifamily, okay, let's say the multifamily costed you like $300,000, $250,000, right? Okay, if you buy that, and you use a good chunk of your savings and you still have money within your dividend investments, you're going to be fine. You're still going to be getting paid around $1,500, $2,000 a month from the money that you already have initially invested in, which is also stacked up on top of that. So just from your dividends alone, you're pretty much going to be able to live. So while your multifamily income is generating, while your real estate profit is generating, whether you do Airbnb, get a multifamily, whatever route that you go, okay, you're going to be able to survive based off of just the investments that you made in the first place. Okay, so it's really important how you spend your money, even just $1,000, right? Instead of buying the newest computer, the newest phone, okay, go invest. Okay, because when you're dead broke, when you end up flat, you're going to be wishing that you could sell those items and restart over again. So don't do that. Okay, make the smart decision, invest. The reason why a lot of people are behind when it comes to bills and stuff like that, living paycheck to paycheck, is because they don't invest. Okay, when you invest, not only do you have your stash, okay, you have money that you can pull out and execute back into your bank account at any time. You have money that's generating you money at all times, pretty much. Okay, especially when you put down good trades, whether it be at options, futures, forex, whatever, your money is going to always be generating you money. Okay, and then when you take that day trading profit, put it into shares, which are definitely going to be always generating you money, inshallah, especially when you invest in good companies. Take Build-A-Bear, for example. Build-A-Bear, it does nothing but go up in a straight line, for example. The company just a couple of years ago, as of 2025, when this video is coming out, was around like $2 a share, okay? and it's had no dramatic pullbacks. It's a really low key stock, but Build-A-Bear is a good company. Okay, it's now at like $72 a share after this video. So it's just a good investment. And once you find really good companies to go ahead and invest in that provide future value to human beings, go ahead and invest in that. Put your money into that. You're not going to regret it. Okay. A large percentage of millionaires come from the stock market. Okay. So after your business goes up, after you start getting a nice paying job, whatever, after your income increases, invest. And this way you're going to be able to sit down and really just sit on your butt whenever you want. Okay. You're not going to have to physically exert yourself constantly for income. That's not going to be reasonable, especially as you get older. Okay, there's going to be certain mental things. Your mental is not going to be as sharp. Your body is not going to be as strong. Okay, so it's really important to invest. So this way you guys aren't going to have to rely on other people. You know, trying to rely on certain things like family and things like that. It's not always going to be the smartest and wisest thing. So you always want to just try and put yourself in a position to where you can provide. Okay, so if anyone falls short, you got them. Okay, so invest. So you be the one to stay down. You be the one to stay in the stack mode. So instead of you falling short, okay, and having to beg, okay, you be the one that's going to take the sacrifice, okay, not go buy all the flashy things, really stay down, okay, get groceries, not be eating out, and not be doing things you shouldn't be doing. So this way, whenever things do get hard, you're going to be the one to be able to take care of the things that need to be taken care of. So this way people don't struggle. Okay. So just stay down, get into stack mode. And whenever anything goes down, you're going to have the financial security, and it's not going to break your bank, because things happen in life. Hospital bills, okay, car crashes. There's a lot of things that just happen randomly in life, and you can't have rent coming up on the 30th and then you have a $600 car repair bill. That's going to throw off all your calculations, and then you're stressing about that. Okay. But when you're investing, you have your money making you money at all times. If something like that happens, you're going to be fine. You're going to go dig in the stash, pull out some money out the stash. You're not going to be tripping. Okay. But when you're reliant on that calculated paycheck only, okay, you're not going to be able to grow within an exponential way. So this is why it's important to start your own business, because this way your income is going to be pretty much unlimited. When you start your own business, your income is based off of how much effort you put in. So however much a business makes is based off of how much effort they're putting in and how much they're helping society. And then B, invested portfolio income too. Okay. So when you invest income constantly, especially into certain things that are almost guaranteed to generate you a positive equity curve year after year after year, you're going to go ahead and subsede your constant income. And then you're just going to be way ahead of things. Okay. So if anything dramatic does happen in life, because life definitely does life, you're going to be cooling. Okay. You're going to be able to dig in the stash. You're not going to be tripping. So long-term investing, it's definitely lower risk for sure. Okay. I'm glad I went through all the day trading struggles at first. Okay. Going through all the emotional highs and lows, making $1,000 one day, losing $900 the next day. You know, going through the emotional high and lows really teaches you emotional control. But as far as long-term investing, once again, there's people who are millionaires who barely look at the chart and just invest into just certain things. So certain ways, effort, especially when it comes to the market, effort is not going to always guarantee profit. Okay. Someone who makes 10 trades a day is not going to be as profitable as somebody who just bought and hold something for 5 years. Okay. A lot of people who just buy and hold actually outperform a significant amount of day traders. That's because day trading is not something that's going to be inherently easy to get down. So yeah, I've been trading for around 2 or 3 years now. And I'll say April 2025 had one of my most successful day trade months. I took 30 trades, won 25. Okay. And the 5 trades I lost was just not looking due to news. Okay. So those were my fault. So that month really taught me, like, okay, if you day trade, you can win pretty much every single day if you wanted to. As long as you're taking the right type of setups, you're waiting for confirmation. I personally trade break and retest, and you're waiting for key levels to be broken. Then yeah, you could almost win every single day when it comes to the day trading aspect. Now, how long your day trades will be, that's also going to be an inherent question. You might be closing like in a couple of minutes. But you're going to be trading between like hours and days. That swing trading area, that's still going to be kind of within the day trading space too. So I'd say anything that you're closing less than a year would be like considered within that same environment. Okay, so be careful with that too. It can come with extreme risk, because especially with futures and Forex, you have a lot of power. You can just instantly click buy and sell constantly, and your money's going to fluctuate. Okay, well, depending on the amount of leverage and ticks amount that you have on, your money is going to go ahead and fluctuate. So the risk is extremely high. Do your research. If you're struggling with trading, head over to stackmode.net. Okay, the risk is going to be extremely high when it comes to day trading. Okay, so be aware of that. Okay, if you just lose your whole check in a minute, you probably did something wrong. Okay, you got to really analyze how much size you're putting down. There's calculations, entry criteria, time frames, and you have to really understand the overall direction of the market before you just start getting in and doing anything. And day trading is really going to require some advanced market knowledge, technical expertise, and your TA needs to be on point. Okay, so if you're technical, type of day trading, okay, you have to really live on the charts. There was at least 2 years of me staying on the charts 16 hours a day. Okay, and I still look at the charts at least 2 to 8 hours a day every single day. So if you want to be a day trader, you have to know how each and every single time frame correlates. You have to know how to read the higher time frame trends, and you have to really understand break and retest. That's really going to be a big thing that's going to help you keep your account safe. I'd say break and retest. Understand that price going in upwards direction is based off of resistances being broken, which you can logically put into hindsight. Height of the market, also known as all-time highs, is always going to be being chased to be broken. So say the Bitcoin height is going to be 100K. Even if price dumps down to 50K, it's still going to try and get back up to that 100K one day and break it. That's just how trading is. Okay, so you have to really know the logistics of the market, understand it's a left to right chart, and do your information before you just start day trading. But as far as just putting some shares into a certain company, just know how to read support and resistance on like your daily time frame, and you can be a pretty decent investor. You don't even have to day trade in order to reach the type of income that you want to receive. But I understand that some people might be day trading due to FOMO too. I have a lot of day trade recaps too. You guys can see it's pretty easy to make hundreds, thousands of dollars within a day, but that's after you've struggled. That's after you've really humbled yourself. And that's after you've studied hundreds and hundreds and hundreds and hundreds of hours. Okay, so it's not something you're just going to jump into fresh and be successful in. Okay, a lot of times it's going to take information and knowledge. Okay, because with day trading too, your emotional control has to be a lot higher. When it comes to long-term investing, you could really just hold for years and forget about it. Once again, there's a lot of people who are wealthy who don't even look at the chart. A lot of people who just had Bitcoin in their Coinbase account, on their USB drive, whatever, in their Phantom wallet, and just came back to it 10 years later and they were a millionaire. Okay, so you don't have to be the best trader of all time or the smartest person of all time to be a millionaire. You just have to really just invest and make the right decisions. So, but if you're going to be a day trader, make sure that you're at least ending the months positive. Okay, and you shouldn't be taking money from your business, money from your savings, and hauling that into your day trading account. Really have some discipline. Okay, and you should need to be earning your position size. So take the account from $1,000 to $2,500. Okay, then take it to $5,000. Then take it to $10K. Then take it to $15K. Okay, start it at $100. Take it to $500. Then take it to $750. Take your time. Okay, grow your account, earn your position size. Don't take, even if you have M stashed, don't go take all of that and throw it into the market, especially when you're new. Because if you lose that, you're gonna be distraught, and you might do some emotional things. Okay, you might put down more size after a loss, trying to make it all back, thinking it's about to be the one play that's gonna save your account. But that's the wrong mindset. That's why risk management is important. Okay, so instead of trading with 50% of your account in one trade and then taking another 50% of your account, so you lose that too, then your account is going on 2 trades. Okay, and that's completely your fault. But you could lose 5% at a time. Okay, 5%, 5%, 5%, 5%. Okay, and then say you take a win for 40%. You don't care about that 20% that you just lost. Okay, because now you just won 40%. Now that 20% is canceled out and you're up 20%. Okay. So the math is in the risk. Okay.
whether being a day trader or long-term investor, understand that math is always going to be within how much risk that you have calculated, and as well as when you buy and when you exit. So taxes and transaction costs. So long-term investing, like we talked about a couple of slides ago, it's going to go ahead and give you lower taxes and lower fees. There's going to be long-term tax benefits for holding a trade for at least 1 year. And you only pay tax when you sell, okay? And that's going to be realized gains. And if you hold an asset for over 1 year, you pay the lower long-term capital gain tax rate, which saves you money. Okay, so fewer trades equals lower taxes and fees, which can definitely eat out your profit. So futures traders, don't just be spamming buy and sell instantly, because a lot of the time the fees are going to go ahead and cancel out the profit that you're scalping. And you shouldn't be trading like that. Trading's not a game. Okay, if you want to just give your money away to profitable people, it is called trading. That's fine. But all the market is people getting rewarded for being disciplined and patient. That's strictly all it is. And if you're getting your money robbed, or if you're not being consistent, that just shows you who you are as your person. So you could either change or continue to be the same. So day trading can be a little tax inefficient. You can still make some great income though. And profits are taxed as short-term capital gains. And these are trades that are held for less than 1 year. And they're equivalent to much higher ordinary income tax rates. So high volume of trades per month, per year, per day, you're going to be subject to just higher taxes and commission friction. Okay. So for almost everyone, both, okay, can be a strong option. But if you're just someone who has a family, has a lot going on, has a big business, you can't really stress about the charts, I really recommend just long-term investing. Okay, you could still make millions of dollars, achieve your goals, and get to where you want to be by just buying shares. Okay, you can buy shares, not have to worry about it. No time decay like options and futures, no leverage or margin you have to really worry about, especially if you're on a cash account. And you can really just stress-free, just invest, let your money sit, let it grow over time, put it in a company that you believe in, and yeah, just let your money work as a tool. Now, day trading. If you have time to study the market for, I'll say at least 6 months, like every single day, constantly, at least 16, 18 hours a day, then yeah, you can go ahead and definitely day trade. Okay, but if you don't have that type of time commitment to put into the charts, then it's not worth it. So your screen time has to be consistent. You have to know how every single candlestick moves on every single time frame. Understand how the market structure is going to correlate as well too. And you got to be really quick when it comes to closing your trades. So day trades are going to be different. If you don't close at your certain levels when it's time to close and you get reversed on, you get emotional, that can turn into a spiral in itself. Okay, so you got to be really strong to day trade. Okay, and swing trade as well too. So take your time. Make sure you guys have tons of screen time on. Test it out in paper trading before you start putting in real money into the market, and make sure that your strategy works. Okay. Make sure that you guys are able to afford to lose the capital too. Don't trade with no rent money. Don't trade with no grocery money. Don't trade with no bill money. Don't do that. Okay, stay down until it's time. Put some income to the side. Once you have some income ready, okay, then it's time to start trading. Take care of yourself first. Okay, clear your debt. Okay, pay your credit cards off. Okay, make sure everything's good and structured, and then we trade. We don't come onto the markets desperate for income. Okay, get your life together first, and then you come onto the markets. The markets are for people who have their life together. Okay, so that's why you get rewarded for one, holding your trades for over a year, because you're not fiending to withdraw your money. When you have a business that's making you income that you can survive off of, you're not worried about the money that you have invested in your brokerage account. Okay, there's a lot of benefits for holding plays for over a year for a reason. Okay, they want to reward people for being financially structured. You can get rich if you're just financially structured. They make it really easy in this world. All the credit you guys can get. Okay, whether it be a business credit and or personal credit. Okay, all the loans you can get with certain things when it comes to real estate loans, and you could flip that into certain things. Okay, all the approvals you'll get. Okay, getting any truck that you want. Let's say you have a construction business. Okay, once you're a put together, financially stable individual, the world will treat you as such. Okay. So investing, it's really going to be the long game, and you're going to be the owner of your shares. You can sell them whenever you want. You're going to be in control of your portfolio. And day trading, it's going to be
I wouldn't say a short sprint. You could day trade until the end of time if you want, but understand that that mental exertion might get to you. So having money in ETFs, having money just put into something that's going to be making your money, so you can step away from day trading if you ever wanted to. All right. Stay prayed up to God. Keep running. Head over to stackmode.net for all trading education. Peace. Class, let's get into stack mode. Let's talk about 401ks and Roth IRAs. Let's put that money to the side and let our money grow into more money. Inshallah. Let's jump into it. Let's talk about how. So we're going to be understanding the fundamentals of retirement accounts and how they function. And we're going to talk about the difference between a 401k and a Roth IRA, the difference between their rules, the benefits of them, and the tax implications. And we're going to talk about some real-world strategies to maximize returns and employer benefits, and develop a step-by-step plan to begin investment for retirement with confidence. So what is a 401k in general? Okay. So 401k is an employer-sponsored plan that allows employees to invest a portion of their paycheck before taxes. So say you're about to get paid $1,000, right, to your bank account. Instead, a portion of that, let's say $200 of it, would go into the 401k, okay, which is going to be a place where your money can turn into more money, okay? So again, a 401k is an employee-sponsored plan that allows employees to invest a portion of their paycheck before taxes, and is designed to grow your wealth until retirement, helping you build financial independence over time. Imagine you earn $50,000 a year and decide to contribute 6% of your income. That's $3,000 annually going towards your future. If an employee matches 50% of that, you're getting an extra $1,500 for free. So understanding the Roth IRA in general. The Roth IRA is a personal retirement account funded with after-tax money, and it gives you the gift of a tax-free growth and tax-free withdrawals and retirement, extreme advantage. So instead of losing, let's say you had, so taxes go by brackets, right? So taxes go by brackets. So the more money you make, the more you're going to get taxed, okay? So let's say you're about to withdraw, let's say you have $500,000, right? And your 401k, say you have a really good paying job, right? Say you've been putting a really, really good chunk of your percentage income into the Roth IRA, right? Let's just say hypothetically, okay? Then, and I know certain things are capped at 8K a year, okay? So a lot of them, you can only deposit 8K a year and stuff like that for certain of them. But let's just say, for example, for $500,000, let's say you're about to withdraw that, okay? Then you would have to pay 40% on that normally, okay? And that's just I'd say 37%. Around 37% of that if you are about to withdraw like 500K, for example, okay? So, but if you make a lower amount and you withdraw a lower amount, then you're gonna pay like taxes. But still, you don't want to pay any taxes at all if possible. You want to try and get as much money as possible, especially if it's from your work check. So yeah. So you can withdraw contributions, not earnings, anytime without penalty. Okay, because you know from our job we already lose taxes or money from taxes anyways. So building a solid retirement plan. So focus on clarity. Okay. Small, consistent actions lead to major outcomes. Keep stacking up cash. It's the whole reason why I'm Stackmode Chris. I want to teach you guys, one, how to keep God first. Make sure you guys are praying. Make sure you guys are staying humble. And make sure you guys understand that you don't need too much, okay? Especially not right now, okay? There's going to be times where you're going to have time to pop it, okay? If you want to know what popping it is, there's going to be times where you're going to be able to buy the cars you want, okay? You can buy the houses you want. Okay, you can get the clothes you want, okay? Inshallah, if God wills. But we gotta make sure that we're investing first. Put that money to the side. Don't go buy the Jordans and the cars, the houses, and the clothes now. Invest into something that's gonna make your money turn into more money, okay? So put some money to the side, okay? Instead of getting the whole check from your job, put some more into your 401k, okay? Put some to your Roth IRA. Put some aside. Stack it up. Let your money turn into more money. Money's a tool. I cannot stress that enough. Money's a tool. Don't be too attached to it. Even if you go flat zero, God got you. All right, keep praying. Stay consistent. You can run it back up again, and don't give up. Promise you, I've gone flat zero plenty of times. Okay, trust the God. Stuck to the process and ran it up. Okay, gone flat broke in debt, was managed to clear it, okay, and just keep grinding, okay? Wake up, keep praying to God, wake up, keep stacking up that cash, okay? And I've learned from those lessons, okay? Learned to live way below my needs, only groceries. I don't eat out anymore. I don't buy clothes every day anymore, okay? I'm not buying steaks like that anymore, okay? I'm in stack mode, okay? I'm praying to God, I'm working out, okay? I'm not going outside if I don't have to, and I'm working hard. I'm mastering my craft. When I'm getting paid, I'm putting most of the money away. I'm investing, okay? Being grateful for the opportunity that God gave us, okay? And our body can only take so much, so let your money turn into more money so you can enjoy life, all right? Take care of your mental health, enjoy a trip with your family, enjoy a trip with your wife, your husband, and do what you need to do. Stay consistent and stay praying up to God and just keep grinding. I'm telling you guys, it's gonna pay off. When you save the money and you put it away, act like you're broke, okay? But have it all invested. Okay, I'm telling you, if you act like you're broke and you just invest, it's gonna be amazing for your mental health. It's gonna make you stay consistent. It's gonna keep you hungry. It's gonna make you a dog, okay? You're gonna keep going hard at your craft. You're gonna want it bad. You're gonna be asking God for help in each and every scenario, okay? Stay consistent. Put the money away, invest it, and act like it doesn't even exist. And I promise you, you're gonna be able to run up that big bag. Inshallah, you're gonna be able to take care of your whole family. Inshallah, stay consistent, okay? Stay out the bar. Stay out the club, okay? Don't be doing things you don't need to be doing. Stay away from people who aren't being consistent. And keep going. You got people to take care of. I promise you. You're going to be feeling like the one when it's all said and done. Stay down. It's going to all make sense. Whatever you're doing, stay down with it. It's going to make sense in the end. I promise you it's going to make sense in the end. Stay down with it. So, I don't care if you guys have $50 right now, okay? Put 25 of it away and stay down. Okay, live off the other $25. Stop spending the whole check. When you get paid, put it away. If you make $1,000, right, a check, pay your bills, okay? Take care of your groceries, take care of who needs to be taken care of, your kids, your people, husband, wife, whatever. Do what you need to do, okay? After that, right? Make sure it's straight things you guys need to be taken care of. Nothing but bills. If it's not bills, forget it. If it's not bills, you don't need to be spending money on it. Take care of your bills, take care of your groceries, and then invest. You gotta act like you're broke. Stay down, okay? Invest right now. If you got $5, invest $4 and stay down with that $1 until you run it back up. It's the mentality. And even once you start touching 6 figures, 7 figures, 8 figures, 9 figures, you're gonna be in that stack mode mentality. You're gonna wake up, pray, go work out, put that money in the stash. Even if you make 50 grand, they're gonna go ahead and put 45 of it away. Live off the 5 grand, okay? Stay in stack mode. It's gonna make you guys stay consistent. And it's fun, because you can go to the stash and go pull an M out at any time. Stay down. You could wear the same fit every single day. You could drive a beater car if you want. But you know what you have in the stash. Don't let anyone break you guys down. You guys are good. Okay? Wake up, pray to God, and stay humble. Stay humble. Keep grinding. If you're not where you want to be, understand it's a marathon. You're not going to get it overnight. It's not going to happen overnight. There's plenty of times I've been grinding 18-hour days thinking things weren't going to work out. And I'm telling you guys, if you pray to God and you keep going, there's a great chance that you're going to get what you want. Inshallah. If it's good for you. All right? God's the best of planners. Just keep going. Keep going hard. Stay down. Even if you see your portfolio on the reds right now, stay down. Okay? Ask yourself, if this is a good investment, okay? If this is something I want to be invested in, okay? And just don't give up. Okay? Don't give up. Stay consistent. I don't care if it's your 401k, your Roth IRA, or individual portfolio. Stay prayed up to God. Keep grinding. Review your portfolio and just don't give up. I'm telling you, it's all going to play out in the end. Stay consistent. Peace. Class, let's learn. Today we're going to be talking about Mono Zero, Zcash, and the evolution of the unlinkable value, and the quest for digital anonymity. And this class is going to explore cryptographic foundations and real-world implications of the leading privacy-focused cryptocurrencies. Let's jump into it. So the transparency trade-off in cryptography. Traditional cryptocurrencies like Bitcoin operate on a transparent public ledger, also known as the blockchain. And while this offers unprecedented security and verification, it fundamentally compromises financial privacy. So let's talk about anonymity versus pseudo-anonymity. Bitcoin transactions are pseudo-anonymous, meaning that they're linked to public wallet addresses. With enough data, these addresses can be de-anonymized and linked back to real-world identities, especially when funds move through centralized exchanges, which have know your customer rules, also known as the KYC laws. So this is how big scammers get caught and things like that too. So when people get off and finesse millions of dollars worth of Bitcoin, etc., and stuff like that, especially if they do any type of withdrawal to any type of bank account or Cash App or anything like that, it can be traced. Okay, so as far as the whole decentralized section and the space to where everything is anonymous, things with enough tracking, and since everything is on the blockchain, which is pretty much going to be the history of every single transaction that happens on the cryptocurrency market, things can definitely be tracked back. So keep that in mind. So sophisticated chain analysis firms can map the flow of the funds, inferring balances, spending habits, and commercial relationships. And this compromises business secrets and personal financial health. So if certain coins can be tainted or flagged due to their history, for example, association of illicit activity, for example, then their value and acceptance can be diminished, which is a key failure of fungibility. And fungibility is where all units of a currency should be perfectly interchangeable. So let's say for analogy purposes, right, let's talk about the glass vault. So imagine a Bitcoin has a glass vault, right, the blockchain, and it's where everyone can see exactly how many coins are in every single box. All right, and let's say the box refers to the addresses. And one of the most routine boxes, even if they don't know the owner's name initially. So that's kind of just how it is. Things can still be traced and tracked with enough data, but for the most part, it's not going to be as vulnerable as far as the sensitive information exposed. Like you're not going to see your last 4 digits of your card number and stuff like that. It'll be your Bitcoin address, which can't really do anything for you. If somebody gets it, if they see the address of the transaction that was done, it'll just show how much the transaction was for, the fees in the transaction, etc., stuff like that. But it can't really trace you back to your own personal wallet, but it will have the address for the transaction. So mandatory privacy by default, the Monero protocol. So Monero launched in 2014, and its design is to completely fungible and private by default, which makes all the transactions appear the same to external observers, and it achieves this trio of mandatory privacy features. So we'll talk about it. Let's start off with the ring signatures. So this hides the sender, and the actual spender is mixed with several non-spenders, and that's the ring, making it computational and feasible to determine which key is actually signed to the transaction, and the transaction is proven valid, but the source is going to be obfuscated. Okay, so keep that in mind as well too. So ring signatures hide the sender. Now let's jump into stealth addresses. Stealth addresses hide the receiver for every single transaction, and for every transaction, the sender generates a unique one-time destination address on the blockchain for the receiver. And the receiver can scan the blockchain and identify the funds belonging to them without revealing their true public address. And let's jump into ring confidential transactions, right? Referring to ring CT. And this hides the amount. And ring CT uses the Pedersen commitments and zero knowledge proofs to cryptographically verify that the inputs and outputs of a transaction balance, right? Which is going to refer to the fact that no new coins were created without revealing the actual value of a transaction. And Monero's core philosophy is that privacy shouldn't be optional, all right? Should be secure, and people should be having high conviction between sending money from one person to another. They shouldn't feel like they are vulnerable within sending information. And Monero's core philosophy not only thinks that privacy shouldn't be an optional factor, but it should be non-negotiable. And it's a feature that's baked into the protocol, guaranteeing a high level of fungibility for all the XML units. So let's talk about selective disclosure via ZK snarks. So Zcash, it introduced a groundbreaking cryptographic tool called ZK snarks, and that stands for zero knowledge, succinct, non-interactive argument of knowledge to the mainstream.
And this allows a user to prove that they know a piece of information, like ownership of funds, without revealing the information itself. So what is a ZK snark in the first place? I know it's a crazy name. So it's a proof system that verifies the validity of a transaction without needing to see the addresses, the amounts, or any other identifying data. And this allows for shielded transactions where the public blockchain only records that a valid transfer occurred, just to make sure that, if someone says, yeah, I sent you your million, and they can actually go check to see if it happened, so you can't get robbed. And for this, you can actually see if the transaction occurred. So don't be foolish. And let's talk about optional privacy. Unlike Monero, Zcash offers both transparent T addresses like Bitcoin and shielded Z addresses. Okay. So it offers both of those type of transactions. And this optionality is often cited for compliance purposes. And compliance is pretty much going to be government laws, things having to be in place so people can send, buy, and sell cryptocurrency. And it's often cited for, once again, compliance and law purposes, which allows users to selectively disclose information if required by a regulator or auditor. So companies, a lot of the times, have to have privacy laws, so all your information can't just be exposed. So viewing keys and memos. Zcash provides mechanisms like viewing keys that allows the Z address owner to reveal the transaction data to an authorized third party. And this controlled transparency is a key differentiator from Monero's absolute privacy. So let's jump to an example here, guys. So using ZK snarks, a company could prove to an auditor that it holds a minimum balance, let's say for over $1 million in a ZEC wallet, without revealing the exact balance or any other transaction history. And they prove to meet the condition, but nothing more. So comparing Monero's mixing versus the Zcash zero knowledge. So Monero's approach, let's talk about the mixing here. Okay, so the mechanism involved in Monero's approach. Okay, it's using RIC signatures, and RIC signatures obfuscate the sender by creating plausible deniability among a group of signers. Okay, and they're going to be in the ring. And the pros of it: it's simpler to implement, and it relies on time-tested cryptography. So once again, ring signatures obfuscate the sender by creating plausible deniability among a group of signers. Okay, making it a hidden circle. Okay, it's a lot simpler to implement, relies on time-tested cryptography, and it's absolutely mandatory for all users, ensuring network-wide privacy so everyone can be safe who's trading within the circle. So, and some cons of it. Transaction sizes become larger, and that could also lead onto the blockchain network and make people have potentially slower transaction verification times due to the complexity of ring verification. So it would just take a little longer for you to receive your money within your wallet if you were to receive money, or if you send somebody to somebody, it would take a little longer for the funds to actually be spendable in their wallet. And that's okay. So Zcash's approach, right? This is going to be a different approach to it. So Zcash, the mechanism of it. So ZK snarks prove the validity of a transaction script without revealing any of the underlying inputs or outputs. So the pro of this, it's a higher level of cryptographic anonymity, okay, and it's zero knowledge, okay, so it's pretty much when the transactions are done, can't be tracked as easily, okay, so that's going to be a big pro of it, especially for people who want to use cryptocurrency for just certain other purposes. And smaller transaction sizes compared to Monero, so it's going to mean faster processing. Okay, so you're going to get your money faster. Good thing. And let's talk about the cons though. So it requires a complex initial setup known as the trusted setup. And though newer versions aim to minimize this, privacy is going to be optional, leading to less adoption of shielded transactions. Okay. So Zcash's original trusted setup was controversial. And the initial parameters, if compromised, could allow someone to counterfeit ZEC. And Monero's design avoids the centralized point of trust because privacy is not optional within the Monero world. So yes, it's a little slower, a little clunkier, not as quick, but safer. So beyond Monero and Zcash, let's talk about the layer 2 protocol innovation. So the quest for digital privacy is not limited to dedicated coins. New innovations are integrated privacy into existing chains and layer 2 solutions. Let's talk about layer 2 privacy solutions. So Tornado Cash Mixers. They use smart contracts and ZK snarks on Ethereum to break the on-chain link between source and destination addresses. And CoinJoin and CoinSwap. And there are going to be protocols where multiple users combine their transaction inputs and outputs into a single large transaction.
making it impossible to map individual transfers deterministically. And advanced zero knowledge. ZK snarks, right? It's a newer version of ZKPs that removes the need for a trusted setup. It's trustless, making them more decentralized and mathematically pure, though computationally more intensive. But we got to remember, just like I just talked about on the last slide, security is going to be optional. So the encryption, right? So the homomorphic encryption, right, also known as the HE, it allows computation to be performed on encrypted data without decrypting it first. And this is still highly theoretical for fast decentralized currency. So ZK snarks, once again, a lot quicker, but still raises a lot of concerns due to the fact that privacy is going to be optional. Keep that in mind. So regulatory focuses, right? Laws, governments got to have their piece of the pie and got to make sure things are safe too. Anti-money laundering companies and governments, the SEC, etc., got to make sure cryptocurrencies are being managed within a safe way so people aren't just getting rug pulled on, getting scammed and getting their money duplicated, etc. So regulators globally are increasing scrutinizing protocols that offer strong privacy, viewing them as potential tools for money laundering, right? And the future balance will be between innovation and compliance, likely favoring optional, audible private solutions like Zcash's viewing keys, okay? So as long as certain government entities get behind it, the anti-money laundering entity, SEC, etc., are all monitoring it, then we could have a pretty safe, decentralized world. Although, even though it's being monitored by regulators, it's truly decentralized. Okay, let me know in the comments below. So let's talk about adoption, compliance, and the fungibility imperative. So primary use cases. So journalism and activism, right? Used to protect donations to whistleblowers or political dissidents from oppressive regimes. Okay, so journalism is being implemented, trying to spread the worldwide spread of cryptocurrency. Okay, spreading how people can do their transactions and just making it more known to the government. And the government itself has been buying cryptocurrency recently as of 2025, and TradingView has now implemented as of October 10th, 2025. You can actually start seeing some cryptocurrency news being linked. So government's really adapting it. Its future's looking strong as far as the cryptocurrency space. So let's talk about some privacy. All right. So e-commerce privacy. Preventing competitors or data miners from tracking suppliers, sales volume, or customer bases. Extremely important for privacy, and then know your customer laws are going to be extremely important to implement on brokers where we put our cards in order to buy some cryptocurrency. And salary protection. Individuals who don't want their employer's treasury balance or personal wages publicly visible. Super duper important for anyone who wants to stay safe or stay anonymous. Okay? You don't got to flex and pop it on everyone if you don't want to. So corporate secrets. Hiding internal fund transfers and merger acquisition activity until legally required disclosures. Okay, so pretty much not exposing deals until things are fully done. So some key challenges: exchange delisting. Many major regulated exchanges, let's say Coinbase or Binance, for example, refuse to list privacy coins due to compliance pressures, limited liquidity, and adoption. And there's going to be some regulatory classification. The lack of transparency often leads to classification as high risk by financial authorities, creating friction with traditional banking rails. And when things are classified as high risk, people aren't going to feel as safe to invest into it, and leading to less liquidity, since now it's going to be, once again, investing into it. And let's talk about the scalability and computation. The advanced cryptographically required, especially for ZK snarks, can increase transaction processing time and costs, though this is actively improving as laws get passed, governments start to analyze cryptocurrencies, regulate things, consumer sentiments start coming out, and things just start getting talked about. And the ultimate success of privacy coins depends on their ability to prove that the financial privacy is a fundamental human right necessary for a free society, and while demonstrating that the tools exist to meet legitimate law enforcement needs. So they're trying to keep everything safe because, once again, a lot of big scammers and stuff like that within the cryptocurrency world, but able to get caught. People are able to return money and stuff like that too. And the cryptocurrency world just really progresses over time. There's been some things I've talked about in previous other lessons too, where there's been instances where, let's say, like a certain amount of Bitcoin Cash, right, got hacked, and people were able to reverse the transactions, giving all their money back
right? And certain things like that just being implemented just to keep the safety protocol of everyone's money flow. Things just get better as people start to, one, come up with more scams. And as people come up with more scams, people can come up with a stronger defense in order to fight it. So thank God for everything getting more secure, locked down, so we can have a safe crypto trading environment. And privacy isn't about hiding that bad deeds, right? It's about protecting individuals with autonomy in a financial system where every transaction can be linked and analyzed. So, Monero, XMR, it's absolute, and it forces mandatory privacy rights through the ring signatures, stealth addresses, and ring 16. And it favors fungibility above absolutely everything, regardless of the transaction time. So it doesn't care about that. It doesn't care how slow a transaction time is, as long as it's safe, making sure that it's locked down, and it's mandating privacy. Let's talk about Zcash, right? The SECC. So optional privacy using Zk snarks, offering the highest cryptographic guarantee with control disclosure, right? Viewing the keys and the future of everything. Moving toward layer 2 and modular privacy solutions that integrate ZKPs across multiple blockchains. All right, guys. So let me know what you guys think about the future of cryptocurrency. Stay prayed up to God. Keep grinding. Head over to stackmode.net to learn how to trade, how to invest, and how to grow your business. Peace.
So imagine waking up in an economy where money can appear out of thin air, or one where every coin is locked behind an unbreakable vault. And that's the clash we're diving into today. Let's talk about quantitative easing versus Bitcoin's fixed supply. And it's a true economic showdown to be talked about. So in one corner, you've got quantitative easing. It's the central bank's money creation lever. And when the economy slows, they print even more, inject more, push more, and it can rescue markets. But it can also quietly stretch your dollars thinner over time. And in the other corner to fight against it, you have Bitcoin. It's a digital asset that refuses to bend, and only 21 million will ever exist. No printing press, no emergency button, just a predictable, halving-driven drip of new supply that's immune to human panic. So let's go and let's jump into it, class. Inshallah, if God wills. All right, so let's go and let's talk about the economic showdown. So, Bitcoin has scarcity involved within it. There's a limited amount of Bitcoin available. 21 million Bitcoin exist. But versus fiat currency, the traditional fiat currency, such as the US dollar, there's an unlimited supply, okay? But with that unlimited supply, things catch up over time. So let's go and let's talk about exactly what I mean. So mechanism, quantitative easing, right? So the term QE, let's talk about it. So QE stands for quantitative, Q stands for quantitative, okay? And E stands for easing. Okay, and here's how it actually works. So it's not just printing cash, okay? It's an asset swap. So step number 1, the central bank creates digital reserve, okay, out of nothing. And they use these reserves to buy treasuries and mortgage-backed securities from commercial banks, okay? And now banks now have the cash reserves and are incentivized to lend it out to companies and people. And in the result of all of this, the central bank balance sheet then explodes, okay? And the Fed's balance sheet grew from 4 trillion, okay, to 9 trillion during 2020 through 2022, okay? So let's go and let's break down the further logic of what this all means, because there's definitely going to be consequences for everything that we just spoke about. And let's talk about it. The Cantillon effect. So who gets the money first? So new money doesn't reach everyone at the same time. It flows just like a river does, okay? And one, the insiders, okay, banks, okay, / government, they get the money first at near zero interest, okay? And they buy assets for cheap, okay? They buy it for a low price, okay? God says no interest anyway, so they finesse the whole system. So the asset owners, right? Let's talk about the rich people. So stock and house prices rise due to the influx of cheap capital, okay? And let's talk about the wage earner, okay? By the time money reaches you, prices for food, okay, just a basic item, let's say like a piece of chicken, for example, okay, or macaroni, okay, 1 year, you might be paying $5, okay, for a chicken sandwich. Next year, you might be paying $7, okay. 5 years down the line, you might be paying $13, okay. You went from paying $5 a chicken sandwich to $13, okay. Yes, we can print infinite currency, right? But there's going to be consequences to everything, okay? It's going to be supply and demand, equal opposite forces in everything, okay? So, understand that the fact that infinite money gets printed means that over time, things have to get more expensive in order to compensate, because people are going to start just having more money, okay? There's going to be more money flowing in the river. So the numbers have to balance out logically, okay? So knowing this, we have to understand that your income has to catch up. So let's focus on point number 2 here. Okay, so point number 2, the asset owners and the rich. So stock and house prices rise due to the influx of cheap capital. Okay, so they go up due to the influx of cheap capital. We need to think about this logically. Okay, so while food, rent, and stuff is getting more expensive, okay, stock and housing prices are also rising. You guys should be trying your hardest to stack as much assets as possible. If you don't know what an asset is, that's going to be anything that's pretty much going to turn your money into more money. Okay, whether it be real estate, okay, you could do stocks, okay, cryptocurrency, so many different avenues, okay, business, pay for ads and start you a digital business or physical business, whatever, okay, just whatever is turning your money into more money, that's going to be an asset, because you have to understand that your income has to catch up. I don't want you guys to be struggling in society, okay, your income has to catch up, and just like God says in Quran, we have to spend moderately, okay. We have to spend moderately. I'm really telling you guys, the key to life is just following what God says, okay? If you guys aren't religious, you need to go start reading the word, man, okay? It really helps a lot. It's a lot of psychology in there, okay? Especially as a trader, an investor, somebody trying to have their finances together, you need to definitely read Quran if you can, okay? So spending moderately, okay? So stop being so much of a consumer if you realize, okay, there was times I was spending my whole bag on DoorDash, on this and that, okay, having no assets stacked. Okay, and I'm not saying don't live life. There's going to be times where we want to live a little life. Okay, I understand. Okay, there's times, you know what I'm saying, I go out, you know what I'm saying, you might pop it a little bit. Live your life, do your thing. But that doesn't need to be a consistent every single week, every single day thing. Okay, save your money. Invest your money. Okay, so when I say save your money, save it in some assets if you can. Okay, don't just have your money sitting in your bank account, because inflation, food, rent, etc. is rising. Okay, which means if you just have money sitting still, you're going to pay more taxes over time. Okay, so always try and keep your money flowing in the river. Okay, this way, by the time tax time comes, you're going to have an easy time paying it off. Inshallah, if God wills. Okay, so let's head over to the next slide. So the response, okay, absolute scarcity. Bitcoin, where my Bitcoiners at? All right. So Bitcoin, the 21 million hard cap, okay? And this limit is not something that needs to be taken lightly, okay? Bitcoin is gonna go away one day, okay? Bitcoin is not infinite, okay? It is not infinite, okay? You need to understand that it's a resource that is going to expire, okay? That in itself, that alone gives it value. Okay, so there's 21 million, okay, Bitcoin that has to be mined until it goes away, okay? Depending on when you're watching this video, you should be able to do a quick Google search to see how much Bitcoin is left, okay? People are starting to buy hundreds of millions of dollars worth, including the US government, so check your watch, okay, because time is ticking, okay? So this limit is not a promise. It's math, okay? It's enforced by tens of thousands of nodes globally. To change it, you would need to convince the entire network to devalue their own wealth, which would be practically not something that people will be wanting to do. Okay. And there's a whole decentralized consensus behind it. So that word decentralized, okay, you might have heard of it. Let's talk about it. Decentralized means no banks, okay, control anything. Okay. No banks control anything. What it is all peer to peer, okay, which means person. Okay, so we got Joe, and then I'm gonna go ahead and we got Jack. Okay, so we got Joe and Jack. Okay, Joe lives in the US. Okay, and Jack lives in China. Okay, Joe hired Jack to do some work for him. Okay, Joe hired Jack to make some ads for him, okay, for his company. Okay, but he's in China though. He's in China. Keep that in mind, guys, okay? If you're trying to wire transfer some money to somebody in China, okay, or somebody in, let's say, Africa, okay, for example, okay? 'Cause I know China has some cryptocurrency laws and stuff like that. So let's say Jack is in Africa, okay? So Jack is in Africa, and you're trying to send some money to him, okay? He's making some ads for you. He's trying to get his paycheck. And what's a good way to pay him, okay? Might be a little difficult to use PayPal. Might pay a lot of transfer fees. Might pay a lot of this, okay? Especially if you start trying to send large amounts of money. They might flag your account and be like, hold on, why are you trying to send so much money to somebody in another country? Okay, they might get questioned, and it's your money, okay? Not cool. This is where cryptocurrency comes in. God is the greatest, okay? So thank God crypto exists now, okay? If you want to send some money to somebody that you hired in another country, your family, whatever, however much you want, whenever you want, okay, you can instantly send your currency. And that's the decentralized network, okay? That's the difference between centralized and decentralized. Decentralized, you can send it when you want, you can send it to who you want, and you can send it to where you want, okay? Whenever you want. Centralized, stuff works on times, okay? I'm sure you guys know that direct deposit time, okay? Waiting for that 6 a.m., waiting for that check to hit, okay? Certain times like that. That's the whole centralized system, okay? Cryptocurrency strikes that out, okay? And let's talk about an immutable ledger, okay? So once a block is confirmed, it is thermodynamically secured by energy. Okay, rewriting the history would require more energy than a medium-sized country could consume. So once it's confirmed, once it's on the blockchain is going to be where all pretty much the cryptocurrency information lives. Okay, once all the blockchain information has been confirmed, okay, and set in stone, shouldn't change. Okay, inshallah, it shouldn't change. So that's what makes Bitcoin a big help in society, especially when we're just trying to live some life and do some things, okay? We might have some family in other countries, and we just want to live like people, okay? Come on. Let's go to the next slide. So the supply shock, okay? Let's go and let's talk about the halving, okay? Halving. So half, as you guys know, 50%. Fraction is 1/2, okay? Because 1 plus 1 is 2. Okay. So programmatic disinflation. So every 210,000 blocks, okay, which happens every 4 years, okay, which is, yeah, pretty much how often it happens, the issuance cut happens by 50%. And this creates a predictable supply shock. So let's break it down. So pre-2024, the Bitcoin inflation, okay, was around 1.7%. Okay. Post-2024, okay, inflation went down to 0.85%, okay, which became scarcer than gold. Okay. And projections, if this math continues by 2028, we should have the inflation at 0.4%. And then 2140, when Bitcoin decides to go away, which is by the time when people calculate, inflation will be at 0.0%, of course. So while the fiat supply accelerates, right, exponentially to pay the debts, Bitcoin supply decelerates, okay? You have to understand that it happens because it's a limited currency, okay? It's limited. It's not something that's going to be here forever. Try and get it when you can. You don't want to be one of those people who regret it and be like, oh man, I should have bought some Bitcoin. And you just didn't, okay? So make your decisions now. Put some money to the side, okay? You don't need to be buying no clothes, McDonald's, no DoorDash, no right now. Buy some groceries, okay? Buy some groceries and grind, okay? Wake up, pray to God, grind, and stay down, okay? Live a little life, of course. Take care of your mental health. But try and put some money away, okay? We got to have this asset flowing. Okay, let's get it, inshallah. So the systematic comparison. So fiat currency, US dollar, man, cash, you know, good old dollars. Let's talk about it. So policy, okay, it changes based on politics and crisis, okay? If the US economy is doing well, then that means our dollar is going to be more valuable. If it's doing bad and we have a lot of debt, etc., the US dollar is not going to be as valuable. Okay, and that's just what it is. And people will want to run to other assets, which once again, assets are things that turn your money into more money. Okay, because fiat currency, the money, is not as valuable. Okay, so they at least want to try and generate more, which makes logical sense. Defense, survival. Okay, so unlimited amount of fiat currency can be printed, press of a button. It's kind of just numbers on the screen. Even kind of same thing with credit too. And system, okay, permissioned. Banks control the access. Okay, they can tell you no, and they can tell you yes. Okay. And the outcome, right? Your savings lose value over time. Okay. Due to the fact that it's not growing in anything. Okay. It's not in the river. Okay. It's sitting still on the rocks. Okay. And let's talk about some Bitcoin. So policy, okay, set in stone with code, okay, can't be changed, which means Bitcoin is going to have the same intrinsic value baked into it a lot of the times. Okay. And of course, there's going to be chart depending on where the price is at, all-time highs versus a low, for example. Okay. But for the most part, with it having that fixed supply, okay, it's going to remain valuable. Okay. Fiat currency, if the US started getting bombed right now, the US dollar probably wouldn't be as valuable. Okay. So certain things just are logical with that. So supply, okay, strictly capped, okay, 21 million, and it's very costly to mine. Okay, you can't just spawn Bitcoin at a press of a button. You actually have to have a whole logistical system. Okay, Bitcoin is created by proof of work. Okay, the computers have to show math. You know, when your teacher asks you to show work, that's what the computers have to do. So it's pretty much a bunch of computers. Okay, or it might be one, however much the person has who's mining the Bitcoin. Okay, and what they're gonna go ahead and do is look for mathematical equal signs. Okay, they're trying to solve a code, okay, to give the hash. Okay, and in that, the computer has to keep solving these codes. Okay, and it has to show work. Okay, and that proof of work, and if it's correct, okay, then they're rewarded with a piece of Bitcoin. Okay, and then they keep doing that, and then every mathematical problem that's solved, then a Bitcoin gets created. Okay, and it's all solved by supercomputers. Okay, could be very, very expensive to run depending on your country. Okay, so before you just go try and boot it up, look into it. Please do your research. Pray to God on it. Take your time. Okay, and it's open to all. Anybody can buy Bitcoin. Okay, you can buy some Bitcoin right now if you want. I don't care if you got $2. Okay, get in that habit of buying assets. Try and keep yourself broke. Okay, because what do you have your cash in your bank account for? Go buy some assets, live off of credit if you can, and stay down. Okay, keep doing that. And then when it's time to pay your credit, boom, 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 and keep the money flowing. Keep it flowing. Okay, don't stop hustling. Okay. I know life happens. Don't get depressed. Keep your head on straight, man. Okay. There's going to be things that go down in life. There's going to be times your emotions are going to be shook up. Okay. There's going to be times where you can't stack up. Okay. Your car might break down. Okay. Things happen in life. Okay. You might have to pay rent. You might have to pay direct deposit on a new crib. Okay. And rent. Okay. Depending on whatever it is, any situation, right? Hospital bills. Okay. Just pray to God on it. Okay. Pray to God on it and keep hustling. Okay. Don't get in your head. Don't get poopy pants and don't get depressed because you got to get to this money. Okay. I'm telling you, when you pray on it, you keep going forward. You keep hustling. Things get easier. Okay. But you got to keep hustling. Okay. After you pray, you got to keep hustling. Okay. Don't grieve. Okay. Don't get sad. Just focus. Focus. Okay. Don't take that money and indulge in food. No alcohol. Okay. If you're drinking, quit that. God says don't do it. It makes you weak. Okay. No alcohol. Take that money, buy some assets, buy some Bitcoin. Okay. Change up your lifestyle. It's really deep. Okay. If you catch yourself buying certain kinds of food, ask yourself why. Okay. Why? Why am I eating these Doritos? Why am I booting this up right now? Okay. When's the last time you had some vegetables, some fruit? Okay. You got to change your lifestyle. You guys are so obsessed with investing and trading, but we all have to realize that we have to change our lifestyles. Okay. This stuff takes money. Okay. It takes money to invest. So if you want to invest, you need to change your lifestyle up. Okay. Put some bread away. It's cool to stay down. Okay. It's cool to save some. Okay. Wear the same clothes for weeks if you got to, but you know how much Bitcoin you have in the stash. You know how much assets you have stacked up. Who cares what anybody's saying? Okay. Because if you want to get to this Bitcoin, it's going to take a certain level of discipline. Okay. It's going to take a certain level of staying focused. Okay. We can't be being lazy when we say we want to be stacking assets. You got to choose. You got to be relentless. You got to be a dog. Okay. So before Bitcoin expires, I don't want you guys to be like, man, I wish I bought Bitcoin. And it's like, that's not how you want to go out. Okay. Leave something for your family. Okay. And take care of yourself. Inshallah. So let's go. Let's head over to the next slide. So the hardness of money, right? Stock to flow. So why hardness matters in the first place? So money is a technology for storing time and energy. And hardness measures how hard it is to produce more of it. So let's talk about the S to F ratio. Okay. And existing supply, okay, divided by the annual production. So let's talk about the real estate, right? High S2F, okay? Because real estate, it's pretty hard to build, okay? You need a whole crew of people. Stuff could be changing now, though, because they do have houses that you can just drop on a plot of land, okay? That's like carried by a giant truck, okay? So it really depends. That could change as humans develop more innovative technology and ways to get housing quicker. But as for now, real estate is pretty hard to build. And let's talk about gold, right? So gold takes about 60 years to double supply. Okay. And Bitcoin, okay, it's the hardest asset ever discovered. Ever. Okay. So gold has a 60 S2F. Bitcoin, as of 2025, has 120 S2F. Okay. It's easy to purchase. Right? It's fiat currency is limited. They're gonna go ahead and dump and blow it. Okay. And if money is hard, okay, Bitcoin, civilization can save for the future. Your Bitcoin is like your gold. Okay. You should not be touching your Bitcoin. 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 Okay. Keep it in the stash. Keep it locked away. Keep those secret keys locked up. Okay. Don't be touching that Coinbase card. Don't do it. It's not worth it, guys. Okay, so let's stack it up. Let's stay down. Okay, spend that credit. Okay, spend that credit and build it back up. Spend that credit, build it back up. Pay your bills, spend that credit, build it back up. Keep hustling, keep grinding. Okay, spend that credit. Fiat currency, Unlimited, pretty much almost not real. But think something like Bitcoin, okay, something like real assets like gold, okay, that there's limited resources and actually exist, okay, whether you're buying the gold, ETF, etc., just understand that investing into assets that have value are going to be a lot more worthwhile than hoarding fiat currency for no reason. So let's jump into the next slide. So the verdict of everything, okay, we're witnessing a global competition between two monetary operating systems, okay? You got the debt path, okay? Fiat requires inflation to service global debt. So your savings are the fuel for the system, okay? Eating it all up. And then you got your true savings path, okay? Bitcoin, it's an exit valve, okay? A savings technology that cannot be debased by any central authority, okay? And this is not financial advice. Do your own research, okay? Do your own research, okay? I'm not saying go take all your money, dump it into Bitcoin, but do your research, check it out, okay? Check it out and do your thing, okay? Stay prayed to God, keep grounding. Head over to stackmode.net for all trading education. And I'm going to catch you guys in the next one. Peace.
All right, let's talk about how to buy stocks in crypto at the right time. So we'll talk about trend trading and we'll talk about pullback trading. So both are going to be great ways in order to make some profit, both using different scenarios. And we'll talk about pullback trading first. So pullback trading is going to be when you're buying in an area below where current price already is. So if price is going in an uptrend, you can just wait for price to come back down, buy it again, and take it back up. Okay, this way you could catch an even bigger trade, catch larger profits, and you might even be able to sit on your trade with a lot more safety too, due to the fact that price already dipped. And we know that the stock market and crypto markets are markets where people want to go ahead and hold and gain APY per year. That stands for annual percentage yield. So people are trying to gain APY on their money. I know I definitely am, by holding in something that has value, whether it be in a cryptocurrency that has value or a stock that has value. Okay, so you invest in the future, buy at certain lows, and let's go ahead and let's talk about how we can identify certain lows and how we can buy at these certain areas. So let's go. So first thing we're going to go ahead and have to do is hop on our higher time frames. Higher time frames are going to be important. We got to see everything. We cannot be tunnel vision on the smaller time frames. Okay, if you're on the minute time frame, you might see a downtrend, but then whole time when you're on the daily time frame or weekly, you'll see the trade going up in an upwards direction month after month, week after week, year after year. So make sure you're on your higher time frames doing your analysis before you scale down. You can use your smaller time frames, but you can really just use them in order to get in at your entry. Okay, so you can use like your 1 minute to get in at your entry, but all your analysis for the most part should come from these two key time frames. They should come from the daily and they should come from the 4 hour. Daily and the 4 hour are going to be your two time frames that you're going to have to use in order to catch some profitable trades. You got to see the real trend. So the daily is going to come in play, and then the 4 hour time frame is going to be used in order to show you any candlesticks that you can't see on the daily. Okay, due to the fact that stock market is only Monday through Friday. So sometimes extending trading hours is going to have to come into play. So your 4 hour is going to show you certain candlesticks that you might not be able to see using only the daily candlesticks. Okay, so that's your 4 hours going to have to come into play. And then you could scale down to your 30 minute as well. Okay, personally, I like to go down to that after my 4 hour too, just to verify my entry on an even smaller time frame. Make sure everything correlates, make sure it all lines up before I get in a trade. I'm not going to risk my bread doing anything on the block. I'm going to make sure that playing structured trades that have logistical planning behind them. Okay, one of them making sure we're making some bread in the markets, not wasting money that we've worked hard for. Okay, so buying pullbacks are going to be extremely important. Stop buying at all-time highs. Okay, don't hop on Twitter, don't hop on Instagram, YouTube, or anywhere and see hype being talked about. Okay, a lot of people are just now buying in Nvidia, for example, and a lot of times by the time things are being posted, stuff is probably already at all-time highs. Okay, by the time media gets things, it's already too late for the most part. So here's how to identify real dips. So one, use your daily time frame and see where current price is at in the first place. Okay, current price is at all-time highs, you have to wait for a pullback. Okay, don't buy at all-time highs, because one, think of it logically. People got in way over here to the left.
Okay, some people have been holding these trades for years, way over here. Okay, they're going to sell eventually. So anytime price makes an area of resistance and falls in a downwards direction, all it is people taking their bread off the market. Okay, nobody's about to sit and hold for an unlimited period of time. Once people are up some profits, 1,000% plus, okay, people are going to be like, you know what, these are some great gains. Let me go ahead and take some money on off. Okay, especially when they've been holding for a few years, definitely down to go ahead and get paid. Okay, it's a lot of money increase within these past couple of years. Okay, if you've held NVIDIA for 5 years, for example, could have got in at around $50 a share. Okay, and price today is at $252 a share. Okay, so that's almost a 4x of your money. Okay, so you can put your money in a shares calculator too to go ahead and check everything out and see the actual percentage yield you would have gone ahead and returned based off of that. Okay, so prices at all-time highs. Don't buy at all-time highs. Wait for price to pull back. Okay, so you're going to be looking for two things on a pullback. You're going to be looking at an area of support to be touched again. Okay, price can either mirror supports, okay, the same support area that it bounced off of another time, or it's going to go ahead, bounce down, and try and turn an area of resistance below current price into support. Okay, and that's primarily where your pullback areas are going to come from. It's either going to be an area of support below current price or an area of resistance below current price that you see on your 4-hour or daily time frames. Okay, so my daily time frame, I can see where all-time highs. Let me go ahead and put a line here at the top of all-time highs resistance. Let me get on my 4-hour time frame, zoom out, and let's go ahead and identify the best levels here. So stocks is going to be a bit different. I'm going to go to my indicators here, turn on that market open marker indicator, the one by Charmeager. Okay, then from here, I can get on my 30-minute time frame. Okay, so I'm going to go ahead and look at areas in between these green shaded boxes. This is going to be for stock market. Okay, cryptocurrency is going to be a little bit of a different analysis, but for stocks, this is how it's going to go. Look at these green shaded areas. I'm going to go ahead and put lines at the 9:30 a.m. areas. Okay, so it's showing when market opens. Market opens at 9:30 a.m. Eastern time. Okay, hence it's why it's called the New York Stock Exchange. Okay, everything is based off of Eastern time. New York is in Eastern